HUOBI here after all, as well as SFOX. But traders actually can greatly benefit from regulatory uncertainty because they want the volatility that occurs when, you know, one day everyone thinks something's going to happen and then the next day everyone thinks something else is going to happen. So it's a double-edged sword, and it means different things to different people.
I can touch on something just really quickly as someone that's building, you know, in this space and, you know, is now a little bit over a year old. We have customers in over 180 different countries, and thinking about building a company and what the regulation looks like and where to be headquartered and how to navigate each different regulation is a very interesting and timely exercise to be doing. And I know that I'm not the only CEO that's, you know, forced to think about that in our space, because we have a truly global industry that we're building in. I would say, you know, especially in the United States here, it does become cumbersome to launch as quickly and to stay ahead of your competitors and some of the people in the industry that don't have necessarily some of the handcuffs that you have when trying to build. And so, you know, I do see that, you know, until there's a kind of even playing field, that many companies will probably end up moving to other countries and kind of working that way. And it'll probably just be an easier thing for a lot of CEOs to do that.
I can see, Karen, you wanted to add something. So if you want to talk about that and then dovetail into the trading discussion and how we look at volatility of the markets and liquidity, specifically and the metrics around liquidity.
We'll do it shortly. Yes, it is a high risk space, and I think that good companies must be legit and have a good solid need they solve. There need to be a way how to provide the business risk of each company that you want to invest. It can be by report or by as well as external topic line for a COVID or geographic or any other risk that specific for you. And assessment needs to be agile, combined, and to be compared. The comparison, I know that I add it again, but the ability to compare is very, very important when you have a high risk space.
Okay, great. So moving on to the question of trading. So I know we have a little bit of time here. For centralized exchanges, understanding accurate transaction volume has been important. And it's important, especially as exchanges have over-reported because they're incentivized to over-report actual volumes. We have found wide discrepancies between what's actually reported and what is on chain. Now, for DeFi, the value locked in the DeFi protocols has been used, but there's also been questions here of double counting. So what do you use and what do you find to be important metrics for liquidity?
So let me have a go at that as well. So I'm changing hats now. So Vice Chairman SFOX, the leading independent crypto prime dealer in the States. We combine the top 20 exchanges and over-the-counter forums, and all of that data is available to anyone in a live feed. You can put it into your API, and it's historical, it's live, it's scrubbed, and it's all in the same format. And we would say, don't wait for people to report their data, get the data in real time. I mean, if you're a serious pro trader, you need a pro trading platform, and you should be getting your data streamed to you in real time, and you should be making real time decisions. So we don't really care that much about what exchanges say they've done in days or even weeks later. We care about what's happening in this moment, in this second. And a lot of the trading algorithms are looking for very short-lived, opportunities, spreads and arbitrages that are gone like this. So it's real-time data. You need to get it from the largest exchanges in the world, and ideally your API is integrating it into your own algorithms, equations, offers and products and services if you are an intermediary. Decentralized finance is a whole different conversation. It's exciting, it's new, it's unstructured and disorganized and fragmented, and it's going to be a while before I would hazard to say how much of the information we're hearing is solid and real, and how much of it is bots and auto traders and other things. I think it's fantastic, but I think it's going to be at least a year or two before we really know how much of it is real and how much of it is not. But I think most of the investors listening to this right now are, you need to have a pro trading platform. You can't just be paying the spreads and the fees of going to a retail wallet, you know, without mentioning any of them, and losing a large portion of your value opportunity in fees and spreads. Johnson, I know HUOBI must have a strong point of view on that.
I don't. So first of all, I'm not really a professional trader, but I just want to add on that a little bit on that as well. So in terms of from the HUOBI DeFi Labs perspectives, again, as you said before, the DeFi data is quite complex, and it's in a quite early stage in terms of data structure. So I'd actually consider multiple metrics to gain a comprehensive understanding of the situation, rather than looking at a single absolute number to make a judgment. So for DeFi, I don't really have a one size fits all metrics for you, but I look into different metrics, including total value looked, though it being sort of a question for double counting, but combining with such as utilization ratio of the lending protocols, on-chain data, etc., to give you a bit of an overall picture on what's going on in terms of the DeFi ecosystem. Hope that helps, Karen.
Yes, and I think our time is up here, unfortunately, but I would encourage you all to please visit our websites, contact us afterwards. I know all the panelists here have great thoughts on how investing is changing in 2021 and what metrics you will want to consider.
Thank you.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
One donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Fancy donut?
Can I have jam, please?
Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just bite that?
You won't even notice, it's very small.
I wish a new one. You don't have to bite.
That's my commission.
But it's out of my donut.
I was expecting 100% of a donut. What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way.
Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise.
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. There.
eToro, join now.
So you've heard about these 2 cryptos that are going to explode?
Names. Oh, I'm posting your karaoke video.
You said you deleted it. Okay. There's 2. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro, sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
Central banking digital currencies has become quite the talk of the town this past year, with China, the Philippines, and even private US companies like MasterCard experimenting with its endless possibilities. Next up, we have a discussion led by Ulf Ransom of Six Digital Exchange discussing CBDCs, custody payments, and security with Leora Lamish of GK8, Diego Monica of Anchorage, Salvador Tirnulo of Cape MPG, and Pamela Clegg of CipherTrace.
All right, I think we are live, and we have a loaded panel today, so a lot of topics to get through, so I'm going to dive right in. Welcome, everyone. Thanks for joining us today. on our panel on custody, payments, and security of CBDCs and other cryptocurrency. My name is Ryan Todd. I'm a research analyst at The Block, a news, media, research, and information services company for digital asset industry. I'm joined today by five panelists today, so a pretty deep bench, but to save some time, I'm going to introduce them myself, and then we can dive right into the questions. Starting with Olaf Ransom. Olaf's been working in banking for over 30 years now. Sorry to date you, Olaf, but a wide range of experiences in banking, and is currently serving as CSD function head at Six Digital Exchange. We have Lior Lamesh, co-founder and CEO of GK8, a cybersecurity company. They offer custodian solutions and safekeeping, managing digital assets. We have Diogo Monica, co-founder and president of Anchorage, a leading cryptocurrency custodian security firm. We have Sal Ternolo, director and co-lead of KPMG's crypto asset services division. He's responsible for driving the firm's crypto and digital asset strategy, innovation efforts, and market delivery. And then last but not least, Pamela Clegg. She's director of financial investigations and education for CipherTrace. They work with governments, law enforcement officials, regulators, law firms, financial institutions globally, and they do blockchain forensics. So I think just diving right in my mind, I feel like it really, 2020 has been a lot of things. But when you're talking about digital assets, I think it's really been a banner year for financial service interest and movement into payments, custody, and security of digital assets. And we've seen this expressed in not only the headlines, but in tangible developments. But in terms of headlines, you know, we've seen some of the world's largest payment companies accelerate a strategic desire to expand crypto capabilities, whether that's publicly marketing the intention to explore these offerings, or even just actually rolling out new product offerings and services and servicing the digital asset industry. And I think while it's often a theme that we hear during events such as this and panels of the institutions are coming, and the narrative that we've heard now for multiple years, I think just the caliber of names and interest that we've seen building within broader financial services and directed towards this industry, in my mind, has exceeded what I thought we would see this year, especially given everything else that's going on around the world. But I think just this kind of headlined, whether it's PayPal exploring crypto buy-sell capabilities to its 300 million users, all the way to Square continuing to see continuous pickup in Bitcoin sales through its Cash App. Sold over $2 billion worth of Bitcoin in the past 4 quarters alone. To even news of MasterCard recently testing a platform that will allow central banks to evaluate digital currency systems, among other developments. And I think just stepping onto the CBDC front, it's surely a topic that has seen its fair share of headlines and developments, and just an absolute explosion of public research coming out this year, not only from smaller economies and developing economies, but even G7 countries ramping up public efforts to test and research their own CBDC implementations. You know, just going off that, last week we saw the EU finally release their report on what a digital euro could look like, and the need for them to feel like they need to be, as a bloc, prepared for the eventuality that they might need a digital euro. And then, of course, the 800-pound gorilla within central bank digital currencies, China's digital currency electronic payment system. I saw a report earlier this morning that I guess the PBOC deputy governor said that the trial for that system has already processed over $150 million worth of volume. So that's a live pilot of a CBDC. And so when we think about this year and just the headlines that have happened around some of these events, another thing that often gets kind of pushed to the side, but is equally critical, and what I want to really start this conversation with, is we've seen legitimate progress around regulatory clarity for companies looking to service digital assets specifically around custody, whether that's the US OCC interpretive letter, which provided clarity for national chartered banks to custody crypto, service the crypto industry, and even more recently provided a separate letter that said that banks can hold reserve assets behind stablecoins, all the way to across the pond. The EU just released a pretty comprehensive 180-page legal framework around crypto assets and stablecoins. A lot of stuff going on. The TLDR is there's a lot of stuff going on. But I think a good place to start this conversation would be in each of your own views, starting with Olaf. What's been the biggest challenge you would say for a traditional bank to start offering custody of digital assets? And given even the most recent developments, what challenges still remain in your view?
Right. Thanks very much, Ryan. Good afternoon, everybody, or good evening, depending on where you are. I think for the banks, what's been hard is looking at this crypto world. The initial reaction that I've seen, and Switzerland's got plenty of banks, right? So a lot of what you're seeing is, oh, this crypto stuff, we don't want anything to do with that. And they put it to one side and they said, we're going to do proper digital assets, almost a tokenized version of stuff they've done before. And meanwhile, crypto, particularly cryptocurrencies, has gained more and more momentum. There's more and more demand for it. The clients have perhaps tried to do this a bit for themselves, and I have too. And it's actually quite difficult, all the services you need. So at least around here, some of the clients seem to have turned around to their banks and said, hey, banks, we want you to offer us this stuff, much like you offer us shares and bonds and mutual funds and all the rest of it. And the banks have said, okay, we'll look into that. And the banks have started looking into it. Again, well, we thought it was scary and we shouldn't do it. Now we'd like to do it, but it's actually quite complicated and there's lots of things we need. And so the banks are under pressure from their clients to try and find solutions to this. And you actually need quite a number of different pieces, different services to make this thing work, from custody to how do you get the client's assets to an exchange or from an exchange when they're done? How do you get the cash there? And it's not quite the same as the securities world that the old guys like me are used to, with settlement, delivery versus payment, and central securities depositories. So I think what's impressing me at the moment is the amount of, if you like, the head of steam from the clients and their banks to say, hey, let's get some serious infrastructure solution in place that's, proper in the worlds of old bankers like me, with the right controls in place. So we're seeing that dynamic, that there's an expectation we can get good quality infrastructure.
Hi, Johnny. So good afternoon, everyone. So I couldn't agree more with Olaf. I think that there are three major obstacles for banks to get into this space. The first one is the regulation. Ryan, as you said yourself, it looks like it's very much progressing with the past years. It started with the BaFin regulation last year, continuing this year with the last notice of the OCC on last July, even in Russia and in Europe at the moment. But clearly, in my opinion, the biggest obstacle is the lack of technology knowledge and specifically the security. We all know that in the past 2 years, billions of dollars were stolen among financial institutions that offered cryptocurrency services, mostly crypto exchanges. In 2018, it was $1 billion. In 2019, it grew in more than 400% to $4.6 billion. So it looks like banks need a true partner, a true solution provider that can providing them with end-to-end solution. So they will be able, even though the lack of knowledge, to offer different financial services they used to do with fiat money, but this time with blockchain-based assets. That's what we offer in GK8, a full end-to-end solution. So we are partners of the banks. We're providing them with all of the components they need. So it's something that makes their life easier to dive into this space.
Yeah, I'll jump in and say technology is the most obvious one, of course. I think two others that are equally interesting are the fact that the banks are looking at what products to provide, and they realize the space is actually really competitive already, and they can't simply get, a technology provider and create a hodgepodge solution. There's really good systems in place. There's already integrated custodians. There are people that provide prime brokerage-like services, and custody really isn't it really isn't the service that is going to get clients to your platform. It was 3 years ago when there was no institutional custody solutions, but now we have actually really good custody solutions in market, and a lot of them are providing a lot of extra services that are not just custody. Then the third point, technology, product, and then the final point would be risk tolerance. A bank is not going to jump into crypto assets and going to do every single top 100 crypto asset and go and support Uni and SushiSwap and all of these other assets. It's very clear that they'll jump into Bitcoin first, which is already the most served asset in place. And so what ends up happening is that it's non-competitive. The product that they would offer custody for Bitcoin is no longer competitive, and they won't actually have the risk tolerance to actually go further downstream to actually assets that are more competitive or whose custody actually is needed.
Yeah, so maybe stringing together a couple of points that Olaf made and Lior made alongside Diogo's, and kind of the way that I look at these obstacles or hurdles to adoption are kind of similar in context, but I think that the first piece that we really think about from KPMG's angle in helping our clients navigate these challenges is starting with the overall risk profile of the business end to end and engaging with the assets, and how that fundamentally changes or impacts existing service lines as it relates to, frankly, the design of the business from the ground up, how you want to build shared services or not, and keep certain components at arm's length versus others embedded within, the mothership of existing operations. And then obviously on the security side, which is something Lior hit on, has been a critical challenge in the space for a long period of time. And I think obviously the maturity of institutional custodians and kind of the competition for that base layer custody has pushed people to move security to the forefront of decisioning, which obviously is very much so aligned with the GKA viewpoint. And then I think the third piece, which lends itself perfectly to Pamela's discussion, is really around regulatory compliance as it relates to operating the business. And how do you do that in context of global regulatory frameworks, which have some guidelines for how to operate with each other, but have not codified those things and defined, consistent regulatory constructs. So there's a lot of progress being made as it relates to standards to facilitate travel rule compliance on chain with BIP 75 and other things that affect, but there's a lot that goes into both the security and the compliance of running businesses in the space.
Yeah, building upon everybody's points were pretty spot on there. Going last here, there's a saying that we have at CipherTrace, which is either as a bank, you're either doing crypto or you're having crypto done to you. So I think the important point to mention up front is that banks are already touching crypto, whether or not they want to or not. And they are touching it, maybe not directly, but they're touching it indirectly with their customers that are buying and selling crypto via any type of VASP that is coming in some type of payment rail to or from the bank, right? So I think that's an important point to point out, is that banks maybe don't know that they have crypto on their payment rails, but it's there, right? 10 out of 10 of the top US retail banks have crypto in their payment rails. And then the other point here is that, VASP really require that direct connection to payment rails. That is really, when we talk about the price of Bitcoin, right? What are we talking about? We're talking about the price of Bitcoin in a US dollar or in euro, right? So we're connecting that to fiat payment rails in some way. And so it's really imperative to have that connectivity to your bank. Most of us, I would say, that invest in crypto probably do so via, wire transfer or ACH directly from our bank accounts. So I think that's important to note, and that it's important for banks to learn, and they're starting to learn, and we're seeing this, and I think that's why this has been such a banner year. It's important for banks to learn that not all crypto is bad crypto, right? There's good crypto out there, and there are ways to determine the good crypto and the bad crypto, and that's what a lot of us, KPMG, 3C Advisor, CipherTrace, we work with banks to help them identify the crypto that's good and bad, right? So that is kind of where we're stepping in from the outside, because to be honest, it takes time to build these capabilities in-house. And so it really is imperative that they look outside, that they look for a third-party vendor to really assist them in identifying the crypto and then risk rating that crypto and then making sure that that crypto fits within their risk appetite. What is the bank's risk appetite and are they open to that? And then the regulatory piece, right? How is regulation? We all saw the FinCEN leak, 2 weeks ago now, 10 days ago. I'm not exactly sure what day I'm on, thanks to COVID-19. I think we're all out of date, but we all saw that FinCEN already has trouble keeping up, right? FinCEN, the US FIU, for those that are overseas, they already have trouble keeping up with suspicious activity as it is, right? And so now we're going to add this additional piece to it. We want to, the digital dollar project, right? We want to modernize the payment infrastructure, which is amazing. It's great. And it is necessary. But how do we also modernize the regulatory aspect of that at the same time so that they can keep up with the new payment infrastructure that's going to be in place, right?
So you talked about modernizing this payment infrastructure, and you mentioned the digital dollar project, which is trying to push the conversation forward in the US for a central bank digital currency. We don't have much time, so I'm going to shift gears now to that. There's still lots of things I would have liked to talk about in terms of the OCC letter, but in terms of central bank digital currencies, I'm wondering if each of you can talk through what you see as risks and opportunities, and how the organizations that you each represent could play a role in this hypothetical emergent ecosystem. And try and be mindful of time.
All right, so we'll go from the top again. So CBDCs, you've got to divide into retail and wholesale. On the retail side, I think they can be useful if you have an underdeveloped and backwards country like America, where you guys are still using the check. I mean, there are no other words other than backwards for that, sorry. So that's the first. You can take a giant leap with that. What I think what it also does is, if you're distributing welfare, which a lot of countries have been doing lately, once you get into digital and smart contracts that go with it, you could literally say, hey, the state of New Jersey is paying some welfare benefits and you guys have to spend the money in the great state of New Jersey. And by the way, you can't spend the money at the liquor store, for example. So it's good for advancement and it's good for targeting spending. So that might be useful in retail. Terrific. On the wholesale side, if we're going to have tokenized assets and have peer-to-peer markets, you need tokenized cash to settle it. And there are people working on that. There's two flavors of that. One is the reserve-backed digital currency idea that says there are private organizations that hold reserves. And the thing you've got in the States, where the stablecoin operators have some money with a bank, that is not a reserve, not by any stretch of anybody's imagination. All that means is there's some money in an account equal to the amount of stablecoin. It doesn't mean that the bank that you've got it at is holding that money for real and it's ring fenced. So that's a kind of amateurish solution that's half-assed, but some people will buy it. There are better things out there. There might be a CBDC solution. The Swiss are working on one of those, or a reserve-backed digital currency. Finality International, I've done some work with, are working on that in 5 different currencies. That's important in wholesale. If we can get the payment piece right, it's an enabler for the tokenized assets, and it's a big enabler for the balance sheets of the bank.
Yeah, I believe that the CBDC and tokenization open huge opportunities this day. I think it will be sooner than we think. I would still take it again to the security issues around it. I still believe that the security is one of the biggest issues right now in order to make such things happen. Only last week, $281 million was stolen by one of the biggest Chinese exchanges called KuCoin. And I think that in order to actually make tokenization of real money and to make a large adoption among those countries, the needed infrastructure should be something that will make the money movement and the token movement in a way that is not exposed to such cybersecurity attack vectors. So along with this opportunity of the tokenization of those assets that can save a lot of money and a lot of efficiency for the way that the countries are operating, I think that the security issues is one of the most painful ones. The existing solutions, on the one hand, I believe are not secure enough hot wallets, even the most sophisticated ones, are not secure enough, as even the multi-sig and the multi-party computation ones require hackers to compromise not one party, but only 2 or 3, which means that, still the return over investment for them to invest few millions to still billions is still there. While on the other end, cold wallets are not really cold. We see that any solution at some point requires bidirectional connectivity and exposed to cybersecurity attack vector. And I believe that only through a solution to enable blockchain money movement without being exposed to cybersecurity attack vectors would be something that enables the CBDC actual take part.
Yeah, I would say one thing, which is what is clear this year is that there's been a huge growth in stable currency usage, right? There's over $20 billion of market cap. It had triple-digit growth of use from last year. So clearly there is a need in the market. Part of the need comes from the efficiency. Part of the need comes from, you know, how the current crypto market is structured. But there's clearly needs here. There's efficiency gains that are done by having digital assets that actually fit cleanly into this economy. So to that end, I do think that having a stable currency that is backed by a central bank definitely brings trust in a lot more adoption. I think there are issues, counterparty issues, smart contract issues right now that we have in place that would be eliminated if there was actually a central bank backing this and running this technology. I think there will be efficiency gains. And to another point is there's a lot of things now that can be done that couldn't really be done before. In Europe, we're talking about central banks having direct relationships directly with the citizens of each country. That becomes a lot easier if you have a central bank backed digital currency to effectively be able to distribute cash directly towards the citizens of the European Union, or maybe in the US directly the stimulus checks towards the wallets of 300 million people. So there's a lot of benefits that come from this, and definitely the technology is there. We can do it, and it will definitely have huge effects on how the current payment rails work, and a couple of different use cases that today are just harder to do that might actually be enabled by having us do this.
Yeah, I think if you pick up the OCC piece that in the context of this too, I think the movement that we're starting to see in the pace of regulatory clarity that's being driven to market is sending strong lead indicators to the private sector that there is progress being made in CBDC research beyond just what's publicized in the context of MIT and the US system. But I think that play of determining on Olaf's basis of retail versus wholesale and what is the trend of adoption within that monetary system will determine the kind of design in which the central bank will pursue the progression of that design, and then identify what the opportunities and potential threats are as it relates to commercial actors in that space. And I think, again, if you put this all in context, the move forward towards CBDC is going to be laid with, you know, progressive regulatory agendas that maybe haven't existed at this frequency in the past. And I think that's what we're starting to see, at least in the US and more broadly as well in Switzerland and Germany too.
I would agree with everyone. And I think looking at it from, you know, the security aspect, you know, Lior looked at it more from the actual custody, the central bank side, right? The controller side. If we put that into the hands of the users, you know, what type of security are we expecting them to employ? What type of security are we expecting them to have on, you know, wherever they're holding their CBDC wallet, right? We look at the United States alone, we still have, per the FDIC, we still have 8 million unbanked and we have 24 million underbanked, which would generally lead to the conclusion that these individuals don't actually have enough cash to open the bank accounts that they need to open. So now we're expecting them to purchase a $500 smartphone to go along with that so that they can receive their CBDC for, you know, whatever type of activity that they're engaged in. And then I also think it's going to come down to adoption as well, right? So is this going to be possible if Apple or Google don't put this in their app store, right? I don't think it would be possible without Apple or Google. But once that is adopted, now how many users have we reached out to, right? So on the user side, and then also just understanding, I mean, let's be honest, utilizing crypto, whether it's, you know, CBDC, and by the way, I do think that if there is a CBDC, it should be some type of DLT. I know that there are some experiments with creating CBDC that is not utilizing DLT for the underlying technology. But, you know, CipherTrace alone, we get 100+ requests for investigations a week from individuals that have, you know, suffered malware, SIM swaps, you know, any type of hack, some type of scam. So, you know, that's that's a lot of technology for an individual to understand, especially in a country, as Olaf pointed out, that still uses the check.
Nice. Thanks everyone for being so quick. I guess rapid round, 30 seconds. If you could just highlight an event or development that's happened this year that fits within this conversation, and why you think it will have implications for the digital asset industry. Start with you, Olaf. One event that we haven't talked about yet.
A highlight event that we haven't talked about. Crikey. I'll pass and let the next person do it, and if I come back to me, maybe. Leo?
I can jump in. I would recommend the travel rule. I think we have definitely seen movement on the travel rule and addressing it. Somebody mentioned, BIP 75. We've got, CipherTrace is a building partner of and pushing, Trissa. We have tons of other solutions that are out there. And I think it's really bringing together the crypto industry globally to address something that, is really kind of, it's here to stay, right? And it's something that, FATF has definitely said is going to happen. And it's something that we're just going to have to, overcome. Even though the technology isn't there right now, that's not an excuse. So, the industry working together to address that issue.
I would say that the rise of yield generation as a successful go-to-market for a lot of these new crypto assets is definitely the highlight for me. We are creating really good go-to-markets for people that are outside of the space to actually come into this. So yield generation might actually be, the killer feature or the killer app of digital currencies. And so that's actually something that has the potential of bringing a lot of people that are not into crypto, or they're not in crypto right now, into crypto. So I think that's really exciting.
Yeah, and the last thing I would point out is the comments made last week from Jay Clayton and the recognition that on a future basis, all equities or stocks could be tokenized. And I think this sentiment and tone that you heard expressed in that conversation between Jay and Brian Brooks is not something that we would have heard even 2 years ago. And I think that there's more pragmatic reality in everyone's approach towards tokenized securities today, better, more mature product capabilities to support that. And I think the tone at the top is shifting. So that's a major indicator as well.
I would say the OCC letter that we already discussed before. Are we out already?
I think so.
So you've heard about these two cryptos that are going to explode?
Names. Or I'm posting your karaoke video.
You said you deleted it. Okay. There's two. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro, sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
.25% interest on your crypto. Please help me welcome the bird that's breaking the bank and its founder, Greg Keogh of DeFi Money Market, discussing how you can counter 0% interest banking with Cointelegraph's China CEO and co-founder Vadim Karatin.
Hi everyone, my name is Vadim. I'm a co-founder and the CEO of Cointelegraph China. Cointelegraph China is a regional version of the largest blockchain media in the space. Chinese version covering mainland China, Taiwan, Hong Kong, Singapore, and focus on the Chinese-speaking audience. Averagely, every month, we do have more than 6 million impressions on our content. My pleasure to be here and host this fireside chat today. Our topic is how to counter 0% interest banking. My greetings to Gregory Keogh, seasoned global executive and entrepreneur with 25 years global experience and impressive track record of digital innovations in both large enterprises like MasterCard, Telefonica, and others, as well as the startups. Hi, Gregory. Could you be so kind to introduce yourself?
Yeah, hi, Vadim. Great to be here. Thanks for inviting me. And yeah, I'm with the DMM Foundation. And basically what we're doing is pretty simple. In a world where it's very, very difficult now to get any kind of interest on either your fiat or cryptocurrency, we provide 6.25% stable, uncorrelated yield to holders of USDT, USDC, DAI, and Ether. And it's all backed by real-world assets that are viewable on chain. So we're using real-world assets connected with cryptocurrency to generate stable yield into the ecosystem.
Great. You are very passionate about reducing financial inclusions gaps. Talk to us about why the absence of earned interest in today's economy is such a massive hurdle to closing those gaps.
Yeah, so I think if you look at today's reality, right? So everybody probably listening to this conference is here probably because they believe there's debasement of fiat currency, right? And so, you know, if you look at it, it's pretty clear. There's been over 700 global fiat currencies. None has held their value, and that's created a very big problem just, you know, for the normal citizen. And now you have the compounded problem is like in the last 10 years or 15 years, now there's no interest available to consumers. So if you look at it, there's about $17 trillion in negative yielding debt globally, which is about 20% of all money available. So when you look at, like, as you mentioned, I worked at MasterCard, very interested in financial inclusion, and there's about $45 billion last year spent on financial inclusion, but I actually don't think it's effective because it's focused on the wrong problem. And so the real problem is that I think people who are working very, very hard, they are able to get some money, but that money is constantly being debased. And now over the last 10 years, you have the added problem in that even if they're able to save that money, they still can't earn any interest off it. So it makes it very, very difficult kind of to succeed and grow and be successful. And maybe the easiest stat to look at it is if you look back 100 years, Henry Ford had people working in his assembly line and he paid them the equivalent of about 65 ounces of gold. So that's about $130,000 today. But here in the United States, over half the people in the United States make less than $33,000 a year. So you can see back 100 years ago in this country, in the United States, people who weren't unionized, there was no, they weren't college educated, they were working on the line, were making many, many more times what people are making now. So this is a big, big fundamental problem, which I think that crypto and blockchain has the ability to solve. And it's kind of a key component, I think, of making a truly fair and inclusive financial system.
Yeah, great. Sounds interesting. Then I'm going to ask you something relevant. How are DeFi systems addressing these needs for improving access to financial services? And what is DeFi money market, DMM, doing specifically to bring earned interest back to global monetary system?
Yeah, so if you look at currently, I think the problem is, as we stated, a lot of the traditional financial players or very wealthy players have access to mitigate the two risks we talked about, fiat debasement and earned interest. But the problem is the global community generally doesn't. And so by using DeFi, one of the great powers of it is anybody with an internet connection can connect into different protocols and earn interest, move out of a fiat-based system if that's what they want. And so it opens up to anybody the ability to have really kind of a fair and equitable financial system. And so what DeFi money market protocol and the foundation is focused on is the ability that anybody who has cryptocurrency wants to gain interest. And again, we pay 6.25%, and it's very stable and it's uncorrelated to the general crypto markets because it's backed by these real world assets that are generating income. And so all these items too are viewable on chain. So we use Chainlink Oracle, so you can actually see the underlying assets generating these income. And so it makes for an ecosystem where that if you believe fiat debasement is around, you probably believe in inflation. So having hard assets that are producing yield is very appetizing. And by using these hard assets, you're further mitigating risk on the inflation side because you're holding on to the hard assets is what's backing up basically DMM. So it's the ability for somebody to, from anywhere in the world to connect into the DeFi money market protocol and just convert into our system to earn this yield at 6.25%.
Yeah, sounds perfect. So for everyone understanding, how does DMM guarantee this 6.25% API? What are the inner machinations that enable DMM to make good on that promise?
Yeah, so in in order to basically to be a DeFi money market account or DMM, it has three characteristics. So the first, it has to be backed by a real world asset. And then the second is that real world asset has to be both over collateralized in value and income production. So while it's paying out 6.25%, a lot of these assets are yielding 8 or 9%. And so the very simple way to do it is if you go to DeFiMoneyMarket.com and you have USDC, USDT, DAI, or ETH, you basically can trade those tokens into what we call our M tokens, which is the DMM monocle. And you will start immediately gaining the interest. It's calculated per hash rate, and you can come in and out of it at any time. And so it's a very, very simple way that somebody who wants to have some portion of their holdings in crypto saying, hey, I'd like to diversify further, or I'd like to diversify out of having something backed by real world assets, it's very simple to do. And again, it's an open protocol that anybody can interface with to develop other products, of which a lot of that's going on right now.
Yeah, sounds promising. Then we go to the next question. What's the process for DMM acquiring the real world income generating asset?
Yeah, so to introduce assets into the system, we have two types of kind of memberships. One's called a Prince, the other is affiliate memberships. And these memberships allow you to introduce assets into the ecosystem. But to do so, you have to actually stake portions of DMG, which is kind of the governance token of this. So you must have something at risk. And then these memberships are actually, and we're in the process of rolling this out, are represented by NFTs. And then these NFTs can be eventually traded, and they're based on a country by country basis. So we just announced maybe, I don't know, a couple of weeks ago that one of the first affiliate members applied in Peru to introduce assets that backed by machinery, real estate, and vehicles. And they actually ran the largest fund in Peru. So they're going to be one of the first affiliate test cases that will roll out. But the idea is anybody who holds DMG can start to reserve country blocks, either on an affiliate or principal membership, so that they could become asset producers. And my guess is much like that these rights, much like franchise rights, quite frankly, will probably accrue in value quite a bit once the ecosystem starts to grow more and more.
Okay, circling back to the core goal of the financial inclusions, how important are DAOs for transforming our financial system for the better?
So if you look at, I think, the traditional financial system, the problem is the people in control really don't have a direct, they are impacted, but they're not as directly impacted. So they're generally, nominated for certain couple, 4, 5, 8-year terms, whatever it is, and then they leave. And so the problem I see with that governance model is there's really nobody who's totally in charge of it over the whole life cycle. And so if you look at a DAO and the way the DMM DAO is structured, we have everything is governed that way. So all people have voting rights, and by having kind of ownership in the governance of the protocol, they actually have the best interest in the development of the protocol in mind when they're voting on things, etc. If you look at the traditional system, really, there generally tend to be politicians who are serving for a shorter period of time, and perhaps their time horizon is just, I want it to be okay while I'm running the Fed or whatever body it is. So I think that maybe that's not quite as aligned, and I think the DAO allows us to do something very interesting, which is by everybody being, having ownership in the governance of a protocol, you are going to vote to probably, do what you think is in the best interest of the overall protocol and ecosystem, which is very, very different than the traditional system. I think it's a great benefit to DAOs, as well as the fact you can tap into a knowledge base of, very intelligent people across the globe who can share their ideas, thoughts, and ways to build things. And then we vote on it, and that's what we do. So I think it's, as you know, I think DAOs are new from a governance structure, but they have many, many superiorities, I believe, over the current traditional system.
Right. So, yeah, great. And Greg, so because today we're very limited in time, so I'm going to ask you the last question for the day. What's the next for DMM, and what do you predict in the next for the DeFi space in general? What will the DeFi ecosystem look like in 1 year from now? What do you think?
Yeah, so I think, I'm kind of I've been around for a little while. So I was in some projects in the very early days of the internet, and this is very reminiscent to me of that. And so I think DeFi is in its very earliest stages, but you can see we're starting to get billions and billions of dollars into the ecosystem. I think that's truly drops in the bucket. And again, I keep identifying, there's 20% of all money. There's about $90 trillion in readily available money. About 20% of that's negative yielding. So there's a great impetus for people to start to adopt DeFi systems. I think you'll see that the governance protocols, like in DMM, we have our ecosystem and we're voting on every single aspect of it. We had our first token burn, so it's really the ecosystem in many DeFi projects like DMM and others is actually deflationary, not inflationary, because we have token burns, etc. So I think that we're at the very beginning of a large fundamental change. And I think the added point to that too is when you look at it, the consumer of financial services that's coming in the future, many of them are millennials. And certainly in the United States, the vast majority of wealth that's coming in the next 10 years is going to be from millennials. And they actually are interested in the traditional financial products, right? They don't want to own a share of stock of Ford, right? They'd rather have digital securities. They're basically digital natives. And I think the traditional financial institutions are dramatically underestimating the change that DeFi and a lot of these protocols are going to have on the financial system, because simply it's just a better way to do things. And I think it's more in tune with the consumer's needs and demands of the future that are coming into the ecosystem. And you can see it from the people who are interested in investing in Bitcoin. If you look for older folks, many, not as many. But if you look at the younger demographic, many people prefer cryptocurrency over more traditional, investment vehicles. So I think we're at the very beginning of a huge, multi-trillion-dollar change in the way things work. And it's exciting to see all the different DeFi protocols that are kind of looking to kind of reinvent our financial system in a way that's really better for consumers. So that's very exciting.
Sounds great. Thank you so much for chatting today. And that's all from my side. Thanks LA Blockchain Summit for having us today. Yep.
Okay, awesome. Thanks so much, Vadim. Thanks, guys.
Yeah.
Great speaking.
Thank you.
So you've heard about these two cryptos that are going to explode?
Names. Oh, I'm posting your karaoke video.
You said you deleted it. Okay. There's two. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro, sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
One donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Fancy donut? Can I have jam, please?
Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just buy that?
You won't even notice, it's very small.
I wish a new one. You don't have to buy.
That's my commission.
But it's out of my donut. I was expecting 100% of a donut. What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way.
Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise...
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. There.
eToro, join now.
What are cryptocurrencies? Cryptocurrencies are digital tokens of value that can be transferred to anyone around the world without relying on a third party like a bank or credit card company. eToro. What is blockchain? Blockchain is the technology that powers cryptocurrencies. To put it simply, a blockchain is a distributed ledger that facilitates and tracks all transactions for a given cryptocurrency. eToro. What are cryptocurrencies? Cryptocurrencies are digital tokens of value that can be transferred to anyone around the world without relying on a third party like a bank or credit card company. eToro.
So you've heard about these two cryptos that are going to explode?
Names. Oh, I'm posting your karaoke video.
You said you deleted it. Okay. There's two. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro, sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
We all know her as Crypto Mom, a resilient figure in finance paving a crypto-friendly voice for us all. Being sworn in for her second term as the SEC Commissioner, we're all wondering, Commissioner Pierce, what is in store for crypto? Unfolding her journey and future is Laura Shin, host of the Unchained podcast, live, only on LA Blockchain Summit.
Hi, everyone. Welcome to this fireside chat with SEC Commissioner Hester Peirce, aka Crypto Mom. And thank you, Commissioner Peirce, for giving us some of your time this week. And congratulations on having your second term as SEC Commissioner confirmed in August.
Thanks, Laura. And it's such a pleasure to be able to be here with you today. I have to start with my standard disclaimer, which is that my views represent my own views and not necessarily those of the SEC or my fellow commissioners.
You began making your mark in your second term almost immediately with the unicorn settlement in September. At that time, the SEC settled an action against token issuer Unicorn, and you published a dissent. Can you explain why you disagreed with this settlement?
I felt that it was a rather heavy-handed settlement for a case where there were allegations that there was a registration violation. There were no allegations of fraud. And so given that, it seemed rather extreme to take the action that we did, which basically was depriving the firm of all its liquid assets. And so that would not be my preferred approach to dealing with a registration violation. And I think that the message that we send with a case like that is one that is basically, if you want to do innovation, go somewhere else to do it, because we really don't want you to try things here.
As you noted, Unicorn did not commit fraud, but as part of the settlement, it had to permanently disable its tokens and also pay a $6.1 million fine, and you deemed that too harsh because it put them out of business. What do you believe would have been the proper penalty?
Well, I think we should look when there's a registration violation. And again, I mean, I'm just saying for sake of argument, let's say there's a registration violation there. I had my own views on that issue as well. But if there's a registration violation, it's typical to allow people the right to, basically get their money back, and that's fine. But to essentially take the further step and say we're gonna just take all your assets away, we're gonna penalize you by taking all your assets away, it just seems like a very strange remedy to me for something where we're just saying there was a problem. Maybe people would want Unicorn tokens to keep running. Maybe the people who purchase them would still want them to keep running, and we're basically telling them, no, sorry, that's not going to happen because we have this other vision in mind, which is to get rid of the tokens.
And then you also just said that you had your own thoughts also on the registration issue. What were those thoughts?
Well, I think these are really complicated questions, and that's part of the reason that I think we need a safe harbor. I think it is not always easy to tell whether something is a security or not, but in this instance, I think there was a case to be made that this was not being sold as a security or as part of an investment contract, which is how these tokens tend to get pulled in to the securities analysis. And I just came to a different point on that. But again, I will acknowledge that it's a gray area and it can be difficult to figure out where things fall.
In February, you also proposed a safe harbor for token issuers, which would give teams a 3-year grace period in which to decentralize their networks. And as a part of that, you would require the disclosure of certain information, such as details about the project or that the code be open source, the development plan, among other things. What is the current status on this token safe harbor proposal?
Well, I haven't yet convinced my colleagues to do something like that. I'm still hopeful that I will be able to. What I'm trying to do now is work on version 2.0 and think about ways that we can incorporate some of the feedback that I've gotten. and one piece of feedback is people want stronger protections for token purchasers. So are there ways that we can look at some of what's happening now and the way perhaps people are doing launches of different tokens that might help me think about what we could build into the safe harbor to offer more protection to token purchasers.
And what would be an example of a protection that you might include?
Well, so you could do something on the disclosure side, and this would be sort of similar to what the EU is talking about in its proposal, which is you could say you can't market this, and I'm not an expert in EU regulation, but you can't market this with the idea that the token is going to rise in value. So that would be one option. Another option would be to try to take advantage of the technology and build in things that would actually prevent the development team from selling their tokens for a particular period of time. So maybe you could do something along those lines. So those are some of the things I'm thinking about, but still, there's been a lot going on at the SEC and in the world in general. So there have been a lot of other issues that have been taking my time. And meanwhile, the crypto industry is kind of moving on too. So I do hope that we can move forward with the safe harbor. I still think there's room for it to do some good, but there are also a lot of other developments happening.
And when you said earlier you have not yet convinced the fellow commissioners or the chairman, have you discussed it with them? And if so, what were their views on it?
Well, one thing that I never want to do is purport to represent my fellow commissioners' views. I'll just say that I think I still need to do version 2.0 in order to win folks over, and so that's what I'm hoping to do.
And then what would be the process after that? Like, what does it take to get this kind of thing adopted?
So what it would take, I think it would probably be done through some kind of a rulemaking, and that would mean that we would go out with a proposal, which would then get comment, and then we'd go out with a final version based on the comments that we had received.
So going back to Unicorn, if your safe harbor proposal had been in effect, would you have found that the Unicorn offering complied with the safe harbor?
Well, so I think that what you need to do, the Unicorn would have needed to say, hey, we're taking advantage of the safe harbor. But assuming they had done that, I think it is the kind of thing that could fit very nicely within the safe harbor.
And that's because they had done some of the disclosures, and what about that particular token?
Well, I mean, again, they would need to make the disclosures required by the safe harbor, but I think that that's sort of along the lines of what they had in mind, right? They get some venture money at the beginning, and they do a lot of the work, and then they do the launch after that. So I think those are the types of instances in which I think the safe harbor can be particularly useful, when there's been some work done on the front end that's been financed by venture capital or other accredited investors. And then at some point, the company is ready to launch it out into the wider world and have users of the token. And it's at that point that you would say, hey, we're taking advantage of the safe harbor.
There's been a new trend in the DeFi space where a lot of these tokens are actually being launched kind of more in the community, and they're non-VC coins, as the VC coins are being called. And it strikes me that your safe harbor proposal maybe is tailored more toward the projects that do start with VC backing. So then does that mean that the community type tokens like these fair launch coins would kind of not be allowed to go that direction, or that simply they wouldn't fall under the purview of this safe harbor proposal?
Well, I think that they could. Certainly that wasn't what I had in mind when I developed the safe harbor. And I think it's interesting to see that that's where a lot of these token launches have moved. And I think that that's in many ways it's a really interesting and positive development to see, trying to get the tokens out into the hands of people who are going to use them right away, right? That's kind of the vision for a lot of these projects. And I think that's consistent with the idea of decentralization, right? Which then takes it outside of the framework, potentially takes it outside of the securities framework. So I don't know, be interested in getting people's feedback on whether I need to tweak the safe harbor, because I think, as a securities regulator, I probably ought to give the warning or the admonition that, no matter what kind of launch you do, you really need to think about whether, if you put on the glasses of a securities regulator, especially one looking in hindsight, is that going to look like a securities offering? And so people need to be careful no matter how they're doing it. And that's why I would certainly be open to tweaking the safe harbor to accommodate those kinds of fair launch events. Whatever kind of token distribution event you want to use, I think we need to be thinking about, should this really be regulated as a securities offering, or should it be regulated in some other way?
And just to make sure that I'm setting the baseline correctly, I had been assuming that currently the fair launch coins don't bump up against securities law, but I just wanted to check, is that true?
Well, again, I think people need to think carefully about whether that is the case, because even if you do something like an airdrop, that doesn't necessarily mean that you're out of the securities law framework, right? So even if you're not selling it, but you're basically giving the token out, it could still end up fitting within the securities classification. So people do need to be careful. And again, I think this is all the more reason why the SEC needs to be out there providing guidance, because people are trying to figure out ways to get the tokens out so that people can use the tokens. And we're not really stepping up and providing the guidance that I think people need to feel comfortable in trying these different methods.
So when you mentioned airdrops, famously the SEC has indicated that those could be considered securities offerings. And, as you mentioned, that's just where the tokens are given away for free to certain groups. However, in your safe harbor proposal, you actually seem to take issue with the fact that the SEC has indicated that those could be securities offerings. So what is your view on how the SEC should consider airdrops?
Well, I'm going to give the typical lawyer response that everything is facts and circumstances based. But, I think if you are giving something out, it looks very different than if you're selling something. But again, I caution people that I'm one person on the commission. There are other people on the commission who might look at the same facts and circumstances differently than I do. And so I just caution people to be quite careful in this area. I think it's really interesting that people are coming up with different ways to distribute tokens, and I do think that should factor into our analysis when we're looking to see whether it's a securities offering or not.
And it sort of feels like we're almost dancing around one particular story in particular that a lot of people have been talking about, which is the launch of Uni, which is the coin for the decentralized exchange Uniswap. After the airdrop of that coin, a lot of crypto lawyers were saying that Uni was almost certainly a security. And I wondered if you agreed with that. And if so, and this kind of goes back to the kind of like VC-backed project versus one that is, a community launched one, whether you thought that its competitor Sushi, which kind of is more of a community coin or started that way, is also a security, or if it's not, simply because Sushi Swap, was not created by an entity located in a specific jurisdiction.
Well, I'm not going to speak about any particular instance. Again, these things all have to be looked at on their facts and circumstances. And so I can't say anything specific about it other than, again, to urge people to think carefully about the intersection with the securities laws, even when they're doing things that they might think are well outside of the securities laws. And please, come talk to us as you're thinking about how to do things. I know that I make this plea often, come talk to me, but come talk to our FinHub, our folks on the staff who work on these issues all the time. And they can help you think through some of the ramifications without giving you legal advice, but they can help you think about what kind of questions to ask. So that's what I would urge folks to do.
So after your safe harbor proposal was published, there were some public responses, including from a group of attorneys, one of whom is a former SEC staffer, Zachary Fallon, and the group of attorneys is Ketzel. They're a fintech compliance firm. And they said that actually they felt that maybe what could be done instead is to just tweak existing securities laws, such as Regulation A, in which token issuers can raise up to $50 million through the sale of what would initially be considered securities. And I wondered what you thought of that idea.
Look, I think that's an option too, and I'm certainly open to that option. I've always said that my safe harbor is not intended to be the end all and be all or the only solution. If there are other solutions that will work better, I'd rather spend my time working on those. But I do worry if we focus only on a Reg A type solution, we might end up with tokens that are sort of stuck in a securities law framework after a point in which it doesn't really make sense for them to be in that framework. And again, that's a project by project determination, and it seems to be working for some projects, which is fantastic. But I just worry that that's not the right model for every token offering. And so certainly willing to be shown that I'm wrong on that, but I think it's not, because there's so many requirements around what it means to be a security and how you can move those tokens around if they are deemed to be securities. That's where I continue to worry that a Reg A solution might not be the only solution we need.
And so to go back to DeFi, I wanted to ask a broader question than the question I asked about Uni, which is that in general, a lot of these DeFi projects are using what they call a governance token to decide on the direction of the project. And I wondered if you thought DeFi governance tokens were securities.
Well, again, facts and circumstances, but I think when you start to put security like sort of benefit, like equity like characteristics, then again, that's going to be something that you have to think about. I say that with a little hesitation, only because I think it's really interesting what's happening in the DeFi space. And I've heard you talk about this, Laura, and so I know you feel the same way, but there's some real potential for some pretty major and revolutionary change coming out of the DeFi space. This idea that you can have the users of something be the ones who also govern it in a really direct, there's no attenuation there, right? It's a very direct way. And so that will challenge the regulatory structure in a number of ways. And some of those are on the security side, but I think also on the corporate governance side, much of which is within state law purview. We're going to have to ask a lot of really difficult questions about what that means for how we regulate things.
And I did also hear in a recent interview, you said that DeFi itself plays a regulatory role. And I loved the way you phrased that. It was so interesting to me. And I just wanted to hear you expound on it. What do you mean when you say that?
Well, I think when you have the people who are actually using something, deciding its future, then the changes that happen are decided by the community together, and that's a sort of regulatory function. It's not a government regulatory function, but it's a regulatory function by the people who are actually using it. So someone can launch one of these projects and say, I have this great vision for what's going to happen with this project. But if you really launch it and you put it into the hands of your community, it could end up doing and being something very different than what you initially imagined it to be. It could ultimately be very different. So you have to have a little bit of willingness to be hands off and see what happens. And that's probably a little bit scary for some developers to do that. But I think it's kind of an interesting thing to watch, and it can have some really, I think, positive ramifications for regulating behavior.
So now talking about Congress, there was a recent bill called the Securities Clarity Act that was introduced, and that bill would create a new definition for tokens that are between a commodity and a security. And part of it would be to amend the Securities Act of 1993 and 1940 to say that the term security does not include an investment contract asset. I wondered what you thought of this bill.
Well, so I think it's really, first of all, it's good that Congress can, sometimes what we see when the SEC is a bit slow to act on things is that Congress comes in and says, okay, well, if you're not going to deal with this, we're going to tell you how to deal with it. And that can be a really important push for us actually to make some progress on our own. But I do appreciate the fact that there are people in Congress who really care about this space, and it's a bipartisan interest, which I think is fantastic. That there's real interest in trying to figure out the appropriate regulatory framework. And at some point, there probably will need to be congressional involvement simply because in the US, there's so many different regulators involved, both on the federal side and the state side. So I think it's kind of inevitable that at some point, Congress is going to weigh in one way or the other on this.
And just so I understand how something like that would be adopted, if it does get passed in Congress, then would the SEC be able to weigh in any way to amend it or revise it, or would it simply be handed down to you and you would enforce it?
So it depends. Often what Congress will do is they'll write a broad enough bill that gives the agency, the relevant agency, the ability to kind of fill in the details. At other times, Congress will be much more specific. And, you know, there along the way, people from Congress will come to the SEC sometimes and ask for technical advice on what will this mean if we write it this way. And so the experts at the SEC are able to provide technical advice on it. But it just really depends, you know, and it depends on the mood too. If sometimes if we saw, for example, with the Jobs Act, that I think there was a frustration in Congress. This was probably before you were following this space, Laura, but there was a real frustration in Congress about the SEC not taking capital formation at small companies for small issuers seriously enough. And so Congress came in with the Jobs Act, which told us what we had to do, basically.
For years now, the crypto community has been hankering for a Bitcoin ETF, and multiple attempts to create one have been rejected by the SEC. This morning, the UK Financial Conduct Authority banned the sale of cryptocurrency derivatives and exchange-traded notes for retail users. What did you think of that decision, and does this also influence the chances of a Bitcoin ETF being approved in the US?
Well, I mean, I don't even comment on what other regulators in the US are necessarily doing. So all I can, well, I sometimes say, I think there's been some positive work actually by other regulators in the US and in the crypto space. So I'm happy about that. But, you know, figuring out what products should be available to retail investors is probably a country specific thing. What I will say is that in the US, we have a tradition of believing that people should be free to make decisions for themselves and then responsible for the consequences. And I don't know why that wouldn't apply in an area like a Bitcoin exchange traded product where you see lots of interest from people in getting exposure to Bitcoin. This is one way that would be easy for people to get exposure. Again, the facts and circumstances matter. So how the product is designed matters. And that's something that the SEC looks at. And so each one of these will be judged on its own merits when people come in and apply. But as I've said in the past, I think we've taken an approach that is a merit regulation approach and is saying we don't think that investors can make wise decisions for themselves. So we're just going to cut this product off from them altogether, and it just doesn't make any sense to me.
In the news recently, there were also some really big enforcement actions against the crypto derivatives exchange BitMEX, including criminal charges against its owners. And although this is outside your domain, I wondered what effect you thought this action would have on the industry in general. particularly maybe around KYC, AML, or on future ETF applications?
Well, I think that the message has been coming to the industry fairly loud and clear on the AML KYC front, and I'm sure it will continue. It's a difficult area, frankly, for very traditional financial firms as well. And I think that lots of firms run into trouble there. But I think that it's definitely sending a message to the crypto world. And then in terms of, when there are U.S. users of a product or a service, there's going to be enforcement of U.S. laws, and so that I think is what we're probably seeing here. And so we'll see what happens. That, as you said, our agency was not involved in that, so I don't know the details other than what I've read in the paper, same as you.
Stablecoins have become a mainstay in the crypto ecosystem, with volumes up this year over last. Valerie Stepanek, the SEC's crypto czar, has said that certain types of stablecoins could raise issues under securities laws. Which types of stablecoins do you believe veer more in that direction?
Well, I think sometimes when you see a stablecoin that's built on a basket of underlying assets, it could implicate certain of our rules. And so, as with anything else, if you're developing some kind of stable coin, you ought to come talk to us. But I think there have been some positive developments. I mean, we saw what the OCC did a couple weeks ago, and we came out with guidance or a statement in response to that to say, hey, we want you to come talk to us to see whether there are any securities implications. I think some people took that statement as sort of a negative one, but what I would say is, I think it was really saying, we don't think every stable coin implicates securities laws, but you ought to come and check with us to make sure that it doesn't. So I think there is a path forward there.
Recently, Chairman Jay Clayton, said that all securities may one day be tokenized. Do you agree? And if so, what do you think needs to happen before that can become a reality?
I think that is likely. We've seen the transition from paper certificates, where most securities are not evidenced by paper certificates anymore. And so I think it's a natural progression to think that there will be tokenization, and blockchain is a really useful way to keep track of where securities are, who owns them. So I think that we could see that. There probably is work that we need to do on the transfer agent rulemaking side. And then I think there are technological changes that will have to happen. Because for something like that to happen, I think everyone in the industry sort of has to get on board. So it can take a longer time for something like that to happen. But sometimes, sometimes it takes an event like we had the paperwork crisis in the late 1960s, which caused a lot of broker dealers actually to shut down. And so sometimes it takes something like that. And I feel like with COVID, as bad as it is, one thing that it's made us recognize is that the more we can do to rely on technology, the better we're set up for when something really terrible happens, because you can, it's easier to do. You don't all have to be in the same place, right? And so I think blockchain really lends itself well to the era that we're in now.
All right. Well, we will see where this technology continues to develop. Thank you so much for joining us for this fireside chat.
Thanks, Laura.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
One donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Fancy donut?
Can I have jam, please? Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just buy that?
You won't even notice, it's very small.
I wish a new one. You don't have to buy.
That's my commission.
But it's out of my donut. I was expecting 100% of a donut. What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way.
Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise...
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. There.
eToro, join now.
So you've heard about these two cryptos that are going to explode?
Names. Oh, I'm posting your karaoke video.
You said you deleted it. Okay. There's two. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro, sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
I got 2 words for you, bestie. eToro copy trader. Just find a top investor on eToro and hit copy. From now on, whenever they make a trade, you make the same trade automatically. Neato! eToro. What are cryptocurrencies? Cryptocurrencies are digital tokens of value that can be transferred to anyone around the world without relying on a third party like a bank or credit card company. eToro. What is blockchain? Blockchain is the technology that powers cryptocurrencies. To put it simply, a blockchain is a distributed ledger that facilitates and tracks all transactions for a given cryptocurrency. eToro.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
One donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Is it donut?
Can I have jam, please? Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just buy that?
You won't even notice, it's very small.
Oh, it's a new one. You don't have to buy.
That's my commission.
But it's out of my donut. I was expecting 100% of a donut. What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way.
Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise.
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. There.
eToro, join now.
I got 2 words for you, bestie. eToro copy trader. Just find a top investor on eToro and hit copy. From now on, whenever they make a trade, you make the same trade automatically. Neato! eToro. What are cryptocurrencies? Cryptocurrencies are digital tokens of value that can be transferred to anyone around the world without relying on a third party like a bank or credit card company. eToro. What is blockchain? Blockchain is the technology that powers cryptocurrencies. To put it simply, a blockchain is a distributed ledger that facilitates and tracks all transactions for a given cryptocurrency. eToro.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
One donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Is it donut?
Can I have jam, please? Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just buy that?
You won't even notice, it's very small.
Oh, it's a new one. You don't have to buy.
That's my commission.
But it's out of my donut. I was expecting 100% of a donut. What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way.
Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise.
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. There.
eToro, join now.
So you've heard about these two cryptos that are going to explode?
Names. Oh, I'm posting your karaoke video.
You said you deleted it. Okay. There's 2. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro, sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
1 donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Fancy donut?
Can I have jam, please?
Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just bite that?
You won't even notice, it's very small.
Oh, it's a new one. You don't have to bite.
That's my commission.
But it's out of my donut. I was expecting 100% of a donut. What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way.
Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise...
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. Right there.
eToro, join now.
So you've heard about these two cryptos that are going to explode?
Names. Or I'm posting your karaoke video.
You said you deleted it. Okay. There's two. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro, sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
One donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Fancy donut?
Can I have jam, please?
Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just bite that?
You won't even notice, it's very small.
Oh, it's a new one. You don't have to bite.
That's my commission.
But it's out of my donut. I was expecting 100% of a donut. What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way.
Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise...
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. Right there.
eToro, join now.
Boom. Hey, everyone. How's it going?
What's going on? Hello.
Hey, so thank you, everyone, for coming, first of all. Alon here from Draper Goren Home. I'm joined by Adam.
Adam, nice to meet you guys.
First off, well, we had a little break in time, so we decided to hop on the stage. I had to put my shirt back on, get all pro and on all that again. But first off, I wanted to say, Adam, what a killer freaking job you're doing, or you've done on the conference. This is we should all be stoked and congratulate Adam. This is his first full conference. He's been full time back with us. So,
woo! Thank you.
Killer job, Adam.
Thank you.
And next, I want to thank everybody who's watching, who's tweeting about it, hashtag LA Blockchain Summit and all that stuff. We're having this is great. Can't wait for the next segment with Coley from BINANCE and all that. In the meantime, Adam, what should we talk about?
Well, I think in the beginning we announced this new $25 million fund, our first close, right? So I think that's definitely worth talking more about, considering the nice traction we've had so far with the studio and now progressing into more seed and Series A type of deals. So kind of give everyone the rundown of that and what we should expect. And also for any projects that are watching, right, any startups that are looking for funding, whether it be on the pre-seed, on the seed or Series A, come talk to us. We want to hear from you. We want to learn about you. We want you to annoy us. So come message us afterwards. But Alon, go ahead.
Yeah, you see down below Draper Goren Home, just add .com. You go to our website, you can connect. If you are watching live, I did actually open up the stage in another tab, and most of these, the people aren't watching the chats, but if you do have a question and you could get it in the next like 2 minutes, I might be able to answer it. Yes, we did the first close. It was sort of a friends and family close of our new fund to invest in seed and Series Day interviews. My brain, man, this is a lot of fun. But seed and Series A rounds of our portfolio companies and other companies as well. And so it's been very, very, very exciting. Lots of love and thanks everyone for that. You know, as you know, Draper Goren Holm has always run as a venture studio, which just because a few people have asked me what the difference is in the last day, the difference is that we ran as an operating company. We advise companies, we help companies, and we invest in them, you know, real money. And this time we actually raised a dedicated fund that's all about investing, which means we can write much bigger checks to companies, which means we can kind of double down and triple down, as Tim put it earlier this morning, in companies that are doing really well. So we're very, very excited to have announced that this morning. Something else that's going on right now, just because I wanted an excuse to play this really quick, whereas choose virtual backgrounds.
Oh no, what are you doing?
The Bitcoin giveaway. The Bitcoin giveaway. It's raining Bitcoin. But for real, we this is, as far as I've found online, the biggest Bitcoin giveaway in the history of Bitcoin giveaways. So thanks everyone. And there's still a little time, so share it with your friends. Hashtag LA Blockchain Summit so we get more people. And we've I know that we have, I think it's something like given away well over $200,000 in Bitcoin. The goal is to hit 1 million. So with everyone here today spreading the word, hopefully we'll give away $1 million in Bitcoin and get 10,000 new Bitcoiners into the world.
I think that's so cool, specifically because everybody's like, we had a wave in 2017 of people being really skeptical and weird about Bitcoin and watching it hit 20K and then falling. And now we've kind of gone through a phase where projects have been building and people are seeing more of the potential behind this stuff. So having everyone here hodling Bitcoin, right? Having them at a conference, teaching them about it, educating them about it, showing them what they can do with it, how they can lend it, how they can trade it, how they can store it, all these different functions and all these different properties that they can do with their crypto. I think that's the whole goal here, right? So, and that's a lot of what we do also at Draper Goren Holm. So in addition to putting these community events together to try to teach you guys, to try to bring everyone together, we host a lot of outside events. Another thing we do is every Tuesday we host a really, really fun meetup called Blockchain and Booze. It's a very, very cheesy name, but it really serves its purpose because ever since all of us have hit COVID, we've had to quarantine. We've kind of missed out on these after work kind of happy hours and meetup sessions that we used to do with our coworkers. So this is one way to kind of bring everyone together over a drink, and the way it works, it's a lot of fun.
It's been a lot of fun. Hold on, we got a couple questions, so I'm gonna try to jump it because we have less than 2 minutes till a way more important panel than us.
Yes.
Some people are asking about the disbursements and things like that. In the chat, Joseph just posted the booth for the Bitcoin giveaway. It has all the information. It has some email addresses, but expect in the next 48 hours or so, if you got your Celsius account, to get your $100 in Bitcoin. We're trying to figure that out. Hopefully it's not longer than that, but we'll keep you up to date in that chat. And there's contact info with people standing on, standing by to help us. We had a question for the fund. Sashi asked details on size, valuations, locations. Locations, that's a really important one. It doesn't matter. Wherever you are in the world, we want to invest in your company. If you're an entrepreneur with a good idea, we want, actually, it doesn't matter where you are in the world, wherever you are in the universe, we're in. If a good entrepreneur is a good entrepreneur, no matter where they are, and we will do everything we can to invest in the companies we want to invest in, no matter where they are.
And then really quick, I think another point worth noting, because it was in the announcement that we made this morning, we're actually opening up an office in Austria, in Vienna, to kind of bridge our exposure and bridge our ability to help companies and whatnot. So for any European startups, anyone in Austria, Switzerland, Berlin, wherever it may be, hit us up, talk to us, reach out. We want to hear from you.
Absolutely. And then before we sign off right now, size doesn't really matter and valuation doesn't matter as much as the people and who we like and when and where we're investing, but still being pre-seed and being the first check into the company is our most important thing we'd like to do. We'd still like to go through that trajectory with the company. So the earlier the better. It's never too early to message us. We've got to go. We've got way cooler things coming onto the stage right now. I'll be back on the stage later with a cool investment panel. So see you guys. Thank you, thank you, thank you, thank you, thank you.
Thank you. See ya.
What are cryptocurrencies? Cryptocurrencies are digital tokens of value that can be transferred to anyone around the world without relying on a third party like a bank or credit card company. eToro.
Be sure to take advantage of the incredible networking opportunities presented in Umbrella. So many meetings have already been booked, so connect, mingle, and see how you can add value to one another. Speaking of adding value, crypto exchanges are one of the major backbones of mass adoption and Web3, and have evolved quite a bit since the genesis of Bitcoin. To take us through their evolving landscape, we have CoinDesk's Christine Kim leading a discussion with eToro's Guy Hirsch, Binance's Catherine Cooley, and Bitcoin YouTuber The Moon Carl.
Hi everyone, I'm Christine Kim, a research analyst at CoinDesk. Welcome to our panel on the evolving landscape of centralized and decentralized cryptocurrency exchanges. This is quite the buzzworthy topic given the recent indictment against BitMEX, as well as the rapidly growing popularity of decentralized finance, or DeFi. To chat with me about this hot topic are a number of key players in the crypto industry. I have with me Catherine Cooley, the CEO of Binance US. Just over a year ago, Binance, the world's largest cryptocurrency exchange by trade volume, launched its American branch, which now supports users across 38 different US states, the most recent addition being Florida. Hi, Catherine.
We can actually make that 40 now. So we also launched in Alabama and Georgia.
That's amazing. We also have Guy Hirsch, the managing director at eToro, which is a company that is also bringing cryptocurrency trading and investing to the US audience. eToro, which operates across more than 140 countries around the world, launched its US services last year, enabling the buying and selling of crypto assets across 32 US states. Is that number still up to date, Guy?
We're up to 45.
All the updates just from the start of the panel. Last but not least, we also have Carl Eric Martin, better known as the Moon Carl, who is a YouTube star that travels the world educating people about Bitcoin and crypto. Carl has 128,000 subscribers to his YouTube channel called To the Moon. Glad you're here, Carl.
Thanks for having me. Hello.
I want to start by talking about the comparative differences between centralized exchanges and DEXs, decentralized exchanges, which will help highlight their advantages and disadvantages as well. Carl, from your experience using various Bitcoin trading platforms and exchanges, showing other people how to trade Bitcoin, how would you characterize the main features of trading on a centralized exchange versus a decentralized one?
Yeah, so I think there are many exchanges that are very easy to use, that are centralized. I use Binance, for example. It's very easy to use. I use Bybit for leverage trading. It's very easy to use. And if I have any problems, then I can reach out to customer support. And very often, everything is very smooth and I can get the help I need. I've grown to like some of the exchanges in the space, and I use them. I recommend them to my followers and whatnot. I have also used some decentralized ones, and most recently, of course, Uniswap. It's been working quite well, but I also have had some huge problems with sending transactions, approving tokens, and having like 50 pending transactions that never go through, and then I just get a headache. I don't know how to like I'm not so technical in that sense, so I have had some problems with decentralized exchanges. I remember also back in 2017 that we had some was it Ether Delta? It was also okay to use, but I think they're a little bit slower, a little bit more. I mean, sometimes I feel like decentralization. I mean, it's of course amazing, the idea of decentralization, but I think there's a long way to go here, and for now, I still prefer to trade on centralized exchanges, and I think that will probably be the case for the next 2 years. But hopefully, we can see more developments, and we see well, the user experience has to be much better on these decentralized exchanges, and I think we are getting there. We've already seen a nice development in the past couple of years, 2 3 years here. But
Yeah.
I'm hoping for a little bit more user experience.
Speaking to the future development of decentralized exchanges, Guy, how worried are you about the competitive advantages that you think decentralized exchanges might one day attain with a better user interface, etc.? How confident are you that within, that 2 year, 5 year timeline, that centralized exchanges will still maintain the upper hand over DEXs?
So we actually at eToro, we built a decentralized exchange, or we tried to, in 2012. Basically we're trying to do like atomic swaps on top of the Bitcoin protocol with a project that was called Colored Coins, that Yoni, our CEO, worked on together with Vitalik before Vitalik left and started the Ethereum Foundation. So we were and still very big on DeFi. We think that this is the way of the future. There will be a lot of fascinating projects that will hopefully transform finance, but not just, and allow more people to get access to either markets or to the freedom to transact, and just enable a whole new paradigm of living, of building wealth. And we are, I feel that we are, as a centralized exchange, we need to play a role in this, first by contributing to these projects, helping them figuring out how to make that future come faster, but also serve as and this is a term that's been used in the industry quite a lot, to serve as sort of as a bridge between the old world and the new world. And sometimes you need these bridges for people to come in, convert their fiat into crypto, get some education, get some help, get the customer support that they might need, the way that Carl mentioned. There is a role for centralized exchanges and centralized services to play here for many years to come, because this won't be an overnight type of thing. This is going to take years.
I have an analogy for that. Can I just, because you talked about having the old and the new coexisting for a while, and like 100 years ago when the car was getting introduced to humanity, I heard that in some areas you weren't allowed to drive the car above a certain speed, and in some cases you needed to have a horse dragging the car behind itself. So basically you definitely had the old and the new coexisting for a while, because people are afraid of new technology, and it's not really proven and tested and whatever. But I mean, after a while, of course, the better technology took over, and we're using cars now, not the horses. And I think it's the same with banks and all these different like centralized structures. We will have decentralized exchanges, decentralized all kinds of services, and I think that they will grow in adoption. I think we will probably always have some centralized exchanges still, but yeah, I think the old and the new will definitely coexist for many years to come, because we're far from having decentralized exchanges that are easy to use for other than like really nerdy crypto people like us.
Really nerdy crypto people. That's the majority of us here, I hope, which may not be the best light to characterize us, but it's fine. I like that paradigm, the old and the new. Catherine, would you agree with both Carl and Guy about what they've said of DeFi really being the next evolution of exchanges, the better technology? What intrigues you, the most about this rising popularity and interest in decentralized exchanges that we've been seeing as of late?
Yeah, you absolutely see decentralized exchanges bringing out those exciting factors that digital assets provide. So the ability to have a transaction without a middleman, without a centralized force that lets you conduct this. There's still some key parts to which a centralized exchange is really vital for, especially in these early days. So you think about liquidity management, making sure that a centralized exchange is able to go out there and get as many people trading on their platform to ensure deep markets is something that's super important for people to be able to have adequate trading activity going through the platform, something that the early days of decentralized exchanges struggled with because you didn't really know who was going to show up that day to start trading. We've bridged that gap and now seeing huge amounts of volume go through on Uniswap in comparison to some of the other centralized exchanges. But the other elements, you've still got a team that's fighting for the user, and that's really something that's still vital in these early days of adoption. So the ability to put education at the forefront, be able to build something people actually want and need, be able to advance those products that people are demanding for. Some of that doesn't necessarily come along with decentralization because you just don't have those natural people looking out for the users.
Speaking to some of the difficulties around using a decentralized exchange and some of the hurdles that it still needs to overcome, Guy, I'm wondering if you share any sort of skepticism over exchanges that call themselves decentralized, but really they're just, a team of developers pulling all the levers of making the trades on the platform work. What is, the criteria in your eyes that would actually make an exchange decentralized as opposed to centralized?
So yes, I have a great degree of suspicion, but that's not because of the projects themselves. It's because I'm not that technical to really understand if it's true, if the code itself is manifesting or is representing something that is indeed censorship resistance and is truly decentralized. I can rely on experts, I can rely on friends that are experts and have far more technical depth than me in understanding if something is truly, at least on the trajectory of decentralization or not, but I don't trust myself yet. And given all the failures of projects that were presumed to be decentralized, presumed to be kind of rocket ships and so on and so forth, you have that kind of, and I think it's healthy to have that kind of suspicion, to check, to ask, to make sure that this is a viable project. It's okay to be early adopter. You're taking high risk by going into projects that weren't tested. I think we're all on this call are fall into that category. So I'm perfectly happy to try things out. But I'm going into certain projects knowing that I might never see these tokens back again, and that's okay. I'm part for the game. I want to play. I want to contribute. I want to help. But this is a high risk game yet for I would say the average investor there. There still needs to be a healthy dose of experimentation, of scale, of testing all sorts of attacks and bad actors trying to manipulate these projects for me to be able to come and recommend to my to a friend of mine, to family members, hey, go in, this is good. We're far from it.
Carl, would you agree with that kind of skepticism that Guy had just shared and kind of elaborated on? You had mentioned you also had quite a few problems when you were using different DEXs and said that, centralized exchanges are really easy to use, but with decentralized exchanges, you do come across perhaps lag times when if you're using a DEX on Ethereum, you could face very high fees when it comes to trading. Do you want to talk a little bit about the main issues that you see right now with using DEXs?
Well, so today I had a huge problem. I had a token that I just really wanted to get rid of. I really want to sell it. And I've been trying for like 2 days now to sell it, but I have to approve it on Uniswap, and to approve it, I have to approve it with my hardware wallet, and now it's like it's pending. I have like 40, 50 different orders now that are pending, and I'm trying to cancel the orders, but it's not working. And it's not my internet connection, it's not my computer, it's like there's something there with the fees or something, but I've also tried to increase the fees like to insane amounts, but it's still nothing is hard. So if someone has an explanation to what I should do here, feel free to like, I need to know. I really want to sell this coin. But yeah, so that's the big problem. Like it's very hard to and I tried to search online, go to Reddit, whatever, and there are some people that have similar problems, and some people tell me to do this or that, but so far I wasn't able to sell this coin, and it seems like I'm stuck with it for some time here. But yeah, this is one problem that I had literally today.
Very, very relevant and timely. So, I mean, Carl, you've just explained some of your experience using those dexes. Guy, you had mentioned that eToro had actually tried to build a decentralized exchange. And Catherine, I recently heard through an interview actually with the CEO of BINANCE, CZ, that they too were building, you know, a new blockchain for DeFi applications for DEXs to be built upon. Any initiatives that Binance US has taken, either is taking right now or in the past, as it relates to kind of broadening user experience with decentralized finance? I know that Binance US is obviously a huge centralized exchange platform here, but tell me a little bit about your experience, either under the company or yourself personally, using these decentralized finance applications.
Absolutely. One of the main points of Binance US coming into the market was to be able to deliver a regulated exchange that allowed people a super easy way to move their dollars into digital assets. So being able to provide a variety of digital assets that people felt comfortable with, we had gone through our digital asset risk assessment framework for, and really we're kind of confident in listing these and providing these offerings. And one of the things we've been able to do since launching when we only had 7 coins is continue to expand that variety in the flavor of which cryptocurrencies are headed. So when we saw the trend towards DeFi, we began to look into the governance tokens because we wanted to give people the opportunity through an easy centralized mechanism to be able to get into these, whether it's Compound, DAI, Maker, these other governance tokens that were relevant in the DeFi space, as well as be able to expand upon ones that we felt were going to be game changers and where people said, I want to get involved, but I want the easiest way to get in there. And so we've been able to provide that for folks. And that's really where we see ourselves as a conduit to letting people get involved in the space. And then from there, they're able to launch into a decentralized platform from there, or be able to just have a sense of how it works, having skin in the game to an extent. So I think about that, like when we launched different platforms where we saw a lack of liquidity or it wasn't available in other places. That's where we're able to kind of step up and say, we've done our homework, we're ready to provide it, and you've got an adequate dollar pair as well as a USDT pair, and are able to trade this 24/7 on our platform. So that's really where we kind of step into the DeFi space. But there's so much more to be done. So we've actually joined the Chicago DeFi Alliance because we feel that there's just so much energy being put into DeFi, and now I guess you could say NFTs, but where you're seeing the innovation take place and that kind of next use case of cryptocurrency begin to evolve. So being a centralized platform, we want to be able to take our users on that journey as digital assets evolve and make sure America is not left behind because the rest of the world can do things in a way that's less regulated. We still want our users to feel comfortable with the platform, be able to have access to it and ease in order to transact on the platform.
Speaking of the regulated aspect of Binance US and the time and the energy and the legwork that you guys have been doing, working with US regulators to get approvals for certain exchange operations and products, do you think that that kind of approval and that kind of progress could have been made on the regulatory front if it wasn't a centralized exchange, if it was a decentralized exchange? What would you say, Catherine, have been the major successes so far this year as it relates to regulatory approval around crypto exchanges? And do you think that those could have been won if perhaps Binance US wasn't centralized, it was a decentralized platform?
Well, we definitely admit that we were pretty late to the game. Digital asset marketplaces in America started almost 10 years ago. I think it was Gemini's 5th birthday just yesterday or so. So for us to come in just a year ago, we were absolutely late to the game. And this actually came to our advantage. It wasn't the first time regulators were hearing about a digital asset marketplace. It wasn't the first time people were learning that this was actually a business. You've actually now, by the time we've entered the market, JP Morgan has taken on some of the larger exchange clients as commercial banking clients. So there's been some sort of normalization curve that's been really helpful for us as we've been able to move through the United States regulatory processes, but there's still a lot of work to be done. So we actually are, back when we had offices, our second office was immediately in Washington, DC, having boots on the ground there to be able to discuss in and out the really importance of this framework of crypto going forward, having it not be misconstrued or misrepresented was something that was super important to us. So that's where the great work of the Blockchain Association, the Chamber of Digital Commerce, POSA, the Proof of Stake Alliance, those have all been super helpful in just the educational components that are going to make regulators more comfortable with the thing that we're very excited about. So that's really where we've seen regulation improve. We've also seen state by state level kind of easings where you see the Florida FinTech Sandbox being opened up, which is super exciting for more crypto companies and FinTech companies to come, as well as you saw kind of the easing up of the examination process from a state by state level to be one that's across all the states. So it still requires a lot of individual work with the states and the state regulators, getting them comfortable with our business that we have, as well as getting them excited for being able to provide the lowest fees in America to our users.
Speaking of the regulatory progress that has been made, I do want to touch briefly on the headlines, on the news headlines that came out last week about the indictments against BitMEX. Guy, as a centralized exchange operating in the US, did the indictments against BitMEX worry you at all about crypto exchange operations in the US? Did you feel like that was a shifting tide of regulatory sentiment around cryptocurrency exchanges?
I think we all have the occasional nightmares of waking up and receiving a call from a friendly regulator asking what is going on with something. But in seriousness, I think we are we are at least eToro has been around for since 2007. And we have been working in regulated environments across the globe. So in Europe, in Hong Kong, in Australia, and now in the US. So when we look at an indictment, when we look at an enforcement action, obviously we learn it, we try to understand what happened. But we're running a pretty tight ship. We are a regulated company with multiple money transmitter licenses and so on and so forth. Just this year, we also announced that we received our membership application from FINRA. So we'll be able to launch our stock trading offering next year, making it a multi-asset platform the way that we're outside of the US. But we're trying to obviously learn from it and see what were the fact patterns that led to the indictment. But we are very, very careful about making sure that we're playing by the rules, that we respond to all regulators with the respect and courtesy that they need to support the industry. Catherine just mentioned all sorts of wonderful organizations that we're also part of, the Blockchain Association, the Chamber of Digital Commerce, and so on and so forth, where we're donating our money and our time to make sure that regulators are informed and educated about this space. For many of them, a decentralized anything is just a scary word. It's just not, it doesn't compute. So we need to do a lot of work to make sure that we're not getting a knee-jerk reaction as an industry, not as an individual player, but as an industry to some sort of an extreme case of a company not, or project not playing by the rules. That is really what we all need to do as an industry, to really come together the way that we do, I believe, in an improving way, and making sure that they support innovation, they understand that this is the future, and they open up the way for more projects, more companies, and more prosperity to be achieved in our vertical.
Carl, anything to add there to Guy's statements about how you think the recent indictments against BitMEX will impact how regulatory approval currently is going for the crypto industry, and perhaps more broadly, even just cryptocurrency trading, cryptocurrency assets?
Yeah, so it's obvious that the market interpreted this as bad news because we did see a sell-off on the day, on the same, the same little, like the same hour. Personally, I think, I mean, it was always something that I think we all kind of expected, that I think like the US is going to go out for these derivatives exchanges. I think that it's not very surprising, but I'm not sure how bad it's going to be. They're going after BitMEX, which is the biggest one. There are other ones out there also, of course. Personally, I honestly don't really know if this is going to lead anywhere. Also, because from what I understand, what they are mostly angry with BitMEX about is the fact that they believe that, or they think that BitMEX hasn't done enough to hold US customers outside of BitMEX. But I mean, it's obvious if you go to BitMEX that they say that you're not allowed to trade if you're from the US, and you cannot even log in if you're from the US. So I just wonder, like, what else can they do? Like, I don't know, how can you keep people from trading there? So it will be very interesting to follow, because if this leads to something bad, then this could potentially be bad not only for other centralized exchanges, but maybe even for some DeFi projects also, and like decentralized exchanges, because how decentralized are they actually? There's always someone behind it, and from what I understand, there are sometimes people behind the exchanges with more power than you might think. So yeah, will be interesting to follow for sure. I think that it will be interesting not only for centralized exchanges, but also actually maybe even for decentralized exchanges in that sense.
Well, really good food for thought, and I think good lingering pointers to what we should be looking out for in the upcoming months. We actually only have a few minutes left in this panel, so I want to give a final question to all three of you guys, and if you could keep your answers short, that would benefit whoever's coming up next on the program. My final question for you guys is, what do you think is going to be the next big innovation for cryptocurrency exchanges and trading platforms that you'd hopefully like to see worked on more over the next 12 months? Catherine?
Oh no, don't come to me first. I had a wave of innovation that just came through. I think that there's some component that we still need to improve upon, is the connectivity between education and the application of the products themselves. So there's still a big disconnect, basically pointing people to go online and you'll learn about it, and then here's our product. And I think that could be bridged and make it even easier for people to be able to navigate these waters and dive in a little bit earlier than maybe they're typically doing with their traditional banking infrastructure. So I'm excited for that to take place.
Guy?
So I'm actually really excited about all sorts of design innovation that's coming in the space, because I think that technology is moving forward extremely fast, and we will see more and more fascinating projects being built. But it's really, and I think we touched upon that earlier in the conversation, it's the design innovation. It's making it simple, easy, intuitive to use, so that more and more people can find themselves accessing these platforms and accessing these projects. And I think you can easily see products that were built by developers because no one can use it. It's very difficult. But once you get those designers to come in and believe in crypto and contribute and figure out a way to scale design to the point where it looks and feel like like a centralized app, basically, that where people were thinking a lot about and making sure that the average user can easily grasp it. I think this is where the innovation that I'm looking for and see a bit now would come in and make DeFi a lot more accessible to a lot more people.
Carl?
Yeah, so the downside with a DEX today is that there is no customer support. I would love to see a decentralized exchange that is so good that I don't care that there is no customer support, because everything is just working. So let's hope for that.
Maybe we can even get into decentralized customer support.
If that's such a paradox when you think about it, but no, yes.
People helping people. I think it's the future.
People helping people. Thank you so much, Carl, Guy, and Catherine, for your thoughtful remarks on this panel. Thank you to all of our listeners for tuning into this discussion. There's more coming up at LA Blockchain Summit. Goodbye, everyone.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
One donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Fancy a donut?
Can I have jam, please?
Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just buy that?
You won't even notice, it's very small.
I want a new one. You don't have to buy.
That's my commission.
But it's out of my donut. I was expecting 100% of a donut. What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way. Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise...
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. Right there.
eToro. Join now.
So you've heard about these 2 cryptos that are going to explode?
Names, or I'm posting your karaoke video.
You said you deleted it. Okay. There's 2. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro. Sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
How's it going, everyone? Adam Levy here again from Draper Goren Home on LA Blockchain Summit. I want to introduce the next panel up next. It's a very interesting group of leaders. And it's fascinating exactly to see how the narrative of Bitcoin and crypto in general has evolved since 2008, right? What first looked like as a currency for criminals has now become publicly backed by key political figures and lobbyists around the world, okay? Now, next up, I want to introduce you to a very special group of leaders. They're known as the Crypto for Congress team, and they're here to tell us how and why exactly they gave Bitcoin, and this is as true as it gets, they gave Bitcoin to every member of Congress this week. Please help me welcome Perianne Boring of the Chamber of Digital Commerce, leading a chat with Taras Kulik of Core Scientific and Guy Hirsch of eToro. Thank you.
And you're going live.
Hi, and thanks for joining. I'm Perianne Boring, the founder and president of the Chamber of Digital Commerce. And today we're going to talk about a special project called Crypto for Congress. With me is Guy Hirsch from eToro and Taras Kulik from Core Scientific. Thanks for joining, guys.
Thanks for the invitation, Perianne.
So if you haven't heard, we launched a very special project just yesterday called Crypto for Congress. This is a project that we've been wanting to do for years and we've been planning for months, and it launched Monday morning. And the idea behind this was to put cryptocurrencies in the hands of our elected leaders. So Crypto for Congress, first and foremost, is an educational initiative of the Chamber of Digital Commerce. And we are seeking to provide congressional candidates from all parties a hands-on experience with blockchain technology. And the purpose of Crypto for Congress is to raise awareness of and expand access to blockchain technology while broadening participation in the political process. So I'll tell you a little bit about what we actually did, and then we'll have a quick chat here with Taras and Guy about kind of behind the scenes, what actually happened. So we have provided a contribution in Bitcoin to every single member of Congress's campaign. And the reason why we wanted to do that was to provide another educational resource to members of Congress. So for those of you who are familiar with the Chamber of Digital Commerce, we're a nonprofit blockchain trade association located in Washington, D.C. And we work with the government to help them understand this technology. And we are promoting policies that promote the acceptance and use of digital assets and blockchain technologies. And there's a lot of rules around how you can engage with government officials. And there's all sorts of gift rules about giving things of value to people that work in government. So we've spent a lot of time, holding briefings. We've issued a number of reports and white papers. But I think, as we all know and understand, that the best way to learn something new, especially when it comes to technology, is to use it for yourself. And so being able to put this technology in the hands of people who work within government is something that we really couldn't do before today. And so giving a contribution to someone's campaign, it for the first time has allowed every member of Congress to interact with this technology and to learn more about it. So every member is being provided a contribution in Bitcoin. And then we've also provided some educational resources to show them how to use it, how to leverage this technology to expand participation in the project, how to expand participation in the political process, and how to general educational information about how to join and engage in the cryptocurrency ecosystem. So that's what we was looking to do with Crypto for Congress. We have 15 corporate sponsors, Core Scientific and eToro are two of them. Guys, just kind of opening this up for discussion from your perspective, what do you think was the most important thing for us to accomplish in Crypto for Congress, and why is this initiative important to you?
Well, I mean, to take a first crack, I think one of the reasons why the Core Scientific team was really excited to be part of the process was because this, I think from everyone that I talked to, we created the very first verifiably made in USA Bitcoin. We had over 1 exahash pointed at a pool that was provided by one of our great partners on the technology side, Luxor, based out of the US, with servers in the US, and no transactions from anything else. It was an empty block, and at the end of the day, you can literally go onto the blockchain forever. We stamped it with a really cool header, which, if you can find it, you'll really appreciate it. But this is truly made in USA BTC. So the novelty of that and being able to have the infrastructure in place to do such a thing was for Core, a testament to where the North American mining ecosystem is really going. Whereas before, you really couldn't run a pool that could win a BTC block in the United States, I guess for the past, half a decade, since China really has been taking a lead on the infrastructure side. So for us to be able to do that, to win that special block, and then to be able to use that for the PAC's purposes of donating to the members of Congress, I mean, that it really is something special.
Yeah, this was special Bitcoin. So we felt like if we're going to go this extra mile and provide this resource to congressional candidates, how do we really help show and demonstrate the vibrancy of the blockchain industry? So we really wanted to highlight companies that have infrastructure in the United States. And so the Bitcoin that was provided to the congressional candidates was mined in the United States by Core Scientific and our partners at Luxor. And not only was the Bitcoin mined here, but we also can verify its transaction history. So if people have any questions about, well, where did this Bitcoin come from? We can show them how the technology works, so you can trace those transactions and how they can see that they came straight from the blockchain to the chamber's PAC to the candidates. And they can learn a little bit more about the technology by having the opportunity to see that. So that was a really special part about what we're doing.
Yeah, I think Perry Ann, you mentioned it may have been the very first time you saw miners, live miners being turned on and then hash rate ratcheting up once we actually got our fleet going. So, I mean, it's not just educating to members of Congress, but the general ecosystem as well. I mean, a lot of what you think is going on in BTC or Bitcoin or digital assets as a whole is a black box, but for us to be able to open the veil, I think it's going to be very useful and educating for a lot of these folks who, to them, this is a very stigmatized, dark web part of the ecosystem or value transactions. And by providing this type of transparency with very good enterprise players that everything is verified and they can look on their own, I think is a really great testament for where this is going again.
Yeah, one of the things we highlighted in those educational materials is 14% of all Bitcoin mining is here in the United States. So it is important to note that there is a vibrant ecosystem, a vibrant industry in companies to help demystify who these people are who are working in this space. I feel like a lot of people who work in government, all they know about our industry is what they read in the news, which may or may not be very positive. Exactly. So to be able to provide them a more positive experience with this technology and help us kind of take control of that dialogue and bring more positive connotations to our space is deeply needed, and I think will help get more support for our industry, throughout the policy community.
Yeah, I mean, sorry, go ahead.
Yeah, I know. I was going to say, Guy, what do you think? I mean, what do you think was, really why was this campaign important to you and to eToro? You guys are one of the title sponsors of this campaign, and you personally have been a big supporter of this, serving on the steering committee as well. So what were the big takeaways for you?
So first, I love the words, Bitcoin made in the USA. It's just music to my ears.
Yeah, I have background for it too.
Yeah,
seriously.
Money is at the heart of everything. Money is so foundational to society, to how we operate, how we interact with each other, how we interact with our friends, with our families, with government. And it's just at the heart of everything. And we, as an industry, are involved in transformational capabilities that will transform that. It will change money. It will change how money changes hands or changes servers. And what we ought to do is to make sure that government feels that it's on the right side of history by supporting it. It's very easy for some of members of Congress to have a knee-jerk reaction to all sorts of edge cases and news about all sorts of hacks and bad actors, and have a knee-jerk reaction that will basically just slow us down. I think what we're working on is inevitable, but it would slow us down. And so I think it's vital for us to be able to educate and promote freedom, promote accessibility, promote everything that Bitcoin and other cryptocurrency projects are bringing to every person in America, whether they know it or not. But this will affect all of our lives, and I think it's important. It's incumbent upon companies like us to make sure that we are playing a part in providing the information to members of Congress so that they will make the U.S. a leader in this space and not lagging behind. The U.S. is still the world's financial capital, this is still the most important market. The most important capital markets are being run out of the US. We want to keep that. We want to make sure that this is still the case 10, 20, 30, 40 years from now. And I think that if members of Congress will understand that, we will all have easier time succeeding in this mission. And so that this is why I think Crypto for Congress is so important. If they relate to this as better form of money, just a better form of money for them, for people who vote for them, then it's a win-win for the industry. It's a win-win for America, and this is why we're excited that you initiated that, Perianne, and happy to support it and make sure that we continue on with this mission.
Yeah, here. From another perspective, I mean, I talked to a lot of folks about how digital assets are really coming out of the basement and into the boardroom. It's like this slogan I have now with a lot of digital assets, where we really are maturing and professionalizing as an industry. And, you know, this type of initiative is a testament to that, right? And I mean, Guy, you mentioned one of the things around, you know, the US maintaining competitiveness on a global platform. Well, this is exactly it. You know, with the recent ruling of the OCC that's designating digital assets and Bitcoin in particular as a financial instrument, if we don't do something as a nation, as an industry, to really step up, you know, we will be left behind as the rest of the world digitizes fully. And, you know, something else to bring up is that within Core, we've got 3 sites in 3 different states, and 3 different cities: Dalton, Georgia, Calvert City, Kentucky, and Marble, North Carolina. And these are facilities located in opportunity zones for the most part, or areas that, you know, there's a ton of large-scale infrastructure that was built in the 70s and 60s, and there aren't that many opportunities for a lot of folks. So to be able to build large-scale digital mining facilities really does give a lot of opportunity for people in environments and, you know, regions that could definitely use a lot of this. So that's something that Core is really proud of, is the amount of hiring that we're doing. And, you know, we're putting out a couple things on policy with Perianne and the Digital Chamber team soon that will really hopefully get some members of Congress and other folks in that sphere to take a look and, you know, really give digital assets and the entire ecosystem a second view over, because we really are creating jobs for the future. You know, these are high-paying, high-skilled jobs that, you know, will be there for the foreseeable future. So when you're, you know, dedicating, you know, taxpayer dollars to supporting industries or reducing tariffs, you know, this is something that should definitely be top of mind.
Yeah, there's been I think a prioritization challenge in Washington and in politics more generally. As someone who used to work on Capitol Hill, you know, members of Congress, you know, people within the administration, they're being pulled in a lot of different directions. And if you look at where we are today, between the types of issues government is having to respond to, from COVID-19 to the stimulus programs, to you know, responding to the economic recession, to immigration issues, to an election, you know, we're in an election year. There's a lot of big things that's pulling members of Congress and political leaders in many different directions. And Guy makes a good point, saying, you know, we need to be on the right side of history. And it's not just being on the right side of history, it's not missing the opportunity.
Right.
And this community faces a lot of regulatory challenges. I mean, that's the reason why we established the Chamber of Digital Commerce, was to be a dedicated resource to government to help them make the right decisions when it comes to this space, and to be a source of information so they have the right information to make the right decisions. And because there are so many regulatory challenges, there's a lot of areas where we either need regulatory clarity or regulatory certainty. In other places where you have a stronger legal framework for businesses to be able to operate and innovate with blockchain technology in the United States. Where this is a big challenge for us as advocates is it's difficult to have a conversation about a policy issue if people have no idea what the underlying thing is that you're talking about.
Yeah.
So really coming out the door with just a basis of simplicity of let's just help people understand what this is. And then once people are better educated, we'll be in a better position to have better conversations focused on the policy issues. And putting the technology again in people's hands, I think is a great way to do that. What are some of the regulatory issues that you guys are most concerned about in terms of where the U.S. is falling behind, or where we need better clarity? From the mining perspective, you mentioned some interesting things, and then Guy on with eToro, and from the exchange perspective, there's a lot of financial services stuff to have to navigate there. So what are the major things that keep you guys up at night?
Guy, you want to go ahead?
Sure. So I think the first problem is not just our industry's problem, is the fact that I don't think the regulators themselves know how many laws are on the books and how many regulations are there. It's just too much, and it's a convoluted mess and maze that takes millions of dollars to navigate in, and really shut people out from participating in markets, not just us, but many others too. So I think the matter of overregulation is just a serious issue, red tape that costs the U.S. economy billions of dollars and must be addressed at the federal level and also the state level to simplify things. I actually, Perianne, with your permission, I'd like to answer it actually from the other way around. I think what we've seen with Brian Brooks coming from Coinbase over to the OCC, and with what Hester Pierce is doing at the SEC, is just a testament of how badly we need just one person that has the guts. Wanted to say another word, but never mind. And the belief that this is the right thing, and they're fighting from within for the industry, not for the industry, but for people to be able to enjoy the fruits of innovation. And I think what we've seen of recent from the LCC is a result. I don't know Brian, but I'm pretty sure that he was the catalyst behind it. And what we're seeing from the SEC is probably the out of the result of Hester Pierce and like-minded individual at the SEC. So I think we should, and the more this industry will mature, the more we will see transition of people from the industry going into these regulators, or maybe even become lawmakers, and pushing it from within. So you asked me what I'm concerned about. I'm concerned about many things, many possibilities that can really do us a lot of damage. But I'm also very hopeful seeing those bright spots, right? Those moments where we have an advocate, a true champion inside, pushing the system into the right direction. And I'm very happy to see that, and I want to see more of that.
Yeah, no, I definitely echo that. On the mining side, I mean, I mentioned it earlier, but I really need to reinforce it, is the tariffs that have been in place on equipment that's coming out of Asia has been a huge impediment to the growth of the North American digital mining scene. I would certainly implore the folks in Washington to take a look at that, because that really is causing a lot of supply chain constraints. The entire manufacturing sector is literally having to retool away from specific geographies so that they can build up capacity for manufacturing for these needed hardware components for digital mining. That being said, there's a ton of capital at play here. So for the U.S. to really, instigate innovation and growth within the sector, incentivization would be fantastic. We have TSMC building a factory, a new foundry in Arizona, and currently actually it's a multi-billion-dollar facility. If we can see more of that, or more government grants for being able to come up with the next innovation on the ASIC or algorithmic processing side, I mean, these would all make a huge headway for the U.S. to maintain its leadership in technology. And especially financial technology, because that's where a lot of digital assets are finding themselves to be put under the umbrella of, right?
Right. And Guy points out an interesting part of the U.S. Regulatory framework from a federal perspective. We have a fragmented regulatory environment where you have many different regulators that have jurisdiction of many different areas of the industry. So the SEC is looking at digital assets as securities. The CFTC is looking at them as commodities.
Yep.
FinCEN, is regulating them as currencies, and then the IRS is taxing them as property. So for companies having to navigate through just those four regimes can be an incredibly expensive process. And then sometimes there's not coordination, or sometimes it's you don't have the clarity that you need. So in each one of those is like an entire dedication of law that takes a significant amount of resources just for anybody to be able to pioneer through that. And that fragmented environment, I think, cuts against the U.S. industry in this space, because there's many other countries where they have a simplified regulatory model where you may have just one agency that oversees everything, and it's just kind of a one-stop shop. And I think that is one reason why the U.S. has fallen behind, and that's one thing that does work against us. But I think we have plenty of time to catch up, and I think we will. So many people are receiving their very first Bitcoin this week. This is kind of something that, I mean, for me was a light bulb moment for me was getting my first Bitcoin and like being able to actually see how the technology works. And I learned a lot from that. So I wanted to ask Guy and Taras, what was your first Bitcoin moment? Like, where were you? Why? How? What did you learn from that? And was that part of like your journey of being where you are today?
So I have a very vivid memory. It wasn't my first experience with Bitcoin, because I had prior experience with Bitcoin, but I had dinner. I told Vinny, the founder of Civic, and we had dinner at in Los Angeles. I think it was 2010 or 2011, and Vinny was already a successful entrepreneur, and we had dinner at this kind of venture capital hosted dinner, and he sat in front of me, and for 2-3 hours he tried to convince me to put $10,000 into Bitcoin. And all I had to do is just go downstairs to the ATM, take out some cash and give it to Vinny, and and that was it. And I went back home. I downloaded a wallet and I did the whole thing, but didn't follow through at the right time. So I'll always remember that dinner with Vinny that turned up to be then a crypto entrepreneur at Civic, and that is my kind of crypto moment. And I hope I'll have a similar dinner with Vinny sometime in the future where I'll get as valuable of a tip, and then I'm going to act on it for sure at the same time at the right moment.
Yeah, my first exposure to BTC was many years ago. Actually, I was pretty interested in astronomy, not astrology, and I was looking at the SETI cloud computing initiative, where you could essentially allow your computer to be part of searching for ET. And through some of the corners of the internet, I found BTC and really got interested. But as you do when you're younger, I got distracted and completely forgot about it until grad school, where a good buddy of mine in finance classes, he told me about this crazy thing called BTC that he's been loading up on, and he's applying some of his student loans against. And sure enough, 10 years goes by, and the value definitely changed quite a bit, and I was very surprised. And when I had the last couple thousand of my student loans, he's like, you should buy some. I definitely said no, but I regret that every day.
Well, Guy, Taras, thanks so much for sharing those personal stories, and thanks for joining me today. And thank you for your support with Crypto for Congress. Definitely wouldn't be here without you. It's been a really exciting week. For those who want to learn more about this project, you could go to cryptoforcongress.com, or you can follow us on Twitter. I'm at Digital Chamber, and Taras and Guy, what's the best way to follow you guys?
LinkedIn or Twitter. Yeah.
With eToro, just eToro.com. You download the eToro app, and with me, it's just just Google Guy Hirsch. You'd find me.
Same. Find me on corescientific.com or on LinkedIn or Twitter. Super easy to find me as well. Thank you for the invitation, Barry Ann.
Thanks, guys.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
One donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Fancy donut? Can I have jam, please?
Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just buy that?
You won't even notice, it's very small.
Oh, it's a new one. You don't have to buy.
That's my commission.
It's out of my donut. I was expecting 100% of a donut. What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way. Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise...
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. There.
eToro. Join now.
The gamification of crypto has resulted in the wide adoption of Bitcoin and other digital currencies on a whole different level, from e-commerce points to gaming rewards and even hospitality. Our next group of panelists will share exactly how they amassed a user base ranging from hundreds of thousands to millions of people around the world earning crypto for their everyday activities. Please welcome Robert Beatles of Monarch Token, leading a discussion with Amy Wan of Bling, Adi Sinman of Props, Aubrey Strobel of Loli, and Mike Lee from Yanola.
What is going on, crypto family? So I guess today we're going to have a panel on gamifying crypto for mass adoption. I tell you, this virtual stuff is definitely easier than flying to Los Angeles and getting a hotel room like we always do there for the convention. But man, I sure miss all my crazy peeps at the conferences and all those sloppy drunken hugs at all the the after parties and all that cool stuff. But can't wait till they open California back up and things kind of go back to normal. So anyways, I'll be doing the moderation here today, and hopefully I'll do a better job than Chris Wallace did on the debates. So we'll see. You guys can judge me at the end, I guess. But before we actually dive into this moderation, let's into gamification of crypto, all that kind of stuff. Let's take about 30 seconds, I guess, to introduce everybody. And if we could, let's just start off with Aubrey right there at the top. Why don't you tell me about yourself, who you are, and all that kind of good stuff.
Great. I appreciate the Chris Wallace joke. That was pretty good.
All right, you've done enough talking. All right, next.
It was great. Yeah, I'm Aubrey Strobel. I'm the head of communications at Lolly. We're a Bitcoin rewards app that allows people to earn Bitcoin when they shop online. So places like Groupon, Priceline, Expedia, and people are just earning fractions of Bitcoin. We have over 1,000 merchants. We're about 2 years old, and we've been, just growing a ton. So yeah, really excited to be here. Thanks for having me on.
Awesome. Let's go next, I guess, with Adi.
Hey, Rob, thanks for moderating this session. I'm with Props, co-founder and CEO. Props is a loyalty token. It's a work token. It enables apps to reward their users with benefits in the apps and a financial stake in the network that they're on. It's part of the ownership economy, and the ownership economy doesn't need to be just for dApps and just for crypto geeks. It's for everyone. And so we're working with Web 2.0 apps that have millions of users and enabling their users and these apps to be aligned with each other and share value.
Cool. What you got, Amy?
Hi, so my name is Amy Wan. I am actually a securities attorney and founder of Bling. We're blingfi.com. We are literally gamifying crypto, so our users can play mobile games Our version, we've got, Bitcoin Blast, Bitcoin Blocks, things, a bunch of different mobile games. And the reward is that people can actually earn Bitcoin for it. So we've been around for about 15, 16 months. We have, we're approaching 3 million users, and the interesting thing for us is we're literally onboarding people onto crypto who haven't had exposure to crypto before. So 70% of our users have never had a Coinbase account. We've referred them about 1.9 million new accounts, and we're profitable.
Excellent. That's rare. Cool. Bayong, what you
got? Thanks, Robert. My name is Byungju, or Mike Lee, from Yanoja. Yanoja is a mobile application platform based in Korea. We are #1 online travel agency here. And we provide like accommodation bookings, like leisure activities, budget hotels, and franchise and hotel solution for our users. We are actually not like the blockchain-based company, but we have been successful in gamification of the blockchain or the crypto over the years. Over years of like developments have showed us that we could provide a crypto and blockchain technology to our millions of users, which peaks about 8 million active users in the peak seasons. And so we're really excited to be here, and we'd like to talk about how we can spread this kind of a new phenomenon in this era.
Awesome, man. And then for people that don't know me, my name's Robert Beatles. I'm a Christian husband, father, got a TV show called Crypto Beatles, YouTube channel called Crypto Beatles as well. I've built one of the largest service companies in California, one of the largest real estate companies in Nevada. I'm the founder of Splash Factory. We build a lot of software for companies like the United States Post Office. And I'm also the co-founder and builder of the Monarch Wallet, Monarch Pay, Monarch Health, and here very soon, Bull Run the crypto game. So pleasure to have you all here and talk about gamification of crypto. And, one of those things that, a lot of people don't really understand, like what gamification of like a blockchain company really means. And I think one of the best definitions I could kind of find was, gamification is applying the science and psychology of gaming in a non-game context to motivate and reward your customers to perform certain desired behaviors. And gamification is, one of the most proven ways to kind of engage community members and kind of keep them coming back for more, so to speak. So if we would, let's start off with Aubrey here and just kind of talk about, who do you think are making kind of the most significant like advancements in the blockchain industry through their use of gamification, and what is it exactly that they're doing that you kind of respect or admire, can point to?
I mean, I think this panel is doing a great job by incentivizing users in a bunch of different ways to their platforms. I think the component that people really need to have is like, how easy is it for your users to get involved? How easy is it for them to join your platform? And I think a lot of times it's like, why should I even be earning crypto or Bitcoin or whatever your token is in the first place? Like that incentivization is like the people who have nailed that and who are getting those things right are the ones that are succeeding. So it has to be easy, and they just have to be incentivized to do it. So I mean, there's a lot of leaders in the space, but it just has to be like, why should I even own this in the first place, in my opinion?
Gotcha. Anybody else want to chime in? I figure I'll ask each one of you a question, then everybody can kind of chime in afterwards. You have any good examples of companies out there in crypto, maybe even yourself, what you guys are all doing, or any other
what NBA hotshots are doing is really interesting. I don't know if you guys checked it out, but it really does recreate that childhood experience of opening the pack and finding your cards. It happens to be video cards. They happen to be on the blockchain. They happen to be tradable for value. They happen to be a digital asset, but that is really obfuscated for regular mom and pop users. And that is at the heart of, as you said, gamification and engineering that for users as a fun experience, as a motivating experience that has nothing to do with the technology behind it.
Gotcha.
Well, from Yanoja's point, we have tested two types of gamification to our users. First was a reward, and second was like a promotional like roulette gaming. Like for the reward, we noticed that most of people were not really interested in only gaining the crypto for their rewards after they accommodate the bookings inside our platform. but for gamification of some kind of a roulette system that we have launched in our platform, users can just come in and they can do the roulette, and then they can obtain some kinds of a crypto or some stable coins in terms how they are getting lucky in that day. And from that, we found that most of the users, they want to crypto, but they are not really used to it. So they need to be studied and they need to be educated. So this kind of education took us about 6 months for our users to actually get a crypto wallet and to get themselves into a crypto trade market. And by seeing those kinds of actions form over the months, we've noticed that the users' retention rates or their conversion rates to actually the service that we provide was getting higher. So those kind of crypto experiences kind of taught us that, well, crypto can be used to facilitate business like us.
Gotcha. And Amy, I'd like to pick your brain a little bit because, you know, you're a securities attorney, right? So do you kind of have to be careful in the gamification process, especially like in the US? I know with like Monarch, we had to be like super careful with like referrals and rewards that we paid out because it could end up, you know, kind of getting us in trouble. What's kind of like the rule of thumb, so to speak, with, you know, gamification rewards and things like that in the space?
Yeah, I mean, you know, not even in the crypto industry, if you just look even broader, right? Like Robinhood has gamified finance and investing and stock trading in general, and they've gotten a lot of flack recently for almost making it too easy, making it too addictive, right? So, you know, there's definitely a lot of attention being paid by regulators towards crypto. So I think the crypto industry in general need, you know, the good players need to be very cautious and compliant about how we proceed. You know, for our company, I almost come at this from an opposite perspective of we're not necessarily gamifying crypto as much as we are financifying games, because we're a games first company. So, you know, games are our bread and butter. And then to the extent that we work, you know, Bitcoin and crypto and other financial services into there, it's really interesting because finance companies are super good with retention. Gaming companies are really good with, you know, user acquisition and daily active usage. So I think if you mix the two, you can end up with something really compelling.
Very cool. Adi, what's kind of the biggest challenge that you've kind of seen people with implementing like gamification in their platforms and their companies? What's kind of the biggest challenge? Because we all know that if you're able to do it right, things can be, you know, very, very successful, right? I mean, you look at like Uniswap and Sushi, and you look at Hex, you know, those three guys, they figured out how to do some serious gamification. What do you think's keeping people, I guess, from knocking it out of the park like that? What's the biggest challenge?
Yeah, and I think we've seen companies gamifying over the past 2 decades. I mean, nothing to do with blockchain. I think blockchain itself represents another set of challenges, but even the Uber loyalty rewards, where you can get a diamond status or a this status and get cash back, and you know, it's all gamifying. You know, it puts the little bar in front of you, and you're this much short, etc. And these are all techniques that everybody on this call is using, and you know, with next generation blockchain technology in order to simplify it for users. I think the challenge is really that we are talking about new business models, and these new business models for, you know, apps to share value with users. You know, what does it mean? How is it going to play out? Has it been tested? And really, what we're seeing is innovators like, you know, the folks on this call. And companies like Reddit and companies like, you know, the NBA with the hotshots and many others are starting to step up and make this more and more mainstream. And, you know, once Lyft starts rewarding their drivers with a stake in the network so that they don't go and demonstrate on the day that Lyft IPOs and they're happy when the company is doing well. You know, Uber is not going to have any choices, and they're going to have to adopt these new business models of sharing value with end users. And so I think that's the biggest challenge. It's a little bit of the chicken and the egg, but we're seeing great strides, and this year is a great year. You know, we at Props have a half dozen apps that have already signed up to the network, each of them with millions of users. You know, the genie's out of the hat.
Gotcha. Anybody else got anything they want to add to it?
I mean, I think that you know, a lot of this topic is nothing new. We've been talking about this for a decade, right? Like when it comes to mass adoption of crypto, there are a lot of technical hurdles. People at this conference, you know, people on this panel were probably a lot more tech savvy than your average person, but most people don't know how to handle, you know, cold storage and private keys and anything of that sort. And so, you know, most people, a lot of people don't even know QR codes still, right? And that should be so simple. So I think, you know, the key in all of this is just, you know, it's making a lot of design choices for the average user.
Cool. Anybody else got anything you want to add?
Well, to be honest, like implementing a crypto business model was really difficult for us. And we actually did quite large projects, including this milk projects that we did in the Yanoja. And we did it for about 2 years now because the business model at the initial stage was not implementable for our average users, like everybody's in the panel saying. So for people to understand what the blockchain is, what we thought is that people do not have to actually acknowledge the fact that the service or the reward system they're using is actually run on the blockchain. It is just the fact that they can be enjoyed in the services and they can be more feel valued in the services. The key point was not the blockchain. The blockchain was only the facilitator and the technology that actually enabled it. So it was really hard for us to understand those kind of hidden messages behind implementing the blockchain technology. But as soon as we were able to get through those kind of psychological barrier, we were more able to generate more, let's say, a productive or very implementable services to our users. And it took us a lot, really.
Very cool.
Yeah, and I'll add to that, just talking back to the gamification of things. I mean, Lolly isn't straightforward a game, but we do a lot of marketing around giving people an idea, you know, if they would have earned with us, you know, in a way that is a game, like that they would have earned it with us back in like January 2019, I think Bitcoin was around $3,000, you know, like how much would they have now? Would they 2x or 3x their earnings? And would have that paid for the things they would have bought in the first place? So I think giving people that feeling of like, you know, Bitcoin over cash, this is what you would have had if you would have just earned, because there are other cash back rewards companies that, you know, are kind of our competitors. You have like Rakuten, which was formerly Ebates. But if we show like if you would have held that with us, you know, where you would be today, that kind of incentivizes users in sort of like a game capacity, I would say. Like it's exciting for them to be like, oh wow, I 2x'd my reward since I first earned with Lolly. So I guess that goes back to the incentivization side of things.
Yeah, and who knows, the way they keep printing all this money, I think a lot of assets are going to continue to go up. And so Bitcoin, who knows, maybe it could 2 or 3x just with, you know, increasing the currency supply by 30%, right? So, but Amy, so what do you kind of think about when it comes to gamification? You always get people that kind of like game the system, right? Because if you make gamification too easy, like with rewards and badges and payouts and things like that, they're able to create bots and do all this stuff that, you know, kind of ends up, you know, hurting the project, and it just becomes, you know, just a mess. What's some ways that you think that you can help, I guess, kind of make it to where they don't game the system as easy, yet both parties, you know, kind of win-win, so to speak. The user as well as the company both benefit from the gamification process without being gamed in the process, so to speak.
Yeah, absolutely. And this is a huge issue in our specific industry, right? I think with every company, depending on what you're doing, the answer is going to be different. At least for us, we do have a lot of protections around fraud. You know, we have bot detection programs. We make everyone verify their email. We have an extra layer right now. You know, we refer a lot of users to Coinbase, and they do a lot of fraud detection as well. At least for us, the answer has been a lot of proprietary fraud detect programs.
Gotcha. Anybody else got anything you want to add to it?
You know, we're doing business in the United States, and we're enabling companies here to enable crypto payments and crypto benefits to their users. And in that sense, we're not inventing the wheel. When somebody is earning a lot, they need to do KYC, AML. That's already protection there. The apps that are implementing are also getting a lot of tools to ensure that they are gamifying in a smart way. So for example, if you're getting a reward for inviting a user, you may get a very small part of it on the invite, but the vast majority of it when that user is actually verified as a real user. So again, fighting gamification. And so across the board, I think that one of the responsibilities of us who are trying to educate the mass consumer market and business market in this country and internationally is to make it easy. And it's not expected that each small, medium-sized business is going to have the budgets that Reddit has in order to, or the budgets that Mike's company in Korea has to put millions of dollars and years of development on blockchain. And so there's going to be middleware, there's going to be layer 2, there's going to be APIs that make it very simple for apps to implement, and all of that is coming. And that's part of what we offer.
Gotcha. Aubrey, you got anything?
Lolly's not so much in the gaming space, but there are some components that we're going to be adding in that I can't really share right now. But yeah, I really like Crypto Puzzle, I like some of those companies, but in terms of incentivizing people to earn and get Bitcoin, Lolly's pretty straightforward on that end.
Gotcha. It looks like we got 7 minutes left, and I want to make sure everybody gets a question. Everybody gets to chime in on it, right? So, and then give everybody a chance to let everyone know where to find them. So, and forgive me, I butchered your name. Is it Bayong?
Mike.
You just go by Mike. Okay, that makes it easy. That's hard for me to mess it up. All right, Mike. So, looking at the way that you've built your company, over the year or whatnot, is there anything you'd go back and do different to kind of apply gamification to it, for better, for worse, anything like that? Things that you would have done differently, or things that you recommend other people should do that maybe you didn't, that you wish you did?
Well, there are a lot of things that we have experimented with the crypto or the blockchain. We first experimented with the payment system, and then we came to the reward system. And now we are heavily invested in our resources to experiment more on the solution provider side. So identification for the users, and to use those blockchain technology in going somewhere to actually not carry their passports and their ID cards, and to only use their simple wallets to check into the hotels in a very automated way. I think that's new ways of checking into hotels in this untapped arena. And so I think one of the lessons that we have learned in the blockchain project, because we are not a blockchain-based company, but we are just a conventional company, actually a unicorn in Korea. The things we have to do is that we need to look on the side of what the users actually want in their addressing the blockchain or the cryptocurrency. I think so the gamification or the incentivizing them in some ways is actually the easiest and actually more of the fastest way to actually make them into the in this kind of blockchain or the crypto. It's not because in Korea, because the blockchain frenzy, the prices frenzy, and over the years, there were some concerns about people is blockchain a fraud, or the crypto, is it just a non-rational thing? So those kind of sentiments actually prolonged over the years. But as a conventional service provider, we were actually more focusing on the services, not on the advertising that we are blockchain or not. So I think the values that we have to give to our users should be very intact, and it should be very concrete in this sense. So yeah, those kind of lessons that I think should be implemented also in other blockchain areas too.
Gotcha. Anybody else? We got about a minute before we go to outros.
Yeah, I guess I would say, the education side of things, when you're educating people about how they can get their tokens off or their crypto off, or just getting them involved, and it's not a scam, and it's not freaky, and it's not, why they should be doing it in the first place. that's why I'm interested in knowing about what you guys are doing and how you kind of bridge that gap.
We do a lot of customer service. I mean, we have brand new people who, you know, they own their first Bitcoin for the first time, and we literally get customer support tickets that are like, what do I do with this now? You know, and we haven't quite gotten there on the education piece yet, but it's something we're working on.
Yeah, I know for me personally, just with our own apps, one of the things that if we could go back in time that, you know, we would have probably done different is really give people a reason to open the apps or interact with the apps every single day and reward them in a way that doesn't put anybody in jail, right? So, because that's one of the problems with cryptocurrencies. So we got about 3 minutes left. And I wanted to give everybody, you know, at least 30, 45 seconds to tell people where to find each other, right? So Aubrey, where can people go to find you and learn about Lolly and all that good stuff?
Yes, we're at lolly.com. We're also at TryLolly on Twitter. And then I just launched a new supplemental Twitter account that's going to be giving people like the best deals online. So if you're looking for like the highest Bitcoin back rates, like 28%, 30% back, like we're sharing that in a completely different channel so that we don't bombard you with too many shopping ads. But yep, and then myself, I'm at Aubrey Strobel on Twitter. So.
Awesome.
Great.
What about you, Adi?
We're at propsproject.com and at propsproject on Twitter. I think what's important to remember is we hear all the time that blockchain is such a revolution and whatnot, and yet like 90% of our colleagues in the non-blockchain space look at us like they don't get it or we're crazy. It's really exciting to inhale the fact that these solutions are coming to unicorn businesses like Mike's, to, you know, games like what Amy is doing, to Lolly, like what Audrey's doing, and regular rewards to regular people. More and more people are being educated about it. And this is all starting to work seamlessly for regular companies. And that's really in the beginning of the revolution. And, you know, from here on, you know, we know that this is going to have a major impact on society, on how work is conducted, etc.
We're almost out of time. Amy, where can people find you?
Yeah, sure. So our website is blingfi.com. And from our website, you can just get to our Twitter, Facebook, Instagram. I'm Amy Y. Wan on Twitter. And yeah, you know, we are on the Android Google Play Store, so you can download our games there. You can just look up Bling or just look up Bitcoin and you'll find our games.
Awesome. Mike, you got it right.
Yeah, you can Google us at Yanolja, and you can find us at yanolja.com. And yeah, it was really exciting to be here. It was my second summit or the conference next to the Consensus 2020 this summer. I think most of the crypto or the blockchain company should be doing more productive jobs now and to actually generate more values to the users. And Yanolja, as it says, the name of the company is actually called Let's Play in Korean. So I think the gamification and also the crypto should be more promoted in Korea, and we'll do our best to actually give those services to our users.
Awesome. It's been a pleasure, peeps. You know, God bless y'all. And we are out of time, and I'm easy to find, cryptobeatles.com. So awesome, peeps. Well, I guess they'll cut us off any second here. It was a pleasure talking with all
Robert.
Businesses.
So you've heard about these two cryptos that are going to explode?
Names. Oh, I'm posting your karaoke video.
You said you deleted it. Okay. There's two. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro, sign up for free.
Buying the cryptos?
No, I'm watching you live in La Vida Loca.
Another great discussion. It's quite interesting how you can earn crypto by merely doing your everyday activities. With the economic swing caused by COVID-19, we've seen the U.S. Federal Reserve's money printers go brrr. As a result, you have public companies hedging against inflation by buying hundreds of millions of dollars in Bitcoin. But why? What's the strategy here? And how come Bitcoin and not the typical victim, gold? Up next, we have Charlie Bovaird of Quantum Economics and is a Forbes senior contributor answering the exact question with the help of Tavi Costa from Crescent Capital, Jake Ryan of Treecap Capital, William Herman of Wilshire Phoenix, Matthew Graham of Sino Global Capital.
Hello all. Welcome to the latest panel at LA Blockchain Summit, Why Bitcoin Makes a Good Inflation Hedge. My name is Charles Bovaird, and I am Vice President of Content for financial services firm Quantum Economics and a Forbes senior contributor. Joining us for the panel today, we have Matthew Graham, CEO of Sino Capital, Jake Ryan, founder and CIO of Tradecraft Capital, William Herman, founder and managing partner of Wilshire Phoenix, and Octavio Costa, partner and portfolio manager at Crescent Capital. Now, to get some thoughts from our panelists, we would like to ask a few questions. All right, so first of all, the world's central banks have printed trillions of dollars worth of currency this year. The Federal Reserve, for example, had printed roughly $3 trillion in new currency this year, the last time I checked. It is certainly worth emphasizing at this point that Bitcoin's total supply is capped at approximately 21 million units. If central banks continue to print money, how do you expect this to impact inflation? Would anybody like to jump in first?
I would answer thusly. I tend to approach things a little differently from many in the Bitcoin space because I'm really more of a Keynesian than an Austrian economist in terms of economic school philosophy. But I would be greatly concerned, not so much about the short run because of the exceptional situation, but the fact that we now have a 5-year span where M2 growth has exceeded GDP for the first time since the 70s, and before that, the 40s. And then you couple that with the fact that for decades now, we've had disinflationary pressures from globalization, and there's a very strong chance that much of that is going to be unwound. So I think it's not so much about 2020, it's about the longer timeframes and the potential globalization fallout. That's how I would take a look at it.
All right, I'll do my take then. I think there has been a lot of deflationary forces in the technological advancements we've had so far that had an impact on that. I think that money velocity has been a major reason why we haven't seen inflation as well. But in my view, aside from asset prices that have been rising significantly all over the world, what we have, in my view, is that commodities really haven't moved. We've had a decade in which almost any commodity you look at, from oil to natural gas to iron ore and copper, even silver, went down significantly for the last 10 years. Just recently, some of those started to move up. I think that certainly had an impact on consumer prices in general, and allowed the Federal Reserve to continue to keep cheap money in general. I think cheap money has also, in a way, allowed companies to survive in an environment they wouldn't even probably survive in the 70s or 60s during much higher cost of capital. So I think in the following years, I believe strongly that the amount of leverage we have in the global economic system most likely would lead to some sort of geopolitical issues in which could cause supply disruptions in commodity prices in general. I think at some point investors will start putting money into hard assets. And when we see commodity prices rising significantly from cyclical to defensive commodities, you name it, I think that's when inflation will begin to pick up overall. So far, I think that has been a major reason why we haven't seen inflation is commodity prices, in my view. Not to mention the debasement of currencies is another issue, but I think it's separate from the actual consumer price inflation that you're referring to, I think, in your question.
My
Yes,
take
I
would
mean,
be a little bit different. I think the data supports that monetary easing is deflationary. And as we print more money and have lower and lower interest rates, we're seeing that really affects the economy in an adverse way by stunting growth. So I don't think the impact of just the Fed itself is inflationary. What creates the inflation is in addition to easing monetary policy, is we're now getting fiscal policy. We're starting to get more and more spending around the globe. The Treasury, is getting more and more in debt, and we're going out and we're going to be spending. We have a stimulus bill that's already passed here in the U.S. through Congress, and they're looking at a second. And I think it's the combination of monetary and fiscal policy together that could cause inflation in the future. But we've spent more than a decade with just the Fed's printing money and monetary policy, and that has not produced inflation. So I would suspect, and we've seen that for probably 3 decades in Japan. So it's not just the printing of money, it's the fiscal side as well that really is going to create the inflation of the future.
okay, so if I may clarify, when you basically said that we had a decade where it was all the central banks that were stimulating the economy, right?
Well, the Fed through monetary policy and monetary easing, was really creating inflation.
Okay, great, right.
Yeah,
So,
can I just jump in? I think we all know the Fed has been basically controlling, not only interest rates but therefore risk assets generally for the last 12 years. So I think when people say this time is different and what have you, I think that's usually the wrong thing, or typically the wrong thing to say. But I think truly this time is different. We're in truly unprecedented land. I don't know if this if this is the next crisis happens in 6 months, a year, 5 years, 10 years, but I think this next one will be the big one, and I think it'll probably lead to or to begin with kind of losing faith in or maybe the U.S. dollar kind of losing its reserve status. I think that could probably start it, and I guess it's something that wouldn't be. I look at short term or define intermediate term, but I don't think it's something that I'm looking at in the next 2 years or so, 2 to 5 years, maybe longer.
okay. So does anybody have any final thoughts on that question?
I think the fiscal stimulus point is a valid point. I think, back in after the World War II, certainly that was a huge impact on inflationary forces, and perhaps why it's certainly a more direct way of intervening in the economy overall. What we've seen so far is literally helicopter money. It's money coming into, and for everyone's pockets, and you use that to spend money. So aggregate demand has not been, hasn't increased yet. So the fiscal stimulus so far hasn't really had an impact on aggregate demand. And if that does, I think that would certainly create inflationary forces. Again, there's 2 ways to do that. One of them is going to be through demand, and the other one's going to be through supply. And supply is in my view, through commodities. And in the 70s, it didn't really matter what was happening in the fiscal or the monetary side of things. We've had a oil shock, and that caused the whole inflationary forces to move higher globally. So we haven't had a shock like that in a real long time. And I think if we do, as we've seen in history, amount of leverage in the system tends to cause either war or geopolitical issues. I think there's a pretty high probability that could happen in the next few years.
The amount of leverage in the system too means that if you raise interest rates, that's going to have a much more difficult time tempering inflation. There are a lot of things that quickly add up and create a riskier long-term situation.
And again, and apart from that too, is the Fed's, sort of own debt service payments on its own interests when they're raising, it's in potentially a rising rate environment could cause.
They're never going to raise rates, and
naturally, even the natural progression of raising rates have been going up naturally. over the last several weeks. So, they can control what they can control, but at the end of the day, it's a market, and I'm not sure how much longer. Like I said, I don't have a crystal ball, but
You're holding out on us here.
Yeah. I mean, yeah, I do. I'm just holding out.
It's no longer a market. I mean,
well, I think the most interesting thing actually that you said was about was bringing up the potential implications of USD losing its reserve currency, but you didn't. You mentioned that could be one scenario on the horizon. I'd love to know more about what you think that might look like. I don't know if we have time or not, though.
Yeah, I mean, I do have my crystal ball just came out, so it does not look good. Okay. I think there's America as a sort of the world superpower or what have you. I think with other countries sort of I don't think anybody's exceeded us, but I don't think it's the end of the world if the U.S. dollar uses the reserve status. But it's going to be a really big deal for financial markets and global markets around the world, and it would probably cause a lot of disruption to the system.
I have issues with that view. So who would it lose it to?
I mean, does it really matter?
Yeah, well,
I mean, I just don't see any. It doesn't matter, but I mean, yeah.
I mean, look, the first
yeah,
thing.
I mean, who would you give it to, right? I guess it's the the cleanest dirty dirty shirt, right? So you look at, could be the euro, maybe the Swiss franc, but yeah, I mean, I don't scenarios, right? I think maybe my crystal ball was wrong there, but no, I mean, it's something that certainly you can't take it off the table, Tommy. I mean, you just can't. I mean,
what can I not take off the table?
I'm
not. I'm just asking.
Who do you think is a good candidate?
I don't believe that's my base case scenario. I mean, some people argue that would be China. I would strongly argue that that's probably not going to be the case.
Euro, I think that's highly unlikely to be China, but yeah.
You think it's China?
I would be highly unlikely.
Unlikely.
Yeah. So who would you think that would? I think it's a valid. By no means.
It's a good view. It's a fantastic question. That's why I was kind of asking kind of back at you. Who do you guys think would be?
I personally think the dollar is fundamentally stronger than any other fiat currency in the world today. I can't think of any other currency that would be better than the dollar. I'm not saying that that doesn't create an environment where monetary stimulus begin to just be used to fund fiscal stimulus, and the two mandates that central banks now have is to keep equity markets high valuations afloat at the same time as suppress interest rates. And somebody else made a point about they can't raise rates right now. They can't. You're right, and they have to continue to purchase treasuries and to suppress rates going forward. It's a good question about who possibly could take over the dollar, but I just can't think of one reasonably.
Here's my suggestion. My suggestion is that it's a scenario that can't be ruled out, but if you start to talk about what would a world look like that did not have USD as a reserve currency, my suggestion is the most likely scenario, if we take that as a premise, is that it would be a multi-polar world. I don't think it would be euro comes in and that's the reserve currency, renminbi. That seems to me much less likely than multipolar. Renminbi, of course, is an extremely complicated situation because it's not a free-floating currency, first and foremost. But I do think that in neighboring countries, especially with the promulgation of DCEP, that we could start to see more and more contracts denominated in renminbi, international contracts between major entities. We could see more and more renminbi on the balance sheet in neighboring countries that are geopolitically economically very much intertwined, if not dependent, on the People's Republic of China. That's kind of my sentiment.
Yeah. Look, it's possible. There's $50 trillion of assets in the banking system in China. It's a highly levered economy. I'm not saying other economies aren't, but usually throughout history, what we see is the monetary debasement of those places going forward as a consequence of this debt buildup. But I think we're in the race to the bottom for all fiat currencies. Personally, hard assets look pretty interesting.
Okay, gentlemen, I'd like to move on to the next question. Thank you for all the input on this particular inquiry. So we meant various factors were brought up that could potentially push prices higher in the future. So what I'm wondering is that if, for example, you mentioned helicopter money, but you said that it hasn't boosted aggregate demand yet. No, so for example, if helicopter money boosts aggregate demand and pushes it to the right, and if you take these other factors and they combine to push prices higher, I mean, that could show up in both traditional inflation measures, for example, the consumer price index, but also the price of assets. So guess what I'm saying is that if prices get pushed higher, do you think that it will show up equally between the CPI and asset prices?
Is that a question to me? Or sorry?
I think there's a couple of ways that could happen. One, if you think about everybody, we have consumption and production. And if everybody's at home getting stimulus checks, continuing their consumption and keeping that as a status quo, but less and less people are going to work and producing, then we're going to have a lot less stuff and we're going to be competing on that. And the only way that's going to resolve is higher prices. So there's a lot of ways that we can get core inflation or CPI inflation. It may not just be an increase in aggregate demand. There may be changes in production just because of the pandemic. And then I think really if it's just asset price inflation or if it's really Main Street core inflation will largely be determined by how much is this coming from the Treasury and fiscal policy versus how much is coming from the Fed, Treasury and the fiscal policy with Fed and monetary policy. If they're both working in concert, if the Fed becomes less and less independent, more and more meshed with the Treasury, then I think you're going to see, more rules get redefined, more ideas of buying, corporate bonds, buying equities, buying other assets, getting more exotic in our monetary easing policy. And as the Fed and the Treasury become more and more one entity, you're really talking about money printing that banana republics and many other countries that really have seen high inflation will start to see that. So again, it will be what is the mix of monetary and fiscal policy that will really change that, in my opinion.
Okay. Would anybody else like to weigh in?
For me, I think the probability of asset bubbles is considerably larger than the probability of CPI inflation in the short and medium term.
Okay.
I'm much more concerned about the possibility of S&P 500, for example, decoupling from intrinsic value. I think that's something that is much more front and center, short and medium term.
You don't think it?
So S&P decoupling from
what's that?
The S&P decoupling from intrinsic value. What do you?
Intrinsic value? Sure.
No,
so,
I understand I understand what intrinsic value.
Oh, sorry.
Yeah. I'm just never really heard that. So what do you? I mean, that I think. Are you talking about higher multiples, earnings multiples, or what do you?
Yes.
Okay.
Yeah.
Yeah. I mean, how much higher can it really?
Yeah. Equity bubble.
We're already unprecedented.
Sure. So I think that's a good point. I would concur that it's a current concern rather than a theoretical concern. I would agree with that.
Yeah, if we have unlimited money chasing limited stuff, then that limited stuff is going to get more and more expensive. So stocks, gold, bring it back to Bitcoin. Anything that is going to be more scarce is going to get more expensive as we get more and more, more and more. The denominator of that becomes higher and higher, and we print more and more money. So yeah, I definitely think we'll see asset price inflation to continue. And I think those more rare, more scarce, more provably scarce assets are going to do much better in an environment like that.
I'll weigh in a little bit. Well, I do think that would show up on the CPI, even though it is largely manipulated index, but it would probably show up in a significant way, perhaps very understated. There is an issue we've seen so far in one part of the market, car prices. We've had it hasn't been driven by demand. It's not like people are buying cars left and right. The issue with car prices that are all-time highs, it looks like the NASDAQ index. If you look at used car prices today, it's mostly due to a lack of production. A lot of companies, due to the pandemic, have not produced cars as much. So if you're shopping for a car right now, you might have to pay 10 grand more than you used to pay on a car. That's just due to a lack of supply, a disruption there. So that's one thing. I think the question about inflation, which is perhaps a little bit related but different than the debasement, is a very big deal for especially the equity market. At multiples that we are today, pretty much at all-time highs in any fundamental metric you look at, I think it's going to be very difficult to justify those valuations if we have inflation in the horizon. So I think that could certainly change the picture for inflation. As a money manager, I think it's important to search for assets that are cheap relative to the money supply index, for instance. You can find, commodities are a very great example of that. If you look at equity prices today relative to money supply, basically they're all-time highs. They're retesting levels of the tech bubble today. So it's very difficult, but I think that inflation is a very important question for any equity investor today. And it will probably mean lower growth if we do have that happening going forward.
Okay, so you mentioned that it's important to seek out assets that are provably scarce. So what I'd like to get into is if prices continue, if prices push higher, whether it's for the consumer price index and or the price of assets, what do you think that sort of thing, what impact would that have on Bitcoin?
Well, I think it's going to do particularly well in that environment when we have, let's talk about gold and Bitcoin for a little bit. I mean, gold, we have to assay, we have to insure, we have to store. We've seen the greatest scam, I think, in gold, a couple $2 billion worth in China of it being tungsten and not real gold. So the idea of provable scarcity is one that is becoming more and more interesting to more and more investors. Bitcoin implementing the first idea of triple entry accounting, the idea of being able to know exactly and prove exactly who owns every piece of parcel and Bitcoin. That the whole idea of triple entry accounting and being able to have a cross-boundary system that allows you to look for and ensure ownership is going to be more and more interesting. So I think that coupled with its scarcity and its increasing acceptability in the financial markets and other markets are just going to do very well for Bitcoin medium term and long term.
I'll lean in then. Well, I think that the monetary stimulus and extremes that we've seen so far will probably make investors search for alternatives of the monetary system. Bitcoin certainly fits that category, along with gold and silver, and some others that have fit in the past, copper, for instance, but have a much more cyclical aspect to it. Bitcoin does have too, and certainly a technological advancement aspect to it as well. and perhaps why it moves sometimes very closely with the S&P 500 at some periods of times in terms of correlations, daily, weekly, or monthly, not all the time. So I think it certainly could benefit from this environment. It's what I call the supercharged environment, in which central banks have been expanding their monetary base to suppress interest rates. That is a perfect mix for any asset that serves as an alternative for the monetary system. Gold would be it's a bigger market. It's not going to move as much as other assets that perhaps are more asymmetric. Bitcoin, silver are very similar in that way. They have much more room for growth. But I think gold will probably lead the way, not in terms of appreciation of price, just given the credibility and the likelihood of larger pension funds and larger investors to come across the thesis of gold in general versus other assets. But that will certainly benefit Bitcoin and silver and miners and other related assets that are linked to the monetary system.
Yeah, and I think it's to all your guys' points. I think it's just sort of sort of alternative assets generally. Call it hard assets, right? And that sort of include Bitcoin in that bucket, even though it's not something you can hold or touch. But I think it's sort of it fits right in that bucket, and it's going to be interesting to see how it does appear or does perform in an inflationary environment, because obviously Bitcoin has never existed in an inflationary environment. And we can sort of go back and see how gold has performed over time in inflationary periods, and silver and different hard assets. So it'll certainly be interesting to see what actually does happen when it occurs.
Sure. So, yeah, I would phrase it like this. So since its genesis, Bitcoin has mostly been correlated to crypto-related things. But as it continues to mature as an asset class, these discussions about correlation in the S&P 500, things like that, they become much more serious, much more realistic. If you subscribe to Paul Tudor Jones's Great Monetary Inflation Theory, and I would encourage you to read his investor letter from earlier this year, he has a fantastic analysis of Bitcoin relative to other potential ways to play the GMI. And so he talks about how you have different horses and you want to choose the fastest horse. And so some horses might be going long the NASDAQ 100, going long gold, going long Bitcoin, playing treasuries, long the 2, short the 30. And so the interesting thing is that Bitcoin, you could make a strong case that it's now one of the fastest horses. And certainly it's one of the horses that you would want in your stable. And that's something that's very new and very important for people that work in the blockchain sector.
Yeah, I would add on that too. We started with the idea of provable scarcity in this topic. And I think if we look at collectibles like rare cars, rare wine, and how those have done over the last 10 years, you've seen a great outperformance compared to S&P 500. So really collectible art, really collectible wine and cars, because of their provable scarcity, are really outperforming the markets. And I think that we can take that into our crypto thesis and really add why Bitcoin and its provable scarcity will do well in the coming environment.
Good point.
I would caveat that though. I would say in the scenario where wealth inequality continues to increase, or at least doesn't decrease, which I'm not totally convinced we haven't reached a tipping point in that regard.
Yeah, great point. And also the with fine wines, collectibles, and art, I think it's about access too, and I think that kind of goes into the to your point, Matthew, about the sort of inequality type thing, and so on.
Okay, so I'd like to thank every single last one of you for making some excellent points. It's time to wrap this up, and I'd like to thank everybody for joining us.
Thanks so much.
Thank you. It's a pleasure.
Thank you.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
One donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Fancy a donut?
Can I have jam, please?
Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just bite that?
You won't even notice, it's very small.
Oh, it's a new one. You don't have to bite.
That's my commission.
But it's out of my donut. I was expecting 100% of a donut. What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way. Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise...
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. Right there.
eToro. Join now.
So you've heard about these 2 cryptos that are going to explode?
Names. Oh, I'm posting your karaoke video.
You said you deleted it. Okay. There's 2. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro. Sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
I got 2 words for you, bestie. eToro Copy Trader. Just find a top investor on eToro and hit copy. From now on, whenever they make a trade, you make the same trade automatically. Neato! eToro.
If I had $1 for every time I heard, we're putting this on the blockchain, I'd be able to fuel an entire ETH DAI pool and earn more uni. All jokes aside, there's a ton of incredible real-world use cases for blockchain technology that extends way beyond the scope of what you would have imagined. To add further clarity on this matter, help me welcome Jared Wynn of Wynn Solutions as he takes us through other insightful application examples with Huron Mula of Expert, David Post of Trust Your Supplier, Kieran McGowan of WeTrade, Maya Vunevovic of O Group, and Halsey Miner, founder of VideoCoin Network and CNET.
All right. Hello, everyone. Welcome to LA Blockchain Summit. We are very excited to share this panel with you regarding real-world blockchain use cases. This is easily a panel that could extend through the entire conference if we had allocated enough time for it. But that said, we're going to keep it very high level and give you as much information in as little time possible in this 27 minutes. With me, I have a very diverse group of individuals who are both have corporate experience as well as just very niche blockchain experience in a number of different verticals. So that said, you're going to get a lot of information out of this panel. I'm sure of that. And we'll be able to speak much more beyond that of just Bitcoin and other things that most people are aware of what blockchain can do. So that said, we'll start with some quick introductions and then get quick into content. My name is Jared Wynn. I'm the founder of Wynn Solutions and a blockchain philanthropist. Formerly, I was a vice president at Binance in their charity sector. I focus on, at this point, marketing and public relations, as well as helping to frame the messaging behind blockchain products and blockchain solutions. And very excited to be moderating this panel for everybody here today. Halsey, I'll hand over to you.
Hi, I run, I'm in charge of the VideoCoin Network. I'm the CEO of Live Planet, and we're directly responsible for building the VideoCoin Network.
Great. Maya?
Hi, I'm Maya Vujanovic. I run O Group. I've been in the space since 2010. Was a former CIO at General Electric and a catalyst for General Electric using blockchain across all the business verticals.
Wonderful. Kieran?
Hi, Jared. Kieran McGowan here from WeTrade in Dublin, Ireland. And we effectively provide liquidity, cash flow, enhancement for merchants. 15 banks live on the WeTrade platform at the moment, and really we're giving access to those merchants for bank guarantees, invoice financing, credit insurance. Really, it's all about cash flow, really, Jared. Previously, I worked in various technology companies in Ireland, Eon Tech, Phineas, and Retail Emotion, among others.
Wonderful. Thank you so much. Haroon.
Yeah, I'm Haroon, co-founder and CEO of Epilert, a startup working on medical technology. We're trying to detect and monitor epilepsy seizures and put the whole data sets on a blockchain. And I've previously worked on a fintech startup.
Great, thank you so much. And lastly, David.
Hi, David Post. I'm the managing director for Trust Your Supplier. It's a joint initiative between IBM and Chainyard, and it's a network-based approach to supplier onboarding and validation, building a decentralized corporate identity for the first time. We have about 30 plus Fortune 500 companies signed up, and I'm having fun with it. Thanks for having me.
Wonderful, thanks for being here, and thank you everyone for being here. So as a quick high level, when people think of blockchain, they typically correlate with Bitcoin. Bitcoin was one of the first use cases that we were all able to witness of blockchain, which was a kind of a revolutionary technology for us to think, how can this otherwise be used? Many people today still don't understand how blockchain works, and it took me some time in myself to actually understand it fully. But essentially, think of blockchain as the removal of trust between a transaction. Typically for transactions to occur from one point to another, there has to be a middleman or a human interaction. And with human interaction, you get variability. You never know how a human's going to behave in one way or another. And with that, trust and reputation is what comes behind major brands such as MasterCard, American Express, Visa, the major companies that we trust to transfer our funds from point A to point B. Now, there is a better way to do this, and that's why we're all here, and that's called blockchain, in which code does not ever falter. It doesn't behave in one way or the other based on a gain or a loss. It will always act the way that we instruct it to, which leads us to artificial intelligence, leads us to many different use cases for blockchain in itself. What I'd like to do is kind of start with Halsey to talk about how blockchain actually really can benefit, or how the video industry of all things can benefit from blockchain. Now, with blockchain specifically, latency is a big issue. The amount of time that it takes for one thing to happen. Video is very high demand. So Halsey, I'm very interested to hear, how can that industry benefit from integrating blockchain into the infrastructure?
Well, it's interesting. In one way, we do exactly what Bitcoin does. So what's amazing about Bitcoin is, without anybody asking anybody to go out and buy hardware and set it up and process transactions and get paid, there was this massive network, probably the largest computational network ever in the entire world, was built without one person being asked to do anything. So what we do is we borrow that idea and we take advantage of the 30 to 40% of servers that today are sitting in data centers doing nothing, because they've already uploaded their data center basically to the cloud. And that means that they've got tens of billions of dollars in servers that are doing nothing. And so what we do is we use those servers in the same way that Amazon uses the servers they buy to process video. So by using servers that people have that they're not using and they're willing to get some money versus nothing, we can lower the overall cost of processing video, which obviously in this environment is incredibly important, because there's a explosion going on in video if people haven't noticed.
Absolutely. And I have some background in video analytics, and I know the intensity that it requires in terms of GPU processing and everything that comes with it. And with that, there's a big apprehension to use cloud when it comes to that. Do you feel that cloud in itself is broken in that way? And do you think that blockchain can improve upon it?
No, I was actually the co-founder of Salesforce.com and spent a good part of my time helping to build that. And I think cloud is very good for certain kinds of things. I think what's important now is, as we go into a 5G world, 5G is all about very low latency. And so that means that all of the hardware needs to get pushed towards the edge. So the cloud was very successful at reducing cost and complexity. But now that we have 5G and we need low latency, it's all going to flip on itself. It always is. Computing always goes, consolidated, decentralized, consolidated. So 5G is the architecture that we built for VideoCoin is pretty much how all applications are going to be built going forward. if they want to take advantage of 5G's low latency capability, which is a big part of what 5G is.
Yes. And just to add to that for everybody, 5G being the 5th generation of wireless technology is going to essentially revolutionize the way that we do things now. Right now with cellular technology, you'll get anywhere from 30 milliseconds up to even 300 milliseconds on the transfer of data from one to another. I saw at one point somebody trying to play virtual reality with a soccer helmet, and they weren't able to do it on current cell phone technology because the soccer ball would fly past them and they couldn't block it. On 5G, they could, because the amount of distance between the cell tower and the user itself is shortened, as well as the fiber optic layout that's kind of the backbone behind it. So 5G and blockchain in itself, it's going to be kind of the pinnacle is what we're reaching, this technological revolution. So do you see any other ways that 5G will impact blockchain? Halsey.
Oh, for me?
Yes.
Specifically? Oh, I think they are completely complementary technologies, because I don't really know any other way that you can get the decentralization of hardware that's necessary for 5G. There's no, all of the development for the last 15 years has been putting stuff in bigger and bigger clouds, and now we have to completely reverse that. And the technology to reverse that is blockchain, because blockchain is designed to be distributed. The only problem is just the speed at which the blockchain needs to operate, and the way you need to set your blockchain up so that it's very, very low latency, and that requires things like staking and other complicated thoughts. But blockchain and 5G are pals. They're joined at the hip.
Yes, I completely agree. Well, thank you so much for that, Halsey, and I think I'm very excited to see how that continues to progress with your project. And I'd like to do a little bit of a pivot here. And Kieran, you specifically have done a significant amount of work more relevant to COVID-19, and just we've all experienced the different impacts that this has had on us financially. I myself, owning 2 businesses, the PPP loan process in the United States was absolutely egregious. It took me 2-3 months to receive funding in a situation that many weren't able to wait. Many people lost their businesses as a result of these delays. So I'm curious, based on your practice and your expertise, how did Europe do with this process? Firstly, let's talk about that with regards to this fund distribution, and in what ways do you think blockchain could have improved upon it?
Yeah, I think we had similar problems in Europe, Jared. If you think about businesses, they were under severe pressure, having to lay off staff, having just not able to pay bills, and they needed support, and they needed support fast. And a lot of processes were very manual, just took too long, and companies went under because they didn't have sufficient support to keep them alive. And I think in a blockchain scenario, if you had all of the relevant parties together on a blockchain, so if you think of the PPP you've just mentioned there, you've got the small businesses, you've got the US Small Business Administration, you have the banks, the revenue, and maybe other government bodies. I think the key thing around the blockchain is a consensus mechanism, so that all of those parties could agree on the conditions to really support those businesses. So if you think of the PPP, it was really about giving loans to those businesses, giving them in a fast and efficient way. It's a 1% rate that was applied. The blockchain would control whether it would be a 2-year term or 5-year term, managing the deferrals, and really just setting out the conditions for forgiveness, because that's really what it was all about, that these loans were applied, and companies who are maintaining their employees or quickly rehiring their employees, they were able to get forgiveness for those loans. So really the validation and using a smart contract scenario to make sure that the proof was provided either through tax returns or sort of receipts for employment tax. So that mechanism, if it was in place in a blockchain environment, could have really solved that problem, because it's all about bringing those, what you say, digital islands together, bringing all of those people together, and the proper mechanism and consensus facility really to bring the speedy as loan facilities to those businesses that were needed. A speed and also then the immutability of the records and then analytics and tracking things like which businesses were able to survive through those loans being provided, and the analytics to know how better to do it again in the future. So it would have been a perfect scenario for blockchain.
I completely agree. And with that, it's needless to say that we were not prepared medically, financially, whatsoever for this pandemic. But that said, there could have been a much smoother path. And I think that that's going to be realized through this process, was that things could have been better. Things could have been done better. And prior to this pandemic, I was actually working hand in hand with the Carolinas with respect to trying to implement something for FEMA relief. They had just encountered Dorian, where there had been a long period of 3 months where there weren't any funds distributed for the rebuilding of these houses and homes that had otherwise been destroyed. Whereas a blockchain transaction can take seconds to minutes. So there's definitely opportunity on the horizon. It's just a matter of how do we get this to be leveraged? And with that, I'd like to hand off to Maya, who had former experience with General Electric. Maya, I'd love to hear a little bit about how you were able to incorporate blockchain into day-to-day and what you had to do to get some of that buy-in at such a large corporation.
Yeah, that's a good one. It was in 2014 when that started in 15, so it's really early for the corporates. But as I said, I've been involved in it since the beginning. It was part of really early projects and some of the stable coins in the space. It wasn't an easy buy-in, right? They equated Bitcoin to blockchain, right? So if you talked about blockchain, they thought that it was a Bitcoin and there's no purpose to it, right? So it took a little bit, but what was interesting is actually going back to Halsley's point, really interesting in terms of computing power. One of the crazy ideas I had that got me in front of FAA was to use the airline engine energy, right? So as GEs of the world produce these airline engines, you produce a lot of electricity, right? So that electricity, I asked to the CEO of aviation, what do you do with the electricity? And he said, well, we ground it. And so we don't use it for anything. And that is massive amounts of electricity can power like New York City. So I turned around and we created a project that actually, I had a suggestion to attach blockchain and Bitcoin machines and really pay for the whole division. And the only reason it didn't pass is because it was really early on, and we really could have powered most of the business divisions by just using the electricity that we produce on those. So going back to some unused assets and unused power. And I will never forget this, right? I mean, being a woman, bunch of, 50-year-olds sitting in front of me in 2015, and I'm telling them to attach a machine to and mine Bitcoin and to really pay for a failing division. That division was failing. And it didn't pass by a general counsel because Bitcoin was considered to be a naughty transaction where you buy guns and porn and other things, right?
So the stigma was against you in that.
That's right. So I think that part was quite interesting. I've learned a lot. And that's actually met Bitfury and really early on. But really what happened later on, 6 months later, is we've devised a number of different cases. And so attestation of devices, energy use cases, aviation. And by the way, talk about COVID. Last year, I believe, application went live on Microsoft Azure and GE on traceability of foods and airline business and safety. So that is, I think it's called Food. You can Google it, and it is live. Reality is also twofold, right? That a lot of the data that's in these corporates is extremely polluted and not clean. And so it takes a while to get it into cloud and transition of that and cleanliness of data and really figuring out what the next business models will be, right? For some of these areas in the world and some of the customers. And then really combining it with artificial intelligence and blockchain, right? Otherwise, it's very expensive and it's inefficient. And there are just really great databases you can use without using a blockchain, and you can solve it. Now, as we go into 5G and other things, and as things become more digitized, I think it becomes a really interesting race who's going to have a super highway that, you know, that is a blockchain that will be able to, right, compute everything else that we need. So, but I could talk about different use cases that, and to this day, right, GE is using it in aviation, in energy, in IoT, trade finance. That was another project that we did with JP Morgan. So yeah.
It's very interesting that you mention a lot of that, and it's always a battle. I mean, the reason that we're here at this conference today for a lot of us is learning, and I think that the battle for blockchain adoption will be based on education. And to educate, you have to have those ambassadors, the people that will be able to help people to understand. And 2014 was definitely a bit early. There wasn't enough to really be of a foundation, and people would think Bitcoin, isn't that what people lost houses? Isn't that what people use on the dark web? So on and so forth. And I remember speaking to Anthony Pompliano actually about this, in which he actually had a business that was for recycling of tires or rubber products. And he used the byproduct, the aftermath, that energy, to mine Bitcoin. So it was a very similar basis where it was like, how do we make profit, or how do we essentially recuperate some of these costs associated with this process? So I think that
Jared, Jared, and actually that just reminds me of one of the things that I think is very useful is fraud and 3D printing. Right, mm-hmm. That's where it's really, really useful, because you have a lot of cyber attacks in these companies that are producing materials through 3D printers and for designs, and that comes unfortunately out of Asia a lot. And blockchain is a very, very good use case for that. Excellent use case. I forgot about that. Sorry.
No, that's a very good one, and it brings up another topic in which it kind of follows the process of supply chains when it comes to blockchain. Is when you have many hands in the process of, you know, the manufacturing all the way through the delivery and distribution of a product, there is a lot of opportunity for corruption. And with that, there can be opportunities for swaps and counterfeits and bribes, and people will lie at times to, of course, get the better or the upper hand. Haroon, I believe that you actually have some focus on this as well, with what you've done in medicine. With your practice and what you've done, how have you leveraged blockchain in the medicine field specifically?
Yeah, so basically, I believe that blockchain in general is a very great way to deregulating government, to make governance even better. And the idea of having a third impartial party seems very odd. Whether it's in finance, in the medical field, having a third impartial party that we call it blockchain, take care of stuff that government usually over-regulate, just like medical data, which is something that makes sense, because after all, we don't want our medical data somewhere that is suspicious. So basically, we're trying to implement a blockchain database that is trustworthy in order to store basically the patient's data. So basically, we do bracelets for epilepsy detection and monitoring. We have 5 biosensors in addition to data logged by the patient. So it's a very sensitive data. The idea is, as we work with governments, we want to prove to them that it's necessary that things like GDPR are implemented roughly and killing small business, because I mean, to comply, you need plenty of money, right? So the idea is going with blockchain in finance or in the medical field, or even in smart contract, to having less regulation and corruptible processes is a very interesting thing. And that's the idea, basically. That's the revolution behind Bitcoin and blockchain, making governance faster, making less regulation but better governance. That's the whole idea behind this revolution, I think.
I agree. And data privacy, as you touched on, is such a chief concern, especially in today's situation of this pandemic, is that people want privacy and they want ownership over the data that they have, especially when it comes to their medical records. What you were saying with your those bracelets and whatnot, also a perfect use case for is why 5G is necessary. You do not want to delay when it comes to having epilepsy of any kind. You need to have that prompt and quick in order to have a quick response time. And there's a number of corporations that we know today that are incorporating blockchain use cases. Microsoft is one of them. IBM being another. David, you have almost a decade worth of experience with IBM, and we were talking about supply chains and basically how blockchain complements that to ensure the seamless transfer and the trustworthy transfer of goods along a process. I'd love to hear a little bit more about how you incorporated blockchain into your day-to-day and maybe some use cases that you had with your job.
Yeah, I mean, blockchain has been my day-to-day for the past couple of years, so that's been pretty fun. And as I mentioned at the outset, the use case that I've been most focused on is kind of in the realm of digital corporate identity. So you were talking about your experiences during the early days of COVID. We noticed the same thing in the PPE space. So essentially, it was a very messed up market. If you're trying to buy a mask or buy gloves or buy hand sanitizer, there was kind of bad actors on both the supply and the demand side of the fence, which is extremely unusual in the context of any well-functioning market. So this was probably the worst functioning market I've ever seen. And part of the problem was that the process by which organizations qualify and identify suppliers is really point to point. So it takes place somewhere in the ether. I use the analogy, everyone needs the same information, but it's like if you had to get a new driver's license every time you cross a state boundary. They want your picture, they want your basic identity information. This is by and large the case in kind of corporate procurement divisions. So throughout COVID, you had lots of bad suppliers all being qualified and hopefully weeded out by companies basically doing a repetitive process over and over again. So our thesis with Trust Your Supplier, and this is kind of why we spun up a COVID-specific instance during that time, is that it's much more efficient for all parties involved if there's one place where you can go to access identity information. So for Trust Your Supplier, it's a very powerful, very interesting use case. It's good for suppliers. They have all their information in one place. They can permission that data to any buyer on the network. On the flip side, buyers of large Fortune 500 buyers specifically have set up large, elaborate structures to process compliance information. But they can access that just like a LinkedIn invitation at the click of a button. So by basically, I think if you look at the building blocks of Web 3.0, it's going to be identity and payments. In order to have companies be able to seamlessly transact, and including decentralized use cases, there has to be a credible source of identity that can be pinged via APIs. And while our initial use cases around supplier onboarding and validation, when we're successful, I think this will be the corporate identity standard. And you can use your imagination. Anyone who's in the blockchain space, there's a lot of cool things that can happen once you have a trusted source of identity or a digital passport that's portable across time and space.
So with that use case specifically, what would you say the main, I guess, complement of blockchain was? Was it the immutability, the fact that there was no third-party ownership of the data, or that the process of onboarding was embedded in code? What would you feel was really why blockchain in that versus a centralized database?
I think everybody talks about immutability and security when they talk about blockchain, but I think one of the underemphasized points is the business process automation component. So I would say that the reason why we built this on blockchain is not so much for the initial use case, which could be done with a centralized database, but it's more for subsequent use cases. So if you think about a situation where companies are all contracting out with third-party validators to basically conduct the same assessment, if you talk about a manufacturer with tier 3 or tier 4 suppliers in that value chain, you could basically, if you're a company in this type of a trust your supplier world, you could specify other companies and other validators that you trust. And then once that validation activity happens, you don't need to know who conducted the validation. All you need to do, which company did it, all you need to know that it had happened. So that greatly improves processes. If you're trying to do business with a new company, if you're trying to look at a supply chain risk, a network is much more inherently attractive way and efficient way to transact than a point-to-point basis. That's why we see Uber and Airbnb and eBay. These are networks. So the advantages here is once you're able to establish that underlying source of identity, you can then automate a lot of business processes on top of it. And that really, I think, speaks to how Web 3.0 will be enabled. You have to have a degree of automation. And the only way that you can really do that is if you're sure that transactions happened, even if you're not sure who actually did those transactions. So I think that's the advantage of blockchain, and you're kind of building for the long run here. Of course, there's time and cost savings by the fact that there is an idea like an identity on the blockchain that's immutable. But I think that the fun stuff happens after you're able to kind of set that identity standard. In the short term, will obviously generate a lot of business value for our clients. But I think that's the prize here, and it's much easier to aggregate identities in the corporate world than in the consumer world, quite frankly, because there's less companies than there are people. And if you sign them up once, you've got a large amount of data and information and transaction volume. So that's why I'm particularly excited about this. You can envision a future where We.Trade is plugging into this, as are other blockchain networks that have a need for identity, and that can happen in the context of distributed applications as well. So I think that's the cool thing here, and that's why I'm pretty excited about this project.
Well, when we have giants like IBM that are essentially spearheading this, it only adds more confidence that we're in the right place. And David, that was extremely enlightening. I learned a lot just from the few minutes that you spoke there. And yes, that was very enlightening. So that said, we are out of time at this point. I wanted to thank everybody once again for listening to us and real world use cases for blockchain. And thank you again for attending LA Blockchain Summit.
So you've heard about these two cryptos that are going to explode?
Names. Oh, I'm posting your karaoke video.
You said you deleted it. Okay. There's two. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro. Sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
In the last few years, we've seen more and more enterprises adopt blockchain and Bitcoin technology. From Walmart to Starbucks, IBM, and Daimler, there's even an opportunity here they've spotted which may have yet to see. Up next, Shaylee Andy Falfi of Consensus will take us through the current state of enterprise blockchains, Jules Hilliard of Secure Block Tech, with Martino Caidana, Todd Little of Oracle, Dan Donnie of Secure Currency, and Jordan Freed of Hedera Hashgraph.
I think we're on. Hi, everyone. Thanks for joining us for the panel on the state of enterprise blockchain. I am not going to introduce the panel members. They are going to introduce themselves along with response to the first question, because we have so much to talk about. So we are going to talk about what DeFi has to do with enterprise adoption of blockchain. Are they running in parallel? Is there a chicken and egg scenario? What are we seeing in the sector? And I guess I'll start with Dan Donnie.
Thanks, Shaylee. I appreciate it. And this is a great topic, and I'm feeling lucky to be on such a great panel with everybody else. I'm the CEO of Securrency. We're a blockchain-based financial logistics company. We specialize in tools, especially compliance tools that overlay or embed in DLT networks to enable automated compliance, among other things. And effectively, our strategy is what Red Hat has done for Linux in terms of making it enterprise adoptable. We do the same thing for blockchain solutions in the space with our middle tier. We're actually super excited about the DeFi movement, and we see these things moving in parallel. The key pieces, what DeFi is bringing, some of the back office functions that are traditionally held within banks are now being exposed, and they're very powerful tools that the banks make a lot of money off of, but that causes friction in the traditional system. By bringing them out in DeFi, in the DeFi world, you can lower costs associated with financial transactions. The one thing we'd say is missing from the DeFi space is a real sense for compliance. So we call it institutional DeFi. It's really layering over top of DeFi tools for lending, for automated market making, the policy components and the reporting components that are necessary to make sure that these tools remain compliant and safe. So we have some tools, for example, that we use. We've really pioneered CI/CD or DevSecOps with smart contracts. And so it allows you to release these smart contracts to do DeFi components without having big monolithic DeFi instruments. So we see these two things running in parallel, and we're excited about the growth in both spaces.
Great. Todd?
So I'm the chief architect for the Oracle blockchain platform. It's a managed blockchain as a service offering that's on our OCI Gen 2 cloud. And as well, we have an offering that's for on-premise customers. So we're based upon Hyperledger Fabric. And so we come at this from a sort of a consortium model and sort of enterprise applications. And the ones that we're seeing largely don't have a lot of DeFi interaction at the moment. I'm not sure why that is, but I can tell you that what we're seeing largely is a huge interest in things like logistics, which is sort of a very traditional blockchain application. But we're also seeing it in a number of other spaces, and those spaces are growing. But we're not seeing a lot on the financial space. Now, maybe that's because we're fabric based, so we're not seeing some of the kind of DeFi opportunities. But as I say, for our customer base, they've been extremely excited to be able to move ahead with our platform because we make it extremely easy for customers to develop and deploy their blockchain applications.
You will. Oh wait, we can't hear you.
No audio.
All right, try that again. Thanks for having me. I'm Will Martino, co-founder and CEO of Cadena. I got into crypto in a pretty strange way. I was at the Securities and Exchange Commission as an engineer, and Valerie formed the crypto working group, and I joined up when she founded it as basically the tech for the group. Left, went to JP Morgan, ended up on helping to found their blockchain center for excellence, built their first blockchain called Juno, which was eventually open source and presented to Hyperledger for adoption. And my co-founder there, we left and built Cadena about 5 years in now. And Cadena is a blockchain platform that is designed for both enterprise and public blockchain use. It is about democratizing all of the features that we knew we would need to see real enterprise adoption by the 2030, and bringing that to a public network that also has things like a beaconless sharded state public chain. So we actually have 20 chains braided together into a single network. Very cool. We're the only people to have a beaconless scaling solution. So all proof of work too. So you don't have to go to some new thing just to hopefully get scaling. We have it and we have proof of work. When it comes to DeFi, everything that the public sector does in crypto legitimizes the entire sector. Like any growth, any thing that you can really show. Even if it's kind of weird, even if if the regulators come down eventually, which I kind of think they're going to do with a lot of the yield tokens that we're seeing right now. Nonetheless, that shows interest and shows new concepts and does help with the conversation when you're going for enterprise adoption. I am personally a big believer that the public side of blockchain is crucial, and you need to get traction there and push that for enterprise to exist. I think enterprise should exist, but until we have really good use case on the public side, it's a little bit hard. So is it a chicken and egg? I don't know. I think that DeFi or some notion of this concept needs to be functional and in production to really aid in that second kick that we're going to need to get enterprises going and getting onto blockchain technology.
Awesome. Jordan?
Hey everyone. So I'm happy to be here live from my guest bedroom at home. I also, like Will, came to crypto in a really roundabout way. I was running a VPN company, a virtual private network over in Budapest, Hungary, called Buffered VPN. And the timing was interesting. It was 2013, and all of our customers said, hey, we don't want to pay for this with a Visa MasterCard. We want to use something called Bitcoin. And we were one of the earlier web applications back in 2013 to start taking Bitcoin in our checkout flow, partnered with BitPay, of course, and that kind of led me down the rabbit hole. When we were acquired in 2017, I got into the space full time at Hedera Hashgraph, where I lead up business development today. We've built a deployed enterprise grade public network. What that means is we've solved for performance and security with the Hashgraph algorithm. And we've married that with a governance model where we're governed by some multi-billion-dollar multinational companies like Google, IBM, Boeing, Deutsche Telekom, Tata, and all of that. So we brought some really cool enterprises to the space. I think this question is a really interesting one. What is the intersection of DeFi and enterprise? And the way I think about it is software was always going to eat the world, if we all agree on that hypothesis. what we're seeing with cryptocurrency is software is eating money. And I think that DeFi, we can kind of summarize as, you know, the software is clearly disrupting financial services. We've got the ability to program things like escrow contracts or things like dividend agreements, and we've got this programmability within these tokens. I actually see this as cryptocurrency. We can't beat around the bush. I mean, it's in the word, it's currency. Currency is money. And we're seeing, whether we like it or not, DeFi is a really cool use for that money. And I think that's good for the cryptocurrency space in general. The more utility this money has, the more people that will hold it, the more people that hold it, the more users we get on that network, and the more enterprises will attract to the space. I'll give you a practical example. If there were 100 million PayPal users that held $0 balances in their PayPal accounts, PayPal never would have become a de facto payment method online. But DeFi is, because it's an interesting use of currency, is attracting a lot of users, holding value, and it is, I think, going to make it interesting for enterprises to start to build applications to capture some of that value that is being held by those users. So I think that's where we're going with it.
Great. Jules?
Thank you. Yeah, hello, my name is Jules Hilliard. I'm the CEO of Secure Block Tech. We have built the first of its kind enterprise-grade bot or blockchain operations center. A single pane of glass, if you will, to develop, deploy, and manage all of your blockchains and dApps from one centralized management console. Monitoring, analytics, security, and optimization are at the core of our technology stack. We consider ourselves the third leg of the stool. If you think network infrastructure, think NOC, SOC, BOC. The adoption question is one that we've been trying to solve from the beginning. I'd like to take a little twist on this and talk about the adoption of new technology by the enterprise as they face similar hurdles, and blockchain is no exception. As most of you already know, DeFi is only one of the many industries for blockchain, and I believe that's what gets everyone excited. For those of you career technologists, however, we have seen many great technologies with game-changing functionality come and go. So what are the key factors that decide which new technologies, such as blockchain, get adopted and which technologies don't? A few of them, demand. There has to be a demand for the consumer marketplace, and I think we're all seeing that. Use cases, does the technology solve a problem? Does the incurring the cost of integration benefit the company, cost versus ROI? And tools, and I think that's where a lot of us come in here, have the needed development and management tools been created to successfully onboard and operate the new technology? Because no matter how good the tech is, if you can't drive it, you're not going to use it. I think it's good news, though, for blockchain. It appears that the consumer demand for DeFi is growing, which will stimulate the need for businesses to adopt. In addition, we're seeing all the green lights for blockchain technology to play a significant role in the future development of network and application architecture across the spectrum. We believe it's not all or nothing after all, like most technology adoptions. There will be a convergence.
Thank you, Jules. I forgot to introduce myself. I'm Shaylee Adinolfi with Consensus. I work on business development, mainly in finance, banking, payments, but I do spend a lot of time with public sector globally, the US government and other governments, and doing a lot of work on central bank digital currencies these days. So I spend most of my time on the enterprise side, but have started to spend some more time with the DeFi side. And I think there is more interest from the institutional players in what's happening in DeFi, and with that interest is coming the investment. Also, people want returns, right? They're willing to take more risks. We're in a challenging market post COVID, so we're seeing kind of this. I would say it's a little bit of the chicken and egg situation happening. But some challenges do have to be worked out, including governance. So my second question for the panel is around what's happening with the governance on the public and permission sides from where you're sitting. What are interesting models? What are some of the challenges you're facing and the industry is facing that we need to work out together? So I will start with Todd, because I know you had some interesting things to say about the consortium.
Yeah, thanks so much. Yeah, so we're a permission, private blockchain. I hate to use the term private, but that seems to be commonly used. offering. And, so our customers are largely large enterprises. So, they have to apply know your customer laws and money laundering laws, all this kind of stuff. And one of the big issues is that we're trying to get organizations to work together who may not have worked together through any kind of formal mechanism, or maybe they're in adversarial relationships. So how do you get these potentially adversaries to work together and to form a network that's going to be beneficial to both of them? So what we're seeing is that at the organizational level, so how do you form a consortia is one of the big problems. One of the things we're working on and focusing on is how can we govern the blockchain network in that kind of a model where the governance is performed on chain. So decisions that are made are recorded on chain. All that sort of stuff is not something that's present right now. It's all done largely through out-of-band communication, and we believe that that needs to happen on chain, so everybody knows what decisions were made, how they were made, who participated in those decisions. And that's really what governance is about, right? Making policies and ensuring those policies are adhered to.
Yeah, Will, you had some interesting things to say last time we spoke about what's happening in DeFi around governance and the tokens. And
yeah, I mean, we hear a lot about governance tokens right now on the public DeFi space, and it's really more of a code word for just someone puts out a contract, there's some admin keys, and then the governance token is really just kind of like swapping the word airdrop for it. Governance is crucial for DeFi. Governance is also crucial for consortium and enterprise adoption. But the thing that we need, especially on the public side, is real decentralization. And the only way you get there is real decentralized governance. And it's pretty hard to see how we get there with the current DeFi ecosystem, at least the technology substrate, of how do you actually go and model that on a public chain where the gas costs can be so astronomical that a single vote for something could be to the tune of hundreds of thousands of bucks. I think that there was a bug in a contract and people were like, hey, let's go and upgrade it and fix it. And then people didn't actually vote because it was going to be like $1,000 a vote. So, what we need is a much more powerful substrate. And part of Cadena's platform, because of our heritage coming out of enterprise at JP Morgan and then going into public, is that we had this smart contract language called Pact. And it was designed initially for enterprise use cases, which include consortiums with completely crazy and incredibly nuanced and detailed governance mechanisms, because that's one of the things that people fight over for 2 years before they decide that they don't actually want to do the POC anymore, sadly. But this is a big thing you try to get over. The coolest approach I've seen on the enterprise side, actually, was when we were working with Blend on a use case called FinPrint, and it was for it was kind of like a decentralized network for something closer to Equifax. They ended up not going with it; they didn't think the market timing was right. But the approach for the consortium model there was actually that the governance was going to be on the public network, and people could buy in, and then you'd be whitelisting and basically staking on a contract on the public network, and then using that information for the private network. So that instead of having a consortium model where everyone gets in a room and just argues until they're blue in the face, you can actually say, put your money where your mouth is. Go here, go get coins, and then go buy in if you want to actually do this. And then the thing isn't controlled by anyone. And this seems to be a really interesting approach that I don't think we're seeing much right now, just because enterprise is, surprisingly taking a little while. But it's, the crucial thing for DeFi to move forward is governance. And if you're asking yourself, hey, is it decentralized? How do we have decentralized governance? What does that mean? The answer is, if the regulators want to come after you, is it just 2 people with keys? That's what a lot of it is now. What you really want is something closer to proof of work, where it's thousands. Our network is run by thousands of miners, and we don't even know who 95% of them are. I don't even know who I would go to. We have a decentralized community, and that comes with risks. If you have to do a software upgrade, it's hard. And if the community doesn't like what you're doing, they can do other things. But on the same side, it also means you have real decentralization. And that's the interesting thing, especially for enterprises, because the business model, a decentralized business model, is just new. And we don't know how strong it's going to be, but I'm a big believer.
I don't know. It's been tough. It's been hard. I agree with you. There's hope. We're all here with the decentralized hope, but it's tough to get that in. I would love to hear Jordan's views from HEREVELADO, how you all have dealt with this.
Yeah, it's funny. We started with a book we read. I've seen people on social media share it recently. It was D-Hawk. D-Hawk was the founder of Bank Americard, now known today popularly as the Visa network. And he kind of struggled with the same set of problems in the 60s when they were trying to solve problems in the payment card industry. And it was, how do we get a bunch of these competing institutions together to set standards and establish basically this, you can think of it like a globally distributed payments network on top of which they would settle payments. And he came up with this whole idea of a chaotic organization, chaos plus order. He invented a word, chaotic. And we were very inspired by a lot of his thought leadership in that. And that's where we came up with the Hashgraph governing body, the Hedera Hashgraph governing council. Our answer to that, I totally agree with Will's comments and some of the other panelists' comments. I think that what's been stopping enterprise adoption has been serious governance. And truly decentralized governance of some of these networks. A lot of networks are really nailing decentralization of the platforms themselves, but are, I think, falling short when it comes to addressing continuity plans for how these networks will operate. Who defines product roadmap? Who defines, software upgrades? Do we have the legal controls and technical controls required to keep these platforms stable, especially if we want to attract these really valuable tokenization ecosystems? So our model is, was very DHawk inspired, but we have these governing council members. They serve 2 consecutive 3-year terms on our governing body. We have a membership committee that is also filled by these companies. They define objective standards, and then we recruit companies based on the criteria that the membership committee sets. Members can vote each other out. They can vote new members in. If members aren't in compliance or not running their infrastructure or not updating their software, they can be penalized in sort of a proper fashion. So, and there's only 39 companies in sort of our definition of how we govern it. So, in that regard, that's how we've done it. Our differentiator is we offer this consensus service. And the thinking is, if this thing is going to get integrated into these private blockchain platforms, Todd mentioned Hyperledger Fabric and the Oracle Managed Blockchain Service. What we have done is we have this governed consensus service that we integrate into those platforms. And similarly, it could be integrated into, a quorum implementation or an R3 court implementation. And we've really seen that as the answer. When you have governed consensus, it sort of makes the ease of spinning a new blockchain up. You don't have to necessarily build the consortia first. You can kind of just build a platform and then have a really well-governed consensus that you're tapping into.
Interesting. So standards, and then, it does sound like a complex but well-working governance structure, but it does also sound a little centralized, right? So Dan, do you have any thoughts on that? The governance on decentralized and then permission models?
Yeah, so we actually see a range of this across our portfolio. So for example, I like the word chaotic. Jordan, that's pretty cool. Another equivalent word is confederated. So that is it's a group of folks who have expressed authority, but there's no necessarily a central party. We've developed a confederated model for governance in some settings. An example of this would be the InterVASP working group for the exchange of travel rule data between parties. To be a VASP, one must be a part of that group. Broker-dealer rules work the same way with FINRA. Question is, who gets to establish that one has the right to, for example, KYC a party? And it works in a confederated model that we have seen. Now, most actions, enterprise really means governance within a boundary. And so we see for companies, like for example, governance really is, how does one get the right to express authority? And within a company, if I'm an institutional trader for JP Morgan, for example, I get my authority to execute transactions with the value that JP Morgan owns based on an assignment that I have within JP Morgan. I can't, if I leave JP Morgan, I don't take that authority with me. So in fact, that enterprise corporate structure that you see, which gives me the authority, is something that also needs to be expressed within the blockchain. When you do fund management, you're accountable to parties. The fund manager is designated or delegated that authority. Typically, that's not a person, it's an entity. And you need to be able to track one's right to act on behalf of the entity. So we have tools there. And then finally, there's business processes. So typically, when one does a significant action on behalf of one's enterprise, there's actually a sequence of sign-offs or other parties. So we have a decentralized workflow component. So a decentralized hierarchical model, a confederated model, and then just flat out DAO-based governance models where shareholders get to vote. All of those are necessary to really do DeFi at scale.
Thank you. Jules, what are your thoughts on this topic?
Absolutely, a lot of great information here, and maybe step back a little bit for some of the audience members, as it comes to compliance, regulations, and governance. We all know this is a very complicated piece of the equation, and it's pivotal for the successful adoption of DeFi by the enterprise. I think it needs to be said, though, that I think many listening would like to see blockchain utilized to disrupt the current financial industry, but that's a whole nother panel. That being said, I think if we were to take a quick peek into the past evolutionary cycle of governance, we know that it moves many cycles behind the analytics and intelligence needed to make smart, fair, and most importantly, legal decisions. And although we don't have the answers on this complicated and fast-moving piece of the puzzle yet, I would like to influence those in the audience that are pursuing IT law. I would highly recommend you consider blockchain governance as an option and help us push this new technology towards mass adoption.
Awesome. So we have 6 minutes left. So each of you, approximately 30 seconds to 1 minute. Tell me what you think the future of enterprise blockchain adoption is, and try to, and if possible, use a use case, include a use case in there. So I will start with Jules, actually.
All right, great. I think perception plays a role here. I think we've all been battling that as a group, and I think we know what we're battling. As a team, and I think as a group of technologists, we've never viewed blockchain as an all or nothing piece of technology. But to this day, it seems that many C-level executives and C-level technologists still have that impression. I think we need to fix this misconception with the decision makers, encourage the enterprise to get a dev team working in their sandboxes on ways to enhance or augment their current applications and architecture utilizing blockchain. For example, there are fingers of different pieces of currently utilized applications like ERPs, accounting, supply chain, file sharing, and the list goes on and on. They could greatly benefit from blockchain. Looking at this event, this panel, the audience, and the many great companies and teams that are committed to this process, it appears that blockchain is here to stay. And the exciting future that blockchain will play in the future of technology as we know it is just getting started. So thanks for having me.
Where's Jordan?
Yeah, I think the future of enterprise adoption is, today for those of us that have been in the space for a while, a number like $15 billion in circulating supply of something like USDT is somewhat exciting, and we sort of celebrate that. I expect that in the relatively near term, you'll have very large, very reputable sort of the payment and financial service incumbents, some of the banks issue stable coins that very quickly will dwarf some of what we have in the market today. I think that will serve as probably one of the bigger fiat to crypto, our ecosystem on-ramps, and bring much more adoption to these networks. That is definitely going to stress test a lot of the infrastructure that we have in place today. And I expect a lot more token bridges between some of these networks to facilitate value exchange, and a lot more people building substrates to kind of dictate interoperability between these networks, and again, how that value gets transacted. I'm very bullish long term. I think it's still so early. So those listening that are not yet full-time in the space, I think now is a great time, especially in this new post-COVID world of ours, to really get involved. And shameless plug, we're definitely hiring here at Hedera.
Well,
yeah, thanks for having me too. Future of enterprise blockchain in a couple words. I think the next a couple of years is going to be pretty slow, and then it's going to pick up. I don't know if a lot of people know, Bitcoin back in the day after it launched, people tried to apply it to enterprise and it had a very hard time getting adoption. And then kind of round 2 of enterprise adoption was Ethereum, which had a huge amount of potential. But the technology stacks that are just arriving now, I think, that took the last, all the lessons from Ethereum needed to exist for real enterprise adoption to really move. And the way that it's going to happen, the way you're going to know it's happening quickly, is that you're going to see enterprises onboarding onto public chains or bridging onto them of some way. It's going to involve the public side. If you don't see enterprises on a public chain where they don't have to worry about gas costs going through the roof, then you're going to enterprise adoption just isn't quite happening yet.
Thank you. That's great. Todd?
Yeah, I think that the future is largely in much broader acceptance and usage. So, some of the ones that have been mentioned are ERP, supply chain, We're seeing it in public services. We're seeing it in the public sector. We're seeing it in the medical industry. So for sharing medical health records, all this sort of information. So I see largely just people coming up with newer ideas about how do we apply some of this. I think one of the things I see in the enterprise world is that they're not so focused on sort of the monetization, and so needing to have a currency built into your underlying platform isn't necessarily a value to them. So, and as well, who do you share this information with? So we're permissioned blockchains, and so the public world is a little bit foreign in some regards. I see some interoperability work that can be done there, and I see also interoperability work being done between the various enterprise blockchains as being critical.
Yeah. Dan?
We're working on tokenized exchange-traded funds with an institutional partner, Wisdom Tree. And this is really where you see the enterprise intersecting with the broader blockchain concepts. We're working to make these on public networks, on mainnet. And so the key pieces of how you govern back-end activities, back-office functions, but also allow shareholders to have a voice in these tokens are central. So we're excited about that. It's really, as Jordan said, the beginning of institutional value, really with high-grade investment opportunities coming to investors in the space that are highly liquid, easy to trade, available on the New York Stock Exchange or in your crypto wallet.
Yeah, you've got, so thank you all so much for your time. I totally agree. We're seeing some interesting models. I mainly spend my time in the Ethereum ecosystem, and we do have to figure out throughput, gas. I think there's some things with governance, privacy, that balance between privacy and transparency will be figured out in different models as we go forward, depending on the use case. And I am looking forward to the next few years. It's moving so quickly, and there's never a dull moment. So I hope to be working with all of you in some form or fashion in the near future. Thanks for your time.
Thanks, Shaylee.
You as well.
Yeah, thanks,
Shaylee.
Yep.
Yeah.
So you've heard about these two cryptos that are going to explode?
Names. Oh, I'm posting your karaoke video.
You said you deleted it. Okay. There's two. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro, sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
From BitTorrent to digital currencies, our next guest is no stranger to decentralized networks. After raising over $58 million in his 2017 ICO, technology entrepreneur Justin Sun will be taking us through what his current and future plans are in DeFi for the Tron network, alongside Rachel Wolfson of Cointelegraph.
Great. Welcome to LA Blockchain Summit. Hi, Justin. I'm so happy to see you again.
Hi, Rachel. So nice to meet you.
Yeah, it's been a while since we've last talked, so it's always good to catch up with you. So obviously you don't need an introduction, but I will let you briefly introduce yourself before I get into my questions. So just to tell the audience who you are, although everyone should know who you are already.
Hi, everybody. I'm Justin Sun. I created Tron Network almost 3 years ago, and right now we are in these past 3 years, we have developed Tron into one of the largest blockchain protocol in our industry. So happy to share my thoughts on the blockchain industry and also on the development of Tron.
Great, wonderful. So Justin, DeFi is really hot right now. And so that's kind of what I want to focus largely on during this fireside chat. So I guess the first question I have for you is maybe, can you explain what DeFi means? And then I'll just go into some more questions from there.
Yeah, sure, definitely. DeFi is short for decentralized finance. which means a lot of the financial applications, instead of like building on the traditional financial infrastructure, they build on blockchain and controlled by smart contract. I can give you like an example. So basically on Tron network, we have a very competitive decentralized exchange. Name is called JustSwap. So instead of like putting your money in centralized exchange and trading on centralized platform, these days you can just trade on JustSwap, and you control your funds. You don't need to register account. You don't need to do anything. Just have a Tron wallet and interactive with the smart contract. You can execute your trading anytime, basically 24/7, and without like worrying about like any of the outages of the system or like or traditional industry, right? They may just like off for the day. So you don't need to worry any of that, right? As long as the blockchain is running, your fund is secure, you can trading like anytime. So that's DeFi.
Got it. JustSwap. So I'm curious to know, is that similar to Uniswap?
Yes, exactly. So it's the AMM exchange based on Tron protocol, of course. So Uniswap is more on Ethereum. We just like launched 4 weeks ago. Right now we are already like top 2 DEX in this industry. Our daily transactions has surpassed Uniswap by like 20%, and I think our daily trading volume is sometimes is around like 20-30% of Uniswap. Sometimes is like 100% or even more.
Got it. And I'm assuming in terms of like, you know, because there's a lot of problems. DeFi is still new, but I think we're also seeing a lot of problems with the space just due to like, you know, scalability and high transaction fees and all of that. So exactly. Will Tron fix these problems with the DeFi solutions that you're building? Is that your intention?
Yes, exactly. So the success of JustSwap, I think it's not like depends on JustSwap itself. It depends on the high scalability and the lower transaction fee in Tron network. So for example, if you are like a trader on Ethereum right now, if you want to like staking, for example, like 10K US dollar worth of Ether or other cryptocurrencies, you won't like make a lot of money by doing the yield farming and trading in Ethereum, because every transactions at the high time is cost you like $100, right? Even like lower times is cost you like $10-20, which is a lot if you only have like 10K US dollars, right? It didn't even make up for all the transaction fees. But in Tron network, it's instant transactions, and also the fee is lower to like 0.01 like cents, like US dollars. So that's why recently we have seen a lot of people from Indonesia, Vietnam, and Nigeria, like those people like trading on Tron platform and the Tron DeFi projects. I think this is like very easy to understand, because for the people in the United States, they can maybe afford like $20 for the transaction fee, but this is impossible for people in Vietnam, Indonesia, Nigeria, and in all the like developing countries. The transaction fee is just too high for them.
Yeah, that's a really good point you make. I'm curious, why do you think we're seeing the rise of DeFi now? I mean, is this a new concept, or has it been around a while? And, you know, why all of a sudden is everyone interested in it now?
Yes. First of all, I think DeFi is definitely a good story. The reason is because DeFi, I believe, really has lots of the fundamental and potential compared to ICO age. So we all have been experienced the ICO age. At that time, it's just like a lot of the project issue their token, raising money. Even there has lots of the successful ICO story, like Ethereum, like Tron. We all comes from the ICO age. But the problem here is lots of the ICO tokens, they don't have fundamentals at all. And they don't have the traffic and the use case on the blockchain. I think DeFi is kind of like different. You can check on lots of the Ethereum project like Compound, AV, and recently we got like YFI, Uniswap. They all have their tokens. But also you can see their tokens has lots of the fundamental use case on the Ethereum blockchain. Even there is a lot of the transaction like gas fee problem, but you can see the fundamental. For example, like AV, Compound, and the Maker, they all have like over $1 billion in their network, right? Even in terms of the AUM, if we see in the traditional finance way, it's not like a small number too. And also, of course, if you check on Tron, we have like Sun.io, lock up like more than $350 million. And also JustSwap, the liquidity is over $200 million. So I believe this time the DeFi really has lots of the fundamentals and really provide the financial infrastructure for the people in the blockchain industry. And also recently, we just collaborate with WBTC. They have over 100K BTC on Ethereum network now. And I believe they're gonna have even bigger potential on Tron network. So that's why I believe this time is different. DeFi story is just, I believe definitely have more fundamentals. And I believe the potential gonna be huge.
Right, yeah, I agree. And I just read that news that Tron formed that relationship with BitGo. So
Yeah.
that's awesome. And I think we can expect to see some really great things there.
Yeah.
Can you elaborate a little bit on that? Like, what do you think that we'll start seeing because of that new relationship?
Yeah, exactly. Let's take like an example happened before. So Tether issue USDT on Tether, I think is like a year ago. So in 2019. So at that time, USDT is only available on Omni and Ethereum. Both layer, if we see it's like layer one, both layer is very slow and high cost. So we have seen a lot of the times when both like Bitcoin network and the Ethereum network is very busy. A lot of the traders, they can even trade between different kind of the exchange at those peak time. For example, like March 12th, we remember this year the price like crashed a lot. And lots of the people trying to arbitrage between different kind of the exchange, and it's very hard to do that because like all the transaction fee and also the network just can't process all the transaction. So that's why we have seen in the last year, USDT on Tron have grown from 0 to over $4 billion, and users is grow from 0 to right now we have over like $1 million. I think it's $1.2 million, 1.2 million accounts now. So I think we're gonna see the same story on BTC and the ETH too. So BitGo migrate WBTC on Ethereum, which is very successful. We have seen over like 100K BTC on Ethereum network. And if you want to move like BTC from different kind of the exchange, I think the BTC on Tron network definitely gonna be a very good option for you. So you can just move BTC like Tron. So you will enjoy a 0 transaction fee and the instant transaction to move your BTC on Tron network. And if you want to redeem those BTC back to the BTC on the main chain, you can just do it. So it's also very easy to do that. So that's why I believe collaborate with BitGo, people can still enjoy the BTC assets, but they can also at the same time enjoy the low transaction fee and the instant speed. Same for the Ethereum too. So BIGO will also issue WETH on Tron network, which means if you are Ethereum lover, you can definitely deposit your Ethereum into BIGO and get WETH on Tron, and you can move WETH between all different kind of the exchange.
Got it. So I'm thinking just from what you're saying is that this creates a lot more liquidity in DeFi. But my question is this, because, and I'm not a DeFi expert, but you are, so that's why I'm asking you this question. So most DeFi tokens are on Ethereum, but now we're seeing cross-chain money markets like Kava, and there's another one I was just reading about, Equilibrium. Is what you're doing considered a cross-chain money market type situation, or is that something completely different from like Kava?
Yeah, sure. Definitely. First of all, I think we are creating the same kind of the DeFi ecosystem as Ethereum, right? So today, like all the Ethereum network product, you can see a same version of Tron product. For example, the MakerDAO on Tron is called Just Stable, developed by Just Team. And Uniswap is called Just Swap, you can see on Tron network. And also for YFI and AV and those compound, you can see the Sound.io is developed the money markets on Tron network. And also we also would like to collaborate all different kind of the cross-chain solutions to bring other stable coin or digital assets to Tron platform. For example, we collaborate with Tether to bring like USDT on Tron, and we collaborate with Span to bring the Oracle on Tron, and we collaborate with BIGO to bring the WBTC, WETH on Tron. So I think we are doing both sides, right? So a cross-chain trading or conversion, right? We're gonna partnership with different kind of the asset issuer to bring them on Tron network. And also at the same time, we have all these kind of the DeFi infrastructure we are building right now. So I think we are doing both things in the parallel. Didn't like focus on one or more than another.
Got it. And what are your thoughts on, because DeFi has a lot of potential, I'm learning this now, but how can we ensure that the projects are, you know, legitimate? How do we ensure that these projects are safe?
Yeah, sure. Definitely my suggestion. So first of all, I think if you want to buy a lot of money in the DeFi product, you definitely need to check about audit reports. So that's something I'm urge like everybody in our Tron community needs to review their audit reports, definitely by a third party, reputable third party for sure, before you can get into the DeFi game. I think this is very important. And also, of course, as the Tron development team, we are also trying to persuade like everybody doing DeFi project on Tron, they need to get an audit report for sure, right? To make sure on the safety of the community. And also, I think the second tips is about diversification. So for example, if you have like 10K TRX, you can divide it, the 10K TRX into like 10 plays. So one play you have like 1,000 TRX, and then you can invest this kind of TRX into different kind of the project. Because at the early stage, all the DeFi project return is very high. So if you invest into like a good one, you can make 5 times, even 10 times the money more than before. So which gave you a lot of the leverage and the space for losing money in other projects. So that's why I don't like recommend you to bet all your money in one product because it's too risky. You may lose all your money. But I think you can divide your portfolio in different parts and enjoy the revenue or the profit, investment profit from one project and make up for the loss of other projects. So that's, I think, is a better way, especially in this kind of the stage, right? So recently for the NFT, I recommend the same. You know, lots of the people recently invest in meme token, get some profit or lose some money, right? So that's why I believe we always need to focus on diversification, especially when we are trying to invest some like very risky product.
Yeah, I just want to ask you real quick. So you mentioned meme tokens. Can you just explain what that means? Some people might not know.
Yeah, sure, definitely. So our strategic partner like Poloniex listed meme token recently. So meme token also have I think a good volume on the Uniswap as well. So meme token is an NFT token. So recently after the DeFi story, right? We have seen like NFT is starting to taking off. You know, so basically the meme token is the meme community gonna create lots of the NFT basically tokens. And meme token, I will see meme token is more like platform token or the community token. And the real product, or if you want to see there is like some fundamentals, I think it's more like the collectible NFT tokens trading on the different NFT product. So NFT, I think you can, the name is short for non-fungible tokens. So basically you can see the non-fungible tokens more like the collections we all like been fascinating when we are like a child, right? So we love like some kind of the space world like tokens, and also so sometimes I also get some collection from Game of Thrones, you know, this kind of the stuff. So it's more about culture, it's more about meme, it's more about collections. So I think this is definitely a very interesting niche market.
Yeah, definitely. So I'm wondering if you know about this. Basically, I think that the DeFi space we're seeing now, which really caters to crypto investors, will eventually open up to the enterprise space, kind of like we saw with you know, Bitcoin. It was really just about Bitcoin at first, but then it became this whole thing with enterprise blockchain. Do you think we're going to see the same thing with DeFi? Is it going to become enterprise DeFi?
Yes, definitely. I believe so for sure. I can give you like a very easy like example. So before that, you know, we have seen Bitcoin for sure. Even in terms of the market cap, I think it is very large. If you even see it in the traditional way, traditional finance way, is over 200 billion US dollars of the market cap. So there's some like traditional company also doing like, if you have like Bitcoin as a collateral, you can put and the lending like fiat, right? In the other way. But we have seen like all the DeFi even provide like better services than those traditional institutions, right? So today in compound AV, you can even get better interest than those traditional institutions. So that's why I definitely see like in the future, you can even put your like household as a collateral and lending money on DeFi platform. So you will see like all the traditional finance assets, for example, like gold or everything, right? House, real estate, and all different kind of things. You can put them on the DeFi platform and get loans, you know. So that's why I believe right now we already give a very fantastic user case right now. So definitely a lot of the enterprise will trying to move on DeFi platform. I think smart contract and the blockchain is not like only benefits the crypto industry. It's gonna benefit like the enterprise user case. It's gonna benefit all the traditional industry.
Right, definitely. So I kind of want to also talk about Ethereum 2.0, and I want to know your thoughts on that because they're about to launch phase 0, and I want to know how Tron compares to ETH 2.0.
Yes. I think Tron is just like is 0.0 accomplished. so they don't even need to, like, if you are like a developers, you don't even need to wait for is 2.0, because I don't even know when they're gonna accomplish it. You can just like move to Tron network. So we has adopted POS like years before Ethereum and deliver like all the infrastructure, and we are even like compatible to Ethereum. So you don't even need to like edit your smart contract. You can just like migrate to Tron, very easy and simple. And for Ethereum 2.0, I think I'm not like very optimistic, because Ethereum has been developed this like Ethereum 2.0 for almost 4 years. We just keep like seeing the postpone of the Ethereum network migrate to POS basically. I think this is not like only about the technical side. So it's also about like whether the people in Ethereum is willing to migrate to Ethereum 2.0, because the math is really simple, right? Recently, Ethereum miners make like tens of the millions of the US dollar like every day based on the transaction fees, and because of the Ethereum network, if they really needs to migrate to Ethereum 2.0, it's not like the token holders have the voting rights to have their voice be heard by everybody else. Is 100% decided by miner. So if I'm like Ethereum miner, I don't want to move to Ethereum 2.0, and I don't care like people Ethereum is struggling. I mean, as a developer, I just want to make money, right? Because right now everybody using Ethereum, and I make like tons of the money. So that's why I think the developer proposal in Ethereum is very hard to pass. I think eventually, the miners they won't like vote for yes, because this gonna mean like they're gonna be kicked out from Ethereum network, and Ethereum gonna convert to like POS, which means all the miners gonna lose their power and lose their way of making money, and all the mining machine they buy gonna go to zero. I don't think they gonna agree with this proposal at all. That's like my like honest opinion. And if some like developer in the Ethereum gonna push this like really hard, I think the worst case scenario is we'll have like even a new fork in the future. So some like miners gonna stay like in the original Ethereum blockchain, and some like developers they might call for like migration to a new Ethereum, something like that. So which I think is equivalent to like Ethereum civil war. So that's why I'm not like optimistic about this at all, because you are like touching like the real like interest of somebody else.
Right, for sure. I mean, and I guess, phase 0 is supposed to launch sometime this year. So I guess we'll see how that plays out soon. Yeah. So changing the subject a bit, I'd like to know if there are any updates with BitTorrent, how many downloads there are, how's that going?
Yes, definitely. I think BitTorrent has lots of the progress. We launched BTFS, which is the largest decentralized distributed storage network in the world. So so basically right now you can storage your files, and if you are developers, you can storage your website and everything you have in over 100 million devices across the globe, which is decentralized, secure, encrypted, and also much cheaper than even Google Drive and Dropbox. And if you are a storage provider or miner, you can also provide your storage in the BTFS network. You can get BTT for reward. And also at the same time, we have seen a lot of the people starting to use BitTorrent Speed as well. So as we seen, like BitTorrent speed is a way you can use BTT to accelerate your downloading speed, which is using by almost 100% of the BitTorrent user recently. And just stay tuned for Q4. I think we're gonna launch another revolutionary product in BitTorrent team. We have developed this for years, and I believe definitely everybody gonna be really excited about this new product. Definitely stay tuned. This is, I think, one of the revolutionary technology we're gonna release this year.
Awesome. I'm excited. And I hope I get the exclusive for Cointelegraph for that. So keep me in mind.
Definitely.
Nice. Great. Well, Justin, do you have any additional thoughts that you want to share with the audience that we haven't already covered?
Yes, definitely. I would like to share like the potential of the Tron DeFi network. And if you are like token holders, you haven't like seen like a Tron DeFi product, definitely I think you can try out JustSwap and also try out Sound.io and JustStable. All the DeFi product we have deliver. You will find out Tron network is zero fee with instant speed. The user experience is just amazing. You should definitely try it out. And if you are like a developer and suffer from the transaction speed and the transaction fee of Ethereum, I definitely think you need to have like a new version on Tron. We have seen lots of the developer on Ethereum start to migrate to Tron network, and we also collaborate with Tether and Spiegel and issue all the assets available on Ethereum migrate to Tron. Tron also have a very good traffic. Our daily address, daily increase address is same level with Ethereum. It's like 100K or something. And also we just surpassed like 10 million users recently. So definitely, I believe you need to seize this chance. And if you develop on Tron, I think definitely you will have lots of the premium and also have lots of the traffic because like Tron community is very enthusiastic. Everybody wants to try out the new product on Tron.
Yeah, well, I'm excited. I'm a big fan of Tron, and I consider myself part of the community, and I really love what you're doing. So I think you're really helping, you know, the DeFi space grow, and we're going to keep seeing innovation. Yeah, well, Justin, thank you so much. It's been a real pleasure. I always enjoy speaking with you, and yeah.
Thank you, Rachel.
Thanks.
What is blockchain? Blockchain is the technology that powers cryptocurrencies. To put it simply, a blockchain is a distributed ledger that facilitates and tracks all transactions for a given cryptocurrency. eToro.
With something new happening in crypto every single day, it feels like we're living through a race of different ambitious techies fighting to win the next big thing. Our next guest, U.S. Representative for North Carolina's 13th Congressional District, Congressman Ted Budd, will take us through the great race for digital payment dominance. With CoinDesk's Sanda Henegama.
All right, a big hello to everyone joining us today at the LA Blockchain Summit. In the next half hour, we'll be able to hear directly from a US lawmaker on the current state of crypto regulation in the country and what it might look like in the future. So it's my pleasure to introduce to you Congressman Ted Budd, representative for North Carolina's 13th Congressional District and member of the House Financial Services Committee. He has been an outspoken proponent for blockchain technology and has advocated specifically for clearing up tax laws as they apply to digital assets. So Congressman, welcome. Thank you so much for being with us today, and it's a pleasure to be chatting with you.
Thanks, it's great to be with you. Thanks, Indali.
All right, let's get right to it. So this is such an exciting time for blockchain right now. There's so much going on. I feel like no 2 days are the same anymore. On top of innovations like stablecoin and the late craze around DeFi, governments around the world have started paying attention to the space, which I feel like it's adding legitimacy to something that people have viewed with a lot of skepticism so far. So I was wondering, at what point did you look at blockchain tech and crypto and think, wait, this is important and we need to take it seriously?
Yeah, so I think this is really the inevitability of digitalization of commerce. I mean, when you had the rise of the internet in the early 1990s, and then you figured out how to transact, and then there was the question of how do you pay for it, and the Elon Musk that we see now, and the we got to think about his roots, and the PayPal 8, and with Peter Thiel, and really they figured out how to do commerce on the internet. Now, I'm paying my kids, and they're paying me back over Venmo, but it has to get more and more digital as our lives become more and more digital. So cryptocurrency is one way of doing this. It brings into question the store of value, and the question for us here in Washington D.C. is what involvement, if any, are regulators, and if this is the future, how do we be involved without and help maintain or grow American competitiveness around the world, and not hamper a growing new sector of the economy? So that's really the quandary that we always find ourselves in, is how do we? I don't think we have to spur it on. I think it's going to be our new lives. It's going to be the future, but we want to think about guardrails and how do we protect our constituents and our citizens as this is the new future.
Absolutely. And I remember a couple of years back, you said that the development of blockchain technology is a matter of national security. And I feel like with everything that's happened since then, maybe you feel more strongly about that.
Oh, absolutely. I mean, in the past 6 months during COVID, our lives have really become a lot more digital. So there's more transactions. You see more prime vans moving around. You see more e-commerce happening. So everything's now online. And so when we look to cryptocurrency, and major transactions are now happening over the various forms of crypto, how do we keep people safe and not taken advantage of? So we definitely want to have some regulations. We definitely want to have some safeguards in there. We know that there are bad actors out there, whether it's a state actor, if it's North Korea, if it's Iran, those who typically are opposed to the United States. How do we make sure that they're not the leaders in this? We can't be passive as a country. We want to set up proactive guardrails and be out in front, not to spur it. The industry will take care of itself as far as spurring this, and innovators out there around the world will spur this, but we want America to be a safe place for this, and to make sure that predominantly good actors are in this space, and that we have a way to push off and to deal with the bad actors. We don't want China's worldview to be the dominant player here. We think the stronger America is, the better it is for everyone else. And so we want the best of our country to be reflected in the policies and in the technology that interweaves with that policy.
Absolutely. And recently, actually, the president of the European Central Bank, Christine Lagarde, said that Europe has sort of fallen behind in this global race to create a digital payments ecosystem first. And China has, many agree, taken the lead in this. How do you think the US is doing, and how important is it for US lawmakers to seriously look at a digital dollar or a central bank digital currency?
Well, I think Lagarde was right in that, and Europe, especially the leaders, when you look at especially France and Germany and Estonia, we want to make sure, I mean, they tend to be a digital leader as well. They punch above their weight as one of the Baltic countries. But I want to make sure that the United States is out in front on this. I think we are doing good. But the great thing about the United States is also can be the bad thing when it comes to innovation. We're not a top-down country. China is. The Chinese Communist Party can dictate technologies. They can move massive amounts of dollars at will with relative speed and unity. But you got to realize what they're pushing out there. That may not be the best worldview or the best technology or be in the best interest of the 7+ billion people around the world that are moving towards engagement with crypto. But the United States, we have a relatively open society and a free society. We want to preserve that. And we want to make sure, again, to push out the bad actors and those who seek to control. Because really, this is not about control, but we want to make sure that we optimize the technology and make sure we keep the bad actors out of there, and that it's the countries that are high control like China aren't reflected in the technology. So we have to get out there, Sandali. I just think that we can't be passive in this.
And how do you feel you as lawmakers can ensure that innovators come to America and innovation happens here and not somewhere else? What are you doing and what can you do to make that happen?
Yeah, regulatory environments around the world either attract or repel investment. I don't think it's about necessarily having a grant-driven where the United States will grant provisions for a particular technology, maybe, but I think we just need to have a very free and robust type of thinking here, and I think the U.S. is unmatched in that. And so, one of the great things I've seen the last 2 years in the Financial Services Committee is we started out in 2017 when I came into office, and about 2/3 of the members would scratch their heads, and this is on both sides of the aisle, and they would say, well, what's crypto? And we've even had some people say it was like, I don't even know, it was like a nuclear threat. And I'm like, no, that's not the way you think about it. So I think some of this, and you've probably heard me make comments on this, I think some of it's generational. It's not left or right, Democrat or Republican always. It's generational, and realizing this is not a threat, but it could be if we're not involved. If we don't set up the proper regulatory structure, we could allow the Chinese worldview to dominate our future transactions. We don't really want that. So I think maintaining what's best of America, and that is a robust, free-thinking, innovative society, is best for citizens around the world, best for our country, and best for cryptocurrency.
Absolutely, I totally agree with that. And staying on regulation, I mean, this is like a super fast-moving space and a new technology that's still sort of evolving. And I feel like governments are constantly having to play this catch-up game to ensure oversight. And there are so many things to consider at once. It's not like our traditional financial system where we started with paper money and then slowly transitioned into online banking and cashless payments. Everything's happening at once. You have to consider cybersecurity and the internet, cybercrime, and you have to also define these new financial instruments and figure out how to tax them. So in the landscape of all these like different things you have to prioritize, you've been kind of focusing on taxes specifically. I was wondering why focus on taxes over something else like security, and why is that important, I think?
Yeah, well, we do need both. I don't think it's you focus on one or the other. I think you have the right technological provisions in there where it's safe and where it's secure and people actually trust it. Because if people don't trust it as a store of value, then it's done, or it moves elsewhere in a more trustworthy environment in another country, and I don't want that. But you also don't want to have, like I said, a regulatory environment can be attractive or it can repel industries. So can the tax structure. And we don't want people to have a disadvantage. And when you look at a transaction that could be taxed at 40 cents, that's 40%, that's the erosion of wealth right there. Or I'm not saying necessarily for a wealthy person, because this is highly democratized here. You just don't want anybody, if you have $100 in crypto and every time you trade or you convert, you're losing 40% of the time, it approaches zero rather quickly. So we can't have that. We have to make sure we have a normal, regular purchase type of tax structure here that's compatible, and it doesn't repel the industry to other countries.
Absolutely. And how far do you think in the future will we have a comprehensive tax framework for crypto?
Yeah, taxes, have been bipartisan in the past. I'm talking about decades ago. But when you look at a big tax bill like the Tax Cuts and Jobs Act of December of 2017, I mean, that was all one party. I'm a Republican. It happened to be a Republican bill. 80 to 90% of people out there, about 90% of the people got a tax cut, took more home. So while we're grateful for that, or at least I am, I think we have to realize, again, this needs to be a very bipartisan thing. And we need to realize, let's make sure this industry stays here in the US, and let's see what we can do. I mean, there's a tremendous amount of animosity right now, which is one of the refreshing things, Sandalee, about this is it doesn't cut across party, or it does cut across party lines. It's not divisive, and maybe generationally. And so we just need to make sure that we work on this in a bipartisan way in front of the Ways and Means Committee. And again, there are some very tenured members on that committee. We want to make sure that they understand what cryptocurrency is, and regardless of your party, that we have a good structure for it here in the U.S.
Mm-hmm. And staying on that, how do you envision crypto being sort of regulated in the United States? So far, there's more of a sort of state-by-state basis, where New York has its own bit license, and recently Hawaii launched its own regulatory sandbox, and most recently, the CSBS sort of tried to consolidate crypto compliance so that companies can operate in other states without having to apply for their own license. And how do you envision the future? Do you see a federal framework, or the continuation of like a state-by-state, very specific compliance framework for crypto and blockchain?
That's a great question. It kind of calls into question how our country is structured, Sandalee. While on most things, I'm very pro states' rights. I'm from North Carolina. I'm for them making decisions. And when I look at the insurance industry, which is under the umbrella of the Financial Services Committee, we want to maintain our 50-state regulatory body, or regulatory structure. I think that's the way we need to go. But with this, because we look at digitalization, meaning more global, I think we need to come together as a country, and all of our territories and all of our states to have one structure like Switzerland. Now, we're very different than Switzerland, but I think we need to have a unified, preemptive, federal, light touch regulation that, again, makes it, and that's another thing, it's not just taxation, it's not just regulatory, it's also how confusing is it to deal with. And if we're hard to deal with as a country, because going from North to South Carolina or to Virginia or to Montana is different, and something that's digital, that's really tough. And I think people would just look elsewhere for more unified places to do business. So we got to be simple, and I think a preemptive federal regulatory structure would be very helpful here. And no, please don't ask me if I have that ready to go. I don't.
Oh, no. Not yet. I was just wondering, how do you feel about if you're going for a state by state? Like you said, you want states to maintain their sort of autonomy over this sector. How do you feel about the bit license? Do you feel like that could be something that could be scaled to other states, or?
Yeah, that's not an area of my expertise. Glad to look at that and see. There's going to be a lot of influences. We're going to look at, some of the more advanced states in crypto and say, what have they already done? I don't think we need to invent the wheel there. A lot of time it's about finding really good wheels. If it's bit license, if it's a state that has a regulatory structure, if it's a country that has already done something, if it's Hong Kong or Estonia, we want to look around the world and not reinvent the wheel. Well, this will be, what we put together will be distinctly American and will help our American competitiveness. We don't need to reinvent the wheel. What we do is need to go out there and assemble the best parts of wheels that already exist.
And I'm staying on innovation. I know that you're all for everything sort of being spearheaded in the United States. and there's already so much happening right now. And the pandemic sort of really drove this sustained discussion about how blockchain can be applied not just to improve financial services and financial inclusion, but also to kind of streamline national registries and supply chains and all these kinds of things. So I was wondering, what area of innovation are you watching closely, especially in the context of how it might improve American lives?
I think one, this right here, essentially, I didn't even ask where you're located today. So I'm in Washington, D.C. Yesterday morning, I was in North Carolina. You're someplace else. So I essentially look at this as not just a communication system. We're using some technology. Some people use WebEx. This is Zoom. There's dozens of platforms. Some we probably haven't even heard of that we haven't even used yet. But this is essentially a transportation system. I mean, you didn't have to come to Washington, and I didn't have to go meet you. What a great technology. And essentially, this is a digital platform that we're using right now to be with you eventually in Los Angeles. So this is very exciting. So I look at communication that substitutes for transportation. That's one. I look at transactions, and really what you want to do is, look, it removes the friction. So it de-frictions transportation by substituting communication. How do we take the friction out of transactions? I mean, for years we've used a plastic rectangular card to take friction away because we don't always have the right cash. Cash is messy. COVID, people don't really want to touch other stuff. They're hesitant. There's not always enough hand sanitizer around, and you don't know what to do with cash. And by the way, is the Treasury even making coins now? People ask, they don't have the right change. So, I look at removing friction from transactions, and when you have a distributed ledger, you're not only going to take it out of the financial part, you're going to take friction out of the information gathering part. And people can lock down their own personal records and their histories and all those, whether it's medical or whether it's legal. Somebody wants to go buy a house. I mean, it is reams of paperwork, even if it's done online. And if you apply at one bank versus another for a car loan or a home loan or a consumer loan, why don't you just have, and it's all the same information, it's arranged differently. But if you had all that locked down in a distributed ledger somewhere, you could just unlock it temporarily and then share it and then relock it. I just think there's tremendous ways to take friction out of transactions. And there's just a lot of transactions that are dormant, they're stalled because people don't want the hassle. They've got a million things to do and they can't put up with the friction of everyday life. And so they just don't. They don't start a business. They don't buy that home, move out an apartment into a home. They don't upgrade their car that's safer and more efficient. But if we take that friction out, I think it'll help people's lives improve, and I think it'll grow our economy too.
Absolutely, and it's something that we've been noticing as well when we're reporting in other countries that they're using crypto and blockchain as transfer mechanisms to, get money into the country if you're working abroad. And it's sort of streamlined the sector in such an incredible way. And I mean, it's only forward from here. And I have to ask on that note, what do you feel about DeFi right now and the craze?
Absolutely. So I have, you build a lot of relationships in this business. And so there's traditional financial institutions that I talk about. Then you have DeFi. Of course, you've had fintech has been a term we've been talking about the last 4 or 5 years. Look, I'm pro all this. So I understand. And what you're seeing now is traditional institutions realizing they don't want the world to get away from them. So they're investing in fintech and now DeFi. This is yet one more way to take friction out of the system and to allow the underbanked and unbanked people into the system. So I think if it pushes access and if it moves the bottom rung of a ladder down a little lower so that those who have the toughest time in life can get their foot on that ladder to make their lives a little better, then I'm all for it. I don't think that some of the tools that the more sophisticated individuals and wealthier individuals have access to should be just for them. I don't think you need to force banks to move it down to everybody. I don't think that, but I think technology naturally evolves. You think about 100 years ago, who had a car? It was the wealthiest. And now, who's got a car? Almost everyone that needs one. Who had a television at first? Now almost everyone. Who had a computer? Who had a smartphone at first? But now it moves its way inevitably to become better, faster, and cheaper, and more accessible. And that's one of the things that DeFi does for banking. And I think that's helpful to all involved.
Thank you. And
Sure.
your optimism is great. Oh, it's nice to hear this coming from someone like you, because.
And I'm a Republican, but I'm not angry about it.
I think it's brother. But thank you so much for all your incredible insights. And I feel like you look at this space with optimism and for its potential, not where it's at right now. I mean, there are a lot of problems we need to solve and things we need to iron out before it gets to a place where we can, call it mass adoption. But thank you so much. And is there anything else you'd like to add?
No, what we need to hear is from industry. So make sure that those that are hearing this webcast, and that you actually reach out to our offices and other offices. Reach out to your member of Congress, whoever your member is, wherever you are in the country, and share with them why it's important. Come see us here. Be involved when travel is normalized again, or a Zoom call, whatever it takes. Stay in touch with us, because we don't want to be out of touch with what's actually happening. And you're the front line of this industry. And so we want to be in touch. We want regulators to work with industry so that we do build these guardrails that I've been talking about, but we don't make them blockades. We don't want to make a blockade when we intended to make a guardrail. So stay in touch, keep us informed with what you need and what you don't need. And we're here to be helpful. At least most of us are.
Awesome. Thank you so much once again for your time and joining us today. This has been an incredible little discussion about regulation. Have a wonderful day.
You as well. Thanks so much.
Thanks.
What is blockchain? Blockchain is the technology that powers cryptocurrencies. To put it simply, a blockchain is a distributed ledger that facilitates and tracks all transactions for a given cryptocurrency. eToro.
So you've heard about these two cryptos that are going to explode?
Names. Oh, I'm posting your karaoke video.
You said you deleted it. Okay. There's two. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro, sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
I got 2 words for you, bestie. eToro copy trader. Just find a top investor on eToro and hit copy. From now on, whenever they make a trade, you make the same trade automatically.
Neato!
eToro.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
One donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Fancy donut?
Can I have jam, please?
Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just buy that?
You won't even notice, it's very small.
I wish a new one. You don't have to buy.
That's my commission.
But it's out of my donut.
I was expecting 100% of a donut.
What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way.
Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise...
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. Right there.
eToro, join now.
What are cryptocurrencies? Cryptocurrencies are digital tokens of value that can be transferred to anyone around the world without relying on a third party like a bank or credit card company. eToro. What is blockchain? Blockchain is the technology that powers cryptocurrencies. To put it simply, a blockchain is a distributed ledger that facilitates and tracks all transactions for a given cryptocurrency. eToro.
So you've heard about these two cryptos that are going to explode?
Names.
Oh, I'm posting your karaoke video. You said you deleted it. Okay. There's two. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro, sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
The long-planned upgrade to the Ethereum network is on the horizon, with Phase 0 expected to launch this year. To take us through what we should expect, we bring you Benjamin Prius of CoinGraph with an Ethereum Foundation researcher, Adiya Agaunkar, Piers Ryard, Radix, Monib of Ali Blockstar, and Tim Biko of Consensus.
Hey everyone, and welcome to another LA Blockchain Summit event. This one is called Ethereum 2.0, What to Expect When You're Expecting. My name is BJ Pyrus. I'm one of Cointelegraph's reporters, and I'll be your moderator for the show. As many of you are probably aware, Ethereum is expected to see its blockchain upgraded, which will move the blockchain to proof-of-stake consensus. This significant upgrade has been in the works for quite some time and has seen several delays. It's definitely a big development worth talking about. Today, joining us to talk about it, we have Aditya S. Kangar, a blockchain researcher at the Ethereum Foundation, Monib Ali, co-founder and CEO of decentralized application company Blockstack, and Tim Bako, senior product manager at blockchain software company Consensus. Welcome, guys. Thanks so much for coming on. So,
thanks for having us.
Can you each give just a real brief, as brief as possible, 15 to 20 second intro on yourself? Monib, do you want to start?
Yeah. Hey, everyone. Monib here, co-founder of Blockstack. We bring apps and smart contracts to Bitcoin. So I guess I'm actually the Ethereum outsider here on this panel.
Awesome. Tim?
Hey, everybody. My name is Tim. I've been working on Consensus Protocol Group for the past 2 years. There we developed Ethereum clients, both for Ethereum 1 and Ethereum 2.
Excellent. And Aditya, you want to go?
Hi there. I'm a researcher on the Ethereum Foundation's ETH2 research team. I work on Consensus and Proof of Stake. I've been working on Casper and this ETH2 network upgrade since 2 years.
Excellent. And so, Aditya, do you want to just start us off? I know there's a lot that goes into Ethereum for people who have been following and maybe some people who have not. Like I mentioned, there's just so many different developments coming and there's delays. Can you just briefly summarize the situation and kind of what's going on for people who aren't up to speed?
Yes. So ETH2 is a massive upgrade for the Ethereum blockchain. It brings two major kind of parts. One of them is proof of stake, which brings philosophical differences in how a blockchain is validated. And the second part is massive scalability through sharding, which is splitting the network into multiple parts.
Excellent. Nice and concise. So Tim, question for you. Will Ethereum 2.0 replace the current version of the blockchain, and will there be a new asset while ETH remains in existence, or will ETH 2.0 just have the same asset as we currently have?
So that's the tricky one. So the way Ethereum 2.0 is designed is to launch as a separate chain from Ethereum 2.0 on day one. And so you'll have the Ethereum chain, Ethereum 1.0 as it exists today, that keeps on going on. And like Aditya says, Ethereum 2.0 aims to change a lot of things about Ethereum. So it's being rolled out in phases. So there's phase 0, phase 1, phase 2. And the first one of these phases, which we expect sometime late this year, early next year, is just the proof of stake consensus. So because this was kind of the most complex part of the system, they wanted to roll that one out first and basically have the system just have all the validators run the proof of stake consensus and do nothing else. And so while that happens, we obviously want to keep running applications on Ethereum. And so the Ethereum 1.0 chain will keep going in parallel. In terms of the assets, if you want to become a validator on Ethereum 2.0 and earn a reward for doing so, you need to basically burn your Ether on the Ethereum 1 chain, and then you'll be credited the equivalent amount of Ether on the Ethereum 2 chain. And it's worth noting, I guess, there that this is a one-way mechanism. So what you're saying when you do that burn is you want to be a validator on the Ethereum 2.0 chain all the way until it's fully deployed. So all the way until it can run applications, which is expected to take a couple of years afterwards. So in the meantime, you do have this situation where you have Ether on the Ethereum 1 chain, and you also have this Ether that's been deposited on the Ethereum 2 chain, which originally was the same Ether, but once you deposit it to validate on the Ethereum 2.0 chain, you can't bring it back into the original system. That'll happen, as I said, a couple of years afterwards.
Gotcha, that makes sense. And then Aditya, just more on the logistics side, what are the transactions per second now as Ethereum currently stands, and what will they be for Ethereum 2.0?
Right. So currently, Ethereum 1 processes about 20 transactions per second. With Ethereum 2, we are expected to have 64 shards, and each shard has the throughput of Ethereum 1, which is a 64 times improvement in throughput. So it goes from about 20 transactions per second and gets us about 1,300 transactions per second.
Interesting. Yeah, that's a significant upgrade. So if we want to just dive into the meat of this thing here, based on, I mean, each of you have pretty vast experience. Manib, if you want to start this off, what's so important about Ethereum 2.0 in your opinion?
Yeah, so I think maybe a little bit of background might be relevant here. So my expertise is mostly in distributed systems. So I've done a PhD at Princeton University focusing on distributed systems, scalability, mostly like scaling cloud computing and those kind of systems. So I think what's really important with ETH2 is effectively the scalability limitations on ETH1, which people have known about, right? It's nothing new. Even if you go back to like 2016 or 2015, people were aware of the scalability limitations on ETH1. Like effectively, people remember like CryptoKitties, right? That was a classic example that, CryptoKitties is unable to scale, but you could just do pen and paper calculations on, hey, would an application like CryptoKitties be able to scale? And no, it's not gonna scale. So that's where the origins of the ETH2 system starts, that the idea is that ETH2 is going to replace ETH1 and it's going to be much more scalable. And that's where the two things come in, right? Like the idea of proof of stake and sharding, which I think sharding is actually more important and probably should be discussed a little bit more, because the key scalability improvements are coming more from sharding and not so much from proof of stake. Proof of stake helps as well, but it's not the key thing over there. And I think one of the things that has happened is, for whatever reason, ETH2 has taken a little bit longer. It has given the opportunity for a bunch of like these different protocols, like, there would be at least like 5 other sophisticated teams out there that are kind of like saying, while ETH2 is not shipping, here's a new protocol that has proof of stake or that has like some version of sharding or some other scalability property where you can go. But I think the interesting thing here is that ETH1, at least in my view, might not have worked for decentralized applications, but it did work really well for financial products like DeFi that do not require the kind of scalability that a Twitter-like application might require. So that I think the big question is that how do you enable kind of like really scalable decentralized apps? And ETH2 is kind of like the answer there from the Ethereum community.
And that's interesting that you say just that ETH1 regarding scalability, because I know there's some scalability problems with DeFi right now with high Ethereum fees and stuff like that. So that'll be interesting to see how that kind of changes. And that's kind of my next question. But Tim, do you want to weigh in on what, in your opinion, is so important about ETH 2.0?
Yeah, so I think I'll give a big +1 to everything Manib said. I think he gave a good overview there. And based on just your recent comment or your last comment about DeFi and the recent fee problems, I think the biggest challenge with any blockchain is as the demand for the block space increases, that block space becomes more and more valuable, and the way you charge for that in most cases is fees, right? And the only way to reduce the cost is to increase the supply of block space available on the chain. And there's different ways to do that. So Ethereum 2.0 is taking the approach of sharding computation, which means you basically split instead of having one chain, you have 64 that all run in parallel, and you've created like this fixed increase. But even that is probably not enough, because if we end up in a spot, in a couple of years where Ethereum is more than 64 times as popular, we'll be back here. And I think this is where a lot of the Ethereum 2.0 roadmap is starting to change to accommodate layer 2 solutions. So layer 2 solutions basically run these side chains, or these different types of anchors into the blockchains that have different set of trust properties, which people can use for different types of applications. So for example, if you want to run an application like Twitter and commit some parts of it to your chain, you maybe don't need the same types of guarantees as if you're sending millions of dollars on chains. And so you can create some layer 2 solutions that are more scalable and that work a bit better for that use case. And that's something we're starting to see more and more on Ethereum. So on the Ethereum 1 chain, rollups are now the flavor of scaling that a lot of projects seem to be looking at. And they provide a way for projects to just move a lot of their computation off of the base layer of the blockchains, so they don't have to pay the high fee there's on every transaction, but only when users wish to join the application or leave it. And I think we'll see more and more of that. And the design of Ethereum 2.0, before we have the sharded blockchain, which runs 64 Ethereum chains in parallel, we'll have what's called data chains. So instead of doing computations, this chains just store data. And that's a way where layer 2 solutions can maybe store some of the data that they need a bit cheaper on chain, and also help with the fees there. So I guess to just summarize that, it's important that we don't just rely on sharding the chain as the only way forward, because that's kind of a fixed, increase in throughput by however many shards we have. And if the community and the interest to use Ethereum grows quicker than that, then we haven't made a net progress. Whereas layer 2 solutions tend to provide much more scaling, because for just one transaction per user, more or less, you can get an almost infinite number of transactions on their side chain.
Awesome. Aditya, what do you got?
Yeah, basically everything that the two speakers before me said, but also the problem with ETH1 right now is scalability, of course, and this manifests itself in high gas fees, which means that the more mundane applications on the blockchain are rarely used because it has a high cost to use. So I think that with this holy grail of scalability, we would see lower gas fees, more mundane applications being deployed, and this would lead to kind of Ethereum applications proliferating more of our daily lives.
Excellent. And so each of you kind of touched on this as well. I'm going to dive into decentralized finance next. For listeners who aren't familiar, decentralized finance essentially has ballooned in crypto this year, and it essentially is lending and borrowing on the blockchain and directly interacting with other people and all of the above. So how do you guys each think Ethereum 2.0 will affect DeFi? Tim, do you want to start that off?
Sure. So I think the main concern that DeFi folks had about Ethereum 2.0 was the fact that it would split. That if you split things into shards, a lot of DeFi applications don't necessarily work as well, because what's enabled a lot of DeFi is the fact that you can use DAI, deposit it in another protocol, insure that deposit with yet another protocol, and in order to do that quite quickly or efficiently, you need these smart contracts to be able to talk to each other. So there's a couple of things that have changed in the 2.0 spec to allow that better. So the communications between shards has been made quicker. But at the same time, there's always going to be kind of that delay if things are on different shards to to communicate between each other, and it'll never be as good as having a single shard where you can do a lot of things within a single transaction. And I think this is why, like I mentioned, we're seeing a lot more emphasis being put on having these layer 2 solutions that could run some DeFi apps, and also just reducing the number of shards. So Aditya mentioned at the beginning, there's 64 of them, and the original spec of Ethereum 2.0 had 1,024. So that's another way in which I think the spec has moved towards trying to accommodate those projects and have Ethereum be the platform that makes the most sense for them.
Yeah, that makes sense for sure. Manib, what do you think?
Yeah, I can expand on that a little bit, right? So the concept of sharding, it comes from databases, and there are different types of workloads for which sharding works really well. More specifically, like if you can actually contain most of your logic inside a single shard, right? That's where you get the most benefits out of it, right? So let's say you're just replicating the same type of computations, hundreds or thousands of times over, but the shards are self-contained, right? They don't need to talk to each other that much. Like that's a really good use case to use sharding, right? I think the critics of the sharding, which I actually consider myself one of them, would say that if you look at the workloads on the ETH1 chain or any blockchain, the workloads, the distribution is that it's smart contracts are almost like at randomly talking to each other. So it's very hard to predict what the workload is going to be. So you cannot really fit a certain type of workload inside a shard. And I think that's the thing that Tim was bringing up, that if the smart contracts need to talk to smart contracts which are in other shards, what happens then? Like the extreme case of that would be, like, imagine that there is a shard, I'll give the example of Uniswap, right? Like everyone wants to talk to Uniswap. And if to talk to Uniswap, everyone is communicating to a single shard, then that shard becomes the biggest bottleneck for scalability. And you're kind of like going back to having a single chain, right? So those are type of things that I think still need to be ironed out more. And I'm personally a bigger fan of layer 2 type solutions, or even side chains or chains that connect to another base chain and basically represent like thousands of transactions in a single transaction or a single hash on a base chain, because I think the workloads are such that people want to settle on a single chain and be on the global kind of like same state there.
Yeah, and that kind of just everything you guys have said so far just brings me to the point that like we're really early in this. I mean, we're early in crypto, but we're also really early in DeFi, and it's just interesting hearing you guys test out these kind of theories and like experiment with what might work. And it's just an interesting part of being so early to this party. Aditya, what do you think? How will Ethereum 2.0 affect DeFi?
Yep. So as Tim said, the fundamental assumption in DeFi apps right now is that every contract can talk to every other contract. And that assumption is not going to hold for ETH2. Basically, when you partition the contracts into separate shards, they'll not be able to talk to each other that easily. And this can lead to kind of a fundamental revamp of how DeFi applications work. Maybe we'll see some like self-contained DeFi applications that don't really need to talk to other smart contracts much. So yeah, as you said, it's really early in this space, and it hasn't evolved to a point where it's mature yet. So there's a lot of scope for like developing a different class of applications.
Excellent. And I'll start this next question off with you. I know a lot of traders are probably interested in this question, but I know speculatively, some people will play the speculation, the buy the rumor, sell the news type thing on whenever Ethereum 2.0 launches. How will Ethereum 2.0 affect the value of ETH coins? And I mean, last year, a couple of years ago, I remember seeing an argument that there wasn't essentially like ETH could function with its coin at $0. Like, is there a need for it to be like worth anything in price? I don't know. That's a question I've had, and I figure a lot of people have had that same question. So what are your thoughts on it?
Right. So the first part of that question, I cannot answer because I definitely don't understand crypto markets, or maybe even any markets in general, not so good at that stuff. But your second question, which is, can the network operate at ETH price being 0? The answer is no. And the fundamental reason there is proof of stake operates on the premise that if validators do something bad, if they're trying to attack the system, to their stake, which is in the coin ETH. So ETH price has to be like greater than 0 for the penalties to have any kind of effect in terms of incentive.
Interesting. Tim, do you have anything to weigh in on that?
I'll agree with what Aditya said. I think it's extremely hard to speculate on the value of ETH, and it's a pretty volatile market, so I won't make any predictions there. And you can't have a price of 0, and I think with proof of stake, the security of the network is somewhat tied to the price, kind of like where in the proof of work network it's tied to the hash rate, right? And there are mechanisms that can adapt the network if the hash rate lowers or raises, and proof of stake has similar mechanisms for price, but those definitely break down once you hit 0.
Interesting. Manib, did you have anything different to add, or more the same?
No, I think I absolutely agree. The price can be 0 because it's a fee for computation as well, not just proof of stake part, because you're paying for smart contracts computation, and computation can't be free, right? Like this is actually very scarce type of computation. It's not even like a AWS server that you pay $10 for and can run for a month. Like the blockchain computations are by definition very, very scarce. On proof of stake, I would just share my perspective that, and not proof of stake just for Ethereum, but proof of stake, the concept in general, and there are many blockchains now that use it. It scares me because when people talk about a malicious actor can get slashed, even a honest node can get slashed depending on various types of network conditions or errors. I think Polkadot recently went through it was a week or 2 ago where there was one of their validators, when people know this is not a malicious node, it just went offline for whatever reason and got slashed. And I think people don't expect that, right? Like it's a little bit like there's a mismatch between users' expectations that they're like, I'm just putting money in and I have this return, and they don't understand the risks over there where what if you get slashed not because you were being malicious, but you get slashed because of some network error. You were disconnected from the network for a while, you came back online, or whatever server you're deployed, like bugs happen in data centers all the time. So those are the kind of things that scare me a little bit more about proof of stake. If people understand the risks, then I would still feel better. I would be like, okay, people understand that these are the type of risks that they're entering into. But my fear is that people don't fully understand those risks, right? And they think of proof of stake as this guaranteed, almost like a yield that they're going to get if they just participate.
And I would definitely +1 all of that. I think it's worth highlighting that these things are risky. I kind of like the fact that on Ethereum 2 you kind of can't get your money back unless you're willing to commit for a couple of years as a sort of filter for that. And I know the EF's been working on a UI for the deposit contracts that makes it clear with 7 types of warning throughout that you are locking your funds and you need to validate. And one thing, maybe Aditya can speak to this better than me, but I know the ETH2 spec tries to take into account the fact that most people validating are not, professional DevOps people with 99.99% uptime, and that on net, if you're up, I believe last time I checked the spec, it was something like 2/3 of the time, your reward should be net positive. So you might get slashed some small amounts, if you're online at a bad moment, but that the aim is that for someone who's online more than 2/3, I believe, of the time, they would still have a net reward at the end.
Aditya, did you, I know you.
Yep. So 2 things. One, building on Tim's arguments where, definitely the ETH2 spec kind of won't slash you just because you were offline for a bit. Unless there is an extended period of time that you're disconnected from the network, or you explicitly do something bad, or there's a bug in your software, there is no expectation of being slashed. The other part is ETH2 staking is, at this stage, I would caution our listeners about just participating in it as a retail staker, it definitely takes some amount of technical expertise to understand the client software and how to run it and the best practices for doing so. So I would definitely caution everyone before they enter into this.
Excellent. So we have just about 5 minutes left, and I have two questions that I really want to ask. So one, Aditya, this is kind of just for you here as someone who works on Ethereum. Why has Ethereum 2.0 taken so long to launch and had so many delays?
Yep, great question. So up till about 12 to 18 months ago, the progress was such that at each milestone, we had some substantial incremental research updates. And at each step of the way, it made sense to wait for the research to be finished and incorporate those changes into the new system that would be launched. But about 12 to 18 months ago, we stopped having those kind of milestones where breakthrough research is happening. And from that point on, it became just a race to implementing the software and then launching the mainnet. So right now, we are in a phase where everything is in the hands of the client implementers. The mainnet, the time to mainnet is a factor of how fast the client implementations can be polished.
Excellent. And then 4 minutes left, and this is a really tough question because it's highly debated, but let's see what you guys can do with it. Is proof of stake more centralized than proof of work?
So just really briefly, I'd like to say that it is a philosophical difference between proof of work and proof of stake in how they operate. But I think proof of stake is a little bit more decentralized just for the reason that the operational expense is a little bit lower. And basically, you don't need physical space. You don't need to maintain a server or anything of that sort. So it seems to me that at some point in the future, retail investors or stakers might be able to participate and provide security to the network in returns for staking rewards. So it seems to me that proof of stake is more decentralized. But of course, there's a philosophical difference between how proof of work and proof of stake work.
Awesome. Manib, what do you think?
I think it basically depends on your definition, right? This is one of those topics where the argument is not about which one is more decentralized. The argument is more about how do you define decentralized? And depending on your decentralization, definition, one might be better than the other. I think I'm personally more in the proof of work camp, not because of the decentralization arguments, because pools happen and then certain companies might be more efficient at producing proof of work hardware and so on. I'm more in the camp from a security perspective, that you're destroying electricity and you're burning, all that burning process is there for a good reason. There are bootstrapping problems and other security issues, and obviously I'm biased because we have been working on a almost like a variation of proof of stake that derives its benefits from proof of work, right? So we anchor into the Bitcoin chain, we benefit from the security of proof of work there, but it's a stake-like system where people can earn rewards. So I think it's you're not wrong to say that it would be a very highly debated thing, because if people have different definitions, right, they will come up with different answers.
I really like how you phrase that too, just because I have seen firsthand how just people use different arguments and they are different. They're different theses for their definition of decentralized, decentralized. So that's an awesome comment there. Tim, we got about 1 more minute. Do you have anything to add?
Sure. So I'll make it kind of a point both in favor of proof of stake and proof of work. So I think that one of the nicest things about proof of stake is because it's purely digital, right? There's no economies of scale. So if I run 1 GPU miner in my apartment, I'm much less efficient than somebody running a data center because of the economies of scale. Whereas if I run 32 Ether on proof of stake and Aditya runs 3200 because he's a whale, just kidding. He doesn't start off with a better than me, right? Obviously he'll make more money than me, but he can't stake better than I can. On the other hand, the one thing that proof of work has that proof of stake doesn't is you can verify it offline. You can't fake the proof of work, and that's maybe the topic of another session. But the fact that you can just verify this computation and know just by looking at it that it's the right one is like a really strong property that I think is sometimes underrated.
Excellent. Well, thank you so much, everybody, for coming on. This was awesome. And audience, be sure to tune in for the rest of the panels that we have going. And thanks, everyone.
What are cryptocurrencies? Cryptocurrencies are digital tokens of value that can be transferred to anyone around the world without relying on a third party like a bank or credit card company. eToro.
Our next group of speakers will guide us through which blockchain sectors they are most excited about and betting on. Please welcome Andrew Dix of Crowded Media Group, leading a discussion with Alon Goren of Draper Goren & Home, Adam Draper of Boost VC, Ali Medhavki of Blockchain Founders Fund and Loyal VC, and Heinrich Zettelmeyer of Blockchain Valley Ventures.
Hello, everybody. First of all, I want to thank you for joining us at this late hour tonight at the LA Blockchain Summit. My name is Andrew Dix. I'm the founder of the Crowded Media Group, publisher of Crowdfund Insider. We cover the full stack of fintech, including blockchain and crypto. And I am here tonight with some pretty cool people in the venture crypto space. We have, of course, Alon Goren with Draper Goren Home, the sponsor of this event. We have Ali Medhavji. Did I get that right, Ali?
Yeah, you did.
Founders Fund. Yeah, awesome. We have Heinrich Zettelmeyer with Blockchain Valley Ventures, all the way in Switzerland. So he's up late for us. And then, of course, we have the one and only Adam Draper with the coolest background ever. And you got to love that orange.
That sounds like a challenge.
It's just to make sure people know my name and where I work. So
I thought you were doing that for my benefit. Right. I really appreciate that. And and now Alon I think he just went up to you with the it's raining Bitcoin.
I felt like that was a challenge. I don't know.
All right, next time I'm going to have to step it up, I guess. So we're talking about tonight is what blockchain sectors are investors eyeing. I did a quick search before I hopped on this, and I found a data point that said global VC investment blockchain and crypto space fell a little bit during the first half of the year. I guess it had something to do with this serious cold that's going around that really kind of slowed people down, at least the venture community. I also found another data point that said that investment in blockchain and crypto was up versus year prior. But regardless,
so you can't trust anyone is basically what we're...
You can't. You need this. We need a trustless news source that's immutable. But so we're going to really find out what is really going on in the venture space in regards to blockchain investment, DLT, crypto, digital assets. I don't care what you call it. These guys know what's going on. And I'm going to start with Alon, because Alon, you had a cool announcement today. You had the announcement of fund number 1, the first fund for DJH, which you raised $25 million. Get me right now.
We did the first close. We did the first close. So yeah, that's the intent. We just did the first close. We're really excited about it. It's exciting because we always did stuff as a venture studio, right? Which essentially what means we were like running a company and investing off of the balance sheet and doing all that stuff. And this is the first time we did a proper fund in the sense of like the structure and bringing in outside investors and things like that. And so it's really exciting because now we'll have the ability to double and triple down on our portfolio companies and cool companies we find in the space. So we're really excited about it.
So you're doing a rolling close?
Yes.
So you're gonna, okay. Awesome. So I noticed that the fund's actually going to be based in Austria. Is this because Joseph? Is it because you want to focus on Europe? What's going on here?
Well, it's still based out here, but Joseph spends like a good amount of time, like let's say a third of his time in Austria throughout the year anyway. So we decided to try and like plant a flag in the ground there, have an actual office to meet with companies and kind of do what we do here in LA and spend more time with the startup community.
That's cool. So you see a lot of opportunity right now in the EU.
We see a lot of opportunity everywhere. It's I think it's kind of like why we're here. You know, we're here because we live here and we love it here. And I don't think I would live anywhere else. It's where I was born and raised, and I love it. And so I just want everyone to love where they live and work wherever they are. And we see companies all over the world, and so it has nothing to do really. Well, there are amazing opportunities, right? Like Heinrich is in Blockchain Valley, and there's some cool things going on there, and being there is a cool thing. But you know, if a company, like we just invested in a company in Canada, we just invested in a company out here in Southern California, and like the last 3 or 4 companies, we never even met the people in person. Like, so it doesn't even matter where they are.
You're sure they're real? They're real people? They could be fake people.
They could be, but they would then, I would hope they'd start a like deep fake company if that's the case. They really killed it.
Deep fake crypto, right? Yeah. I like that. All right, so that's really cool. Congratulations, Alon. I think that's awesome. You're doing a great job with your venture firm, and I think that's really cool. Very proud of you. So we've got to talk about DeFi.
Me too, Alon. I'm really proud of you.
Adam.
I'm excited. I'm excited for that. That's awesome.
Yeah, and
awesome. Really quickly, I know there's like a total side note, but I remember I looked up the date for a deck that I did recently, but in 2015, and I have a picture of Adam with my mom because my mom came, but in 2015, Adam was down here in Southern California, and we did a whole thing. Most of the talk was about Bitcoin, and Adam was telling us how it's going to change the world and all this stuff. And the news article that wrote about that day and that story had like 1 sentence about Bitcoin. It was like, Adam also mentioned Bitcoin, this digital currency that's used for illicit activities.
By the way, it was a little far off my trajectory, and it was so worth it. It was a packed crowd. It was fantastic. I remember that was a good group.
It was a good crew. 805 startups.
That was in 15. Jeez, I'm getting older.
That's a long time ago. All right, so back on track here to where you guys are investing today. We have to talk about DeFi because honestly, DeFi has kind of sucked a lot of oxygen out of the room. It's like every day you read about a different DeFi startup. You guys are really close into this. This is not, ICOs kind of like, we went through that whole raver with ICOs. This is actually different. But what are you guys seeing and what are you guys investing in right now in the DeFi space? And we're going to start with Adam because I can read your name again on your wall there.
Perfect. Yeah, Adam. That's my name. Boost, founder and managing director of Boost VC. We were the first crypto fund, I think, ever to focus on Bitcoin related startups, and we've backed about 110 crypto companies at this point. And applications for Boost VC Tribe 15 are going to open tomorrow, so that's something I should probably plug. But other than that, so DeFi is fascinating because I think of it as like it's modern day financial products that people are sandboxing in sort of this crypto environment, right? Like we know how lending works, we know how all these things work. People are creating new products that are on that are in what we call DeFi. So it's being rapidly prototyped by like 100,000 to 1 million people every day. So I think of crypto as, personally, this is my own personal like thesis. It's basically Bitcoin and Ethereum have sort of cleared this trajectory that's basically like mass market. Like we could, those things can go beyond. Everything else is sort of in a rapid prototyping phase still. It's in a sandboxing environment for all financial products globally. And it's so exciting that we have this and so that's that's what I'm excited about. I'm excited about, you know, what we just invested in a company called Pods Finance that is focused on structured financial products in smart contract on the blockchain. So, you know, options trading it's basically trying to translate the real world to the digital. And
I like that. That's cool.
Yeah. And so I'm really excited about DeFi. Like that's one of our investments specifically in the decentralized finance world.
Yeah, so I mean, structured finance is old world finance. It's you know, big, you know, banking work, and so you're looking to automate that with Pods Finance.
Yes, with sort of these smart contracts that can help translate to the digital realm. Knowing basically she came from that world, and she realized that there was just a lot of like bureaucracy that could be wiped away by using smart contracts. And so I'm really excited. It's a company from South America. It's we've done well in South America. We backed another one called Ripple a long time ago that's been doing really, really well. Talking about DeFi, you know, the amazing thing about DeFi is it's global. Like everything is everywhere, just as Alon was saying. Like it doesn't matter if you're a founder in you know, Kuwait or China or Australia. We're all hooked up by this internet. And so that's I think you know, I think DeFi, like crypto and DeFi, I always revert back to sort of crypto and Bitcoin. That's sort of what I could think of the market as. The goal is an open financial infrastructure, right? Like that is the goal. And so anything that onboards us faster to that, which is DeFi, is easily the fastest onboarder, and it's almost like a funnel filler for rapid prototyping and usage to attract new people. It's like buying Google AdWords for crypto, you know, like it's basically like getting people into the ecosystem.
All right. Let's jump over to Ali. DeFi.
I think Adam, you know, brought up some good points. I mean, the way that we sort of look at it is, you know, we see a real evolution with sort of like borrowing, lending, and savings products, right? But it's still early. Like keep that in mind, right? So, you know, a lot of people are talking about how these products can, say, apply to the developing world, unbanked, et cetera. I think it's still early. There's a long way to go before we start tackling real sort of tangible areas of that problem. But we are seeing really interesting use cases of just like being able to connect people that, you know, say have money and people that need money and sort of short-term borrowing, and being able to connect them at this global scale that Adam was talking about, right? We have a company called Definer in our portfolio, and they're actually an early sort of DeFi company, but doing really, really well at a certain early stage in terms of gathering AUM for their borrowing and lending products, right? One of the really interesting companies in our portfolio is a company called Fuse, and what they do is basically create closed economy currencies. And so you can think of like a closed economy currency can be all sorts of things, right? Like a Disney park is essentially a closed economy currency, or a university could have one, or a refugee camp. And so, you know, this is very fascinating. And then there's all sorts of synergies and benefits of having one of these, including like better sort of customer experience. You've got increased velocity of money in sort of these systems. You have some decreased fees, you know, where you'd normally say have Stripe fees, et cetera. You actually decrease this substantially. And so that's a really exciting project to keep an eye on. But I know, Alon, I mean, you've got DMM, and we're, you know, that's obviously been making a lot of strides in the space, and we're excited to be, you know, LPs on the new fund. But I think that's probably one where
if we were going to say that publicly or not. So I was like, thank you.
Too late now. It's out there.
Yeah, I love it. Actually, I think we did include you guys in the press release.
Oh, there we go. I haven't seen it.
Awesome. So you're talking about lending, and the whole concept of state in general and lending blows me away. I think it's really cool, and especially in this hyper low interest rate environment. And you know, I look at the returns you can generate in contrast to traditional, and it's really amazing. And then BlockFi just closed, I think, a $50 million round just a couple weeks ago. which
Wow.
I mean, they I guess they're doing really well. I'm curious, Heinrich, what you think of, what's your point of view from the whole, lending, staking ecosystem that's emerging right now?
Yeah, hi, Andrew. No, first, we're super interested in the sector. So we are actually at the moment doing a lot of analysis in DeFi. We're not yet investing in it. We are analyzing where DeFi will go. Yeah, if it gets more on a bigger volume level, on an institutional level, I'm very convinced about, I'm a big believer in digital assets. I'm a big believer in exactly this lending space, in financial products that are tokenized, that are giving a interest rates to people that are able for people to make money. And we are asking ourselves, who is benefiting from all of that? That, of course, brings you in the area of exchanges. This brings you in the area of financial infrastructure. Now, we are based in Switzerland, so we are very much always thinking, how can we do things in a regulated way? So how is the regulator thinking about
That's a good approach.
that? The same also in the EU. Now, the regulator will see this as financial products, will see many of these things as securities, and therefore it's actually a bit touchy, to invest in this in the right way. And then on top of that, our investor base very clearly is, our investor base is mostly family offices, European family offices, also Asian ones, and Swiss ones. And they are, of course, a little bit more conservative. This is why we didn't invest yet.
So you're getting closer. You're gonna go there. Alon, what about you?
Closer.
Well, there's sort of like going along those lines of regulation, right? Like, if we were extremely conservative, none of us would probably be in this space, right?
What DeFi company is this regulation one that you keep talking about? What DeFi company is that?
so that's where I was going, is like, there's two sides to the spectrum, right? And technology is doing two things. There's the way I think about it and look at it all the time is there's two sides, right? There's this hyper DeFi side, and it's like, we're going to use technology and completely circumvent regulation because, for the most part, let's say, in their opinions, it's not fair, it's not what's best, it is what it is. But they're building amazing companies, not doing anything that should be considered illegal, because the spirit of what they're doing is incredible, right? And then there's the opposite end of the spectrum, which is like companies who are are only complying with regulation first, right? The super security tokens, digital security side of things. And we kind of are trying to make sure we always have a balanced side of balance on both sides of the portfolio. The DeFi side is quicker and dirtier and sexier and way more fun, like, for a lot of things. But then there's the side of security tokens, which it's been like a slow grind, right, moving up to this point. But if you're watching it closely, it feels like you're at an inflection point, right? We just did a deal that we announced today also, where we invested in a company called Symmetria, which is actually building on the Onera network that Onera is doing, a previous portfolio company of ours. And they have they're working on some things where, if you're in those private meetings, there's literally some of the biggest banks in the world participating in digitizing their securities. That's not DeFi at all. It's not even close to what DeFi is doing. But it is it's them going, we're going to comply with regulations, and we're going to use technology to streamline the process so people can actually make it usable. And then over here, it's like, regulation's unusable, we're just going to completely circumvent it. We'll plant our flag in a country that is better than the United States when it comes to regulation. We're just going to get pumped.
And that's one of the things I love about the sector. It's kind of that clash, that ongoing clash of old and new, and they do meet. So Adam, you're big on DeFi, obviously. What about digital securities? What about tokenization? Are you guys investing in any of those firms that are either doing it or handling it?
Yeah, I think DeFi, I think, is what's happening now, right? So if you're crushing it right now, you invested in DeFi 3 years ago, and for early stage stuff, which is what we do mostly. I mean, that's what we do. The things that are coming, I believe, are DWeb and NFTs. So the decentralized web is sort of building the open web, so decentralized media, pre-programmed freedom of speech, pre-programmed like these governing laws that the government actually has, being able to build that into smart contracts is sort of what I believe DWeb is, and that's sort of the promise of what crypto always has been. And then NFTs, I think, are a sneak attack. Like NFTs are these things that we were talking about, this DeFi company regulation, right? And NFTs get to sneak underneath regulation and be in the trading card asset class, right? And so art, collectibles, like it falls underneath that world. And I'm incredibly bullish. I was just showing off before this. I was showing off my Michael Jordan cards that I have next to me. So I have like this, 1990 Michael Jordan. That's not that rare. I got my Kobe rookie up there, but I've been obsessed with collectibles my whole life. I have a huge comic book library that's literally to the right of me, and I have all this stuff. So I innately sort of understand this concept of what non-fungible tokens and the promise of that. We also, so from our portfolio, one of the number one NFTs companies, which is also sort of like a sneak attack on the industry, is Unstoppable Domains. So people don't think about it, but decentralized domain names are actually a piece of sort of that NFT territory. And it's, also building in functionality, which is a part of that DWeb. So Unstoppable Domains sort of treads this line right between the two things that I think are coming. That is one of our portfolio companies. I'm a huge fan of it. And then, so I'm all about NFTs. If I could get like, you want to know what you want to know what I'm obsessed with right now? So I want to find the NFT company that's doing where you open up packs, and the pack, you can actually open it wrong, where it damages the cards forever.
That would be great.
So
how's that great?
That was always the scariest thing when you were younger.
Well, that's the thing is in collectible trading cards, like the value is completely determined on whether or not it's a 10.0, 9.0.
Let's start with a box, though.
Yeah.
If you don't know if you want to open the box, and then if you open the box, do you open the packs? And which packs do you open? You feel them for the weight? Like this one weighs a little more, I swear.
And then the brands sort of deliver you high end to low end. Like when I was 10, I could only buy Tops. And then, this year I finally started upgrading to like Topps Finest. And like I
agree with Adam though.
The diamond one.
So NFTs are a big thing. Ali, are you getting into NFTs?
So we're
Somebody
very bullish.
paid my son for a picture of this week. Somebody paid my son for an NFT of this picture.
Well,
That's crazy.
Your son is a savant, evidently. Like that's an incredible picture.
Poo-poo.eth, everybody. Poo-poo.eth.
So in terms of NFTs, though, we're also very bullish on it. One of our portfolio companies is Splinterlands, which many people I'm sure in the audience know, #1 blockchain game globally. Many sites also rank it as the #1 DApp. And I mean, a lot of the things that they're doing are really exciting, and they got a lot of users. There's pretty strong monetization on the game. And it's building a very rapidly growing community. There's a lot of stickiness. One of our other portfolio companies, which I'm sure our panelists will be sort of familiar with, Pogs, created a digital version of Pogs called Cogs. And they're now the top project on Wax, according to a number of metrics. And so that's also pretty exciting. And so a lot of these sort of things are really coming back into play, and you're seeing actually substantial volumes on these secondary markets as well for NFTs already, and it's a long way to go, I think, before we really sort of crack the full code on this, but I think there's a lot of potential here.
Well, there's a lot of potential because it consumer, and it's that whole learning curve as part of the process, right? Because you're bridging old and new. Yeah, kind of.
Absolutely.
Heinrich,
yeah,
are you in NFTs?
Yes, we are. So we I mean, first I have a background in the esports sector, and sports sector. So I'm very interested in that. We have backed very early on a year ago a company called Exports, because the important thing in NFTs when you apply it to sports is about the rights. You know, you need to have the image rights. So how do you get the image rights of the persons? And we invested first in a company, Exports, that is focusing on niche sports, you know, like Asian fighting sports, because there you can do good rights deals, and they have a very dedicated fan community, and that worked out very well. And now we are backing a company called Blocksport, actually coming out here of Switzerland, and because they focus on esports. Now, I guess we all know esports, and there are over 200 million enthusiasts and 400 million esports fans worldwide, which makes it one of the biggest sports ever. And Blocksports has found a neat way to work with the esports teams, and you have around the top 500 esports teams have captured this 200 million fans and of the famous players. Yeah. And so this is an area that will come much more. It took a while because there were 4 or 5 companies that experimented with this, but now we see it coming, that it crystallizes and becomes business. You know, and we like to invest in that stage, you know, after the initial funding, after the business angel stage, then we normally step in. And so we see that emerging now, but we were watching this for us time to find the companies with the right business model behind.
Awesome.
Yeah, I've loved the NFT space for a long time and talked about collectibles. And when I talked to Ali for the first time, I was too late for Splinterlands. I was at the Boost demo day when Nifty launched. I was a little too late for that. That's why we raised our fund. And now it's all coming together. I mean, I was joking about my son with this picture, but he really sold that. And in 2 days, in a 48-hour period, an 8-year-old made more money selling NFTs than I made in a month delivering auto parts when I was a teenager. Like, that's freaking crazy. And that is crazy. That's just a small, like, he was, you know, on the top 100 on Rarible for like a day. Like, so imagine just there's people making a living off of selling digital art now. It's wild. It's just beginning.
That's amazing. Yeah, you know, Alon, after you told me that the other day, I emailed one of my kids and I'm like, why aren't you doing this? Right? I sent him a couple articles and I think he looked away from Snapchat for about 30 seconds and moved on. But okay, so that's cool. I think that the whole NFT space is interesting. So RegTech. I love regulations. I have a genetic flaw where I try to read through all these things. I see, you know, again, you have this clash of people who don't believe in the need for regulation and the people that see an opportunity to better manage regulation and compliance because that's the way it's been done for a gazillion years. Are any of you guys in that space? Are you looking to use, you know, a blockchain tech to pull the friction out? Because I see a huge opportunity there because you know how old finance operates and they're still carting around boxes. Are any of you guys in that space? You're backing early stage?
I could touch on that, right? So, I mean, there's sort of, obviously, RegTech can be pretty wide, right? Like, I'll give you some examples, right? So we've got a company called NODT. They're actually based in LA. What they do is they track, you know, cryptocurrency transactions for law enforcement and tax authorities, but also work with, say, like, sell the same sort of information to hedge funds to have trading advantages, right? But that would sort of, you know, classify under that as working, you know, in that way that's sort of helping, you know, whether it's central banks or tax authorities, et cetera, to track what's going on. You know, similarly, I think there's quite a lot of other things that probably fall under some forms of regulation in our portfolio, whether it's, you know, companies like Agrio in South America, you know, working with financial institutions to decrease the risk of their lending portfolio. Using things like geospatial mapping, soil moisture, and also there's an entire sort of blockchain layer to that. There's a lot of really exciting things that I think people aren't aware of that are just fascinating.
It's not as sexy as DeFi. Yeah. Go ahead.
Yeah.
Adam.
Well, regulation is like the sexiest moat you can have. So yeah, I'm all about regulation. Like once you get past that bar, it's sort of like the money printing device happens. And so I'm very much involved in. I mean, that at the end of the day, the biggest exchanges who have gotten through that moat, whether it be Coinbase, Gemini, like there is a huge barrier to entry for exchanges because they got through that. So I think in some ways we're all really into reg tech. It just doesn't sound sexy. I personally, so I mean the companies that are coming to mind are like Wire, WYRE. They are a reg tech company, except they are a payments company also. So it's sort of one of these things where you use them to onboard the payments, but really what the companies are using them for, the blockchains are using them for, like all these companies are using for, is they are plugged in, have their money transmitter license. They've dealt with all of the regulatory burden that is for any crypto company. I mean, to be fair, I don't think the regulatory environment needs like blockchain yet. They need like computers, like in that industry. That would be great. So like
the green screen ones, like with a cursor up in the corner.
So I think that we're going from Reg 1.0 to Reg like 1.2, and it's gonna look pretty good. And it's big business. Like I always think my first company was a company called Expert Financial. It was regulated ATS, and like regulators are really they're great. They're great people. They're trying to do what's right. They just want to make sure that no one's greedy and no one steals your cash. Like that's basically what they're trying to do.
Well, regulators want to regulate. I mean, there's a balance there that's hard to meet. So we're running out of time.
Ballers can ball.
Yeah, absolutely. So we're kind of running out of time here, and I have a bunch of other questions I'd like to ask each of you, but we don't have enough time to ask all those questions. So I'd like to kind of go around the circle here, and you each tell me, what are we going to be talking about next year? Because this whole industry tends to be a little bit herd-like at times, where everybody gets excited about something and then it dies down, and then they get excited about something else. And are we going to be talking about the same stuff that we're talking about today 12 months from now? So look at your crystal ball. Ali, you're going to tell me the future so I know what I need to be buying now.
Yeah, it's a good question, right? I think NFTs were sort of mentioned earlier, so I'm going to skip that one. I'm going to say enterprise, I think, is starting to come back, right? It's actually been a space that's actually stagnated from an investment standpoint. You had a lot of hype on it before, a lot of mentions and sort of, earnings calls, things like that. And it sort of dropped off. And we're starting to see some of those successes. It's sort of hard maybe to monetize from the pure crypto, blockchain enthusiast standpoint. But you look at players like HSBC, they've moved $1.2 trillion on their blockchain, right? Like,
right, yeah.
These are just crazy numbers. We've got companies using blockchain and enterprise level in sort of like, ag tech and media and entertainment with BeatDAP. We've got companies doing it across the fintech sector, et cetera. And so we're really excited about the enterprise layer.
Okay, enterprise. That's your answer. We're running out of time. So Heinrich, tell me the one sector I need to be investing in now.
You need to invest, in my opinion, in Series A and Series B rounds of the financial infrastructure coming up in blockchains, the more institutional side, the more enterprise side, because that will scale massively next year. As we will see a lot of going lives of traditional banks using blockchain and other things.
Alon, quickly, one word.
One word. Shit. No, I don't know. The thing is, I hope I don't know, because if I don't know, it means we're doing something new and innovative, because what we're going to do between now and this time next year is hopefully do the stuff that's exciting 2 years, 3 years from now. We have to be early or else we lost, right? So hopefully we're talking about what great bets we made a year ago.
I think it's one of the headlines is going to be Coinbase is a $200 billion company and it's public. And then the second one is going to be for earlier stage, it's going to be decentralized media is going to be a big deal. So
that's cool. That's cool. I like that.
Absolutely.
I like that a lot. All right, everybody, we're out of time. Like I said before, I want to thank the four of you for sitting down with me tonight. I have lots of questions. You guys are all awesome. Thank you very much, Alon, for putting on LA Blockchain Summit. It's fantastic. Everybody have a good night.
Yeah, congrats and thanks for having us.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
One donut stand, 5 hidden cameras, 2 actors, 100% happiness.
Fresh made donuts today.
Or is it?
Fancy donut? Can I have jam, please?
Cream donut, please.
What the hell?
What the fuck?
What just happened?
Oh, hell no.
Did you just buy that?
You won't even notice, it's very small.
Oh, it's a new one. You don't have to buy.
That's my commission.
It's out of my donut. I was expecting 100% of a donut. What the fuck are you doing?
Just how the world works.
Shut the fuck up, I don't want that. That's disgusting. No way.
Take this back.
If I pay for something, I should get the full thing.
We have to take a bit of commission, otherwise...
See, she's walked away.
Don't let commissions bite into your portfolio. Join eToro and invest in 100% stocks with 0% commission.
You've got a little commission. There.
eToro. Join now.
So you've heard about these 2 cryptos that are going to explode?
Names. I'm posting your karaoke video.
You said you deleted it. Okay. There's 2. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro. Sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
I got 2 words for you, bestie. eToro copy trader. Just find a top investor on eToro and hit copy. From now on, whenever they make a trade, you make the same trade automatically.
Neato!
eToro. What are cryptocurrencies? Cryptocurrencies are digital tokens of value that can be transferred to anyone around the world without relying on a third party like a bank or credit card company. eToro. What is blockchain? Blockchain is the technology that powers cryptocurrencies. To put it simply, a blockchain is a distributed ledger that facilitates and tracks all transactions for a given cryptocurrency. eToro. I got 2 words for you, bestie. eToro copy trader. Just find a top investor on eToro and hit copy. From now on, whenever they make a trade, you make the same trade automatically.
Neato!
eToro.
So you've heard about these 2 cryptos that are going to explode?
Names. I'm posting your karaoke video.
You said you deleted it. Okay. There's 2. Here's one.
Tired of missing out? Join eToro and start trading cryptocurrencies in no time. eToro. Sign up for free.
Buying the cryptos?
No, I'm watching you living la vida loca.
Go.
Hey, we're back on, and while he's getting his mic on, we have Brock Pierce here with us. Doesn't really need an introduction, but I'll still give him one. You guys know him, one as a pioneer in the space, Bitcoin Foundation, the first security token ever. So many, digital collectibles at the very beginning, and all the things that you know him for, that we've had conversations in previous versions of this event with him. But now we got something we probably never would have guessed. We would have, said presidential candidate. So Barack, welcome. Thank you for being here. I know you're in the middle of a crazy schedule, so thanks for joining us.
Yeah, well, I'm glad to be here. I've been supporting you for a long time. I think Well, it started when I filled in for Tim Draper.
That's a great story. We got to hit that really quick. So we did our first crowd invest summit ever, which must have been maybe 5 years ago now or something like that. It was a while ago, and Tim was supposed to be the opening keynote. I was going to do like a fireside chat with him or something. And literally the morning of, Tim called me, and Tim's not the type of person to call. Usually would send an email, and he's really fast, but he called me because he's like, I'm so sorry, I'm sick. I can't make it. Who can we get to take my spot? And he started making suggestions, and he's like, I'm gonna text Brock, he'd be awesome. Do you know Brock? You gotta connect. And then Brock came, and we had a great fireside chat. You were talking a lot about crypto, about all this innovative stuff, and most of the people in the audience, including me, didn't know what you were talking about, because it was, you know, we're a very crowdfunding crowd, so it was all fintech and crowdfunding. And the funniest thing was, after the event, Tim started getting emails from random people saying, I was at the event, Tim, you were amazing. And he was sending us these messages. And, you know, if you guys know Tim, he's a big dude, big eyebrows, big hair, you know, like, you know that it's Tim. And Brock, blonde guy, very different looking, right? So like, you see, if they were next to each other, they look so different. So it's just such a funny situation. And we had a lot of fun just in that conversation afterwards. But I remember that conversation turned into it basically, like, you know, I remember then going to Venice and you telling us about this thing called a security token. And you were telling us about how you were going to launch a security token. We're going to pick the regulator, you know, and we're talking about that. And it was so far ahead of its time. So, you know, I can't wait to hear your feelings and what you're going through right now, because it's always, you know, it's always very, very, you know, ahead. And so thank you again for all of your support over the years and being a part of this. I actually, so for everyone watching too, I'm keeping the, most of these chats were in a separate thing, but I'm keeping the chat live on my screen, so I can see if you guys ask questions for Brock, so I can throw some of them his way. But I just, let's start with what's going on right now. I mean, you've been making headlines.
Yeah, well, I'm running for president of the United States of America. And so I guess the first piece of advice I would encourage all of you to have anytime someone tells you they're running for a political office. Well, it's the same thing anytime someone, I guess, is pitching you a business idea. You know, any of the things that we're looking at. My face appears to be frozen. Can you hear me?
I still hear you though.
All right, well, it looks like maybe this is restarting or something. USB connected, now reconnected. Something weird's going on.
For everyone who's watching, I can see in the side that I think I'm still moving. Brock is paused, but
kill this thing and I'll switch to the computer. There we go.
If you'd like, I can still hear you. So
yeah,
try switching.
I'm just switching to the camera on the computer. They had another camera. There we go.
Oh, so, boom! There we go.
I'm technical, so I can troubleshoot problems too.
Wait, a presidential candidate that could also work the computer.
Yeah, I mean, you think in this day and age, considering how big a role technology plays in the world, that this is a skill set that we would want in our leaders. You know, we'd like them to understand what's going on in the world, have their finger on the pulse. I mean, we've got artificial intelligence coming online, robotics, automation, jobs changing, everything's changing. Look at how social networking is affecting our democracy. I mean, it's embarrassing when we watch our tech leaders testify before our government. I mean, the quality of the questions being asked. And then that also affects, you know, the impact and the quality of the regulators and the work that they're doing. And so, I mean, I definitely think we need some visionary leadership that understands technology. But let's take a step back. So I'm running for president of the United States of America. And so the question we should always ask of candidates or anyone with an idea pitching any of these things is why are you doing that? Question why.
So tell us.
I can summarize why I'm running for office in one word. Love. at a time where so many of us feel like our choices are fear and hate, at a time where the United States feels like the divided states. We have to find a path forward to unification. I mean, we're divided right now politically, racially, economically, while at the same time we're facing existential threats, environmentally, technologically, pandemically, issues with foreign nations, China in particular. I mean, it's like, it's scary. Like, I think we're doomed if we don't do something different. The status quo is not working. It feels like we're a frog being boiled, you know, in water that's being, you know, warmed up slowly. And I'm just looking at our freedoms, and I'm looking at our economy, I'm looking at everything. And it's just like, stop. There's something wrong. I feel it. I see it. And I'm stepping up to do something about it. I'm stepping up to like point out issues, to present ideas that are different than those that you're hearing about, actually addressing the stuff that no politician will normally even talk about. And so I think we have to find a way out of this. And I think that there are answers. We have a lot of problems right now, but innovation is the answer to our problems. We have 21st century solutions to our 21st century problems, but I don't see any vision. I don't see any like, here's the goal, here's the destination for our nation, like here's where we gotta go. I don't see that. I mean, the debates the other night were, I mean, they were so deep. I mean, the depth of the policy discussions there, I mean, it was nothing short of enlightening. And the dignity and the respect of the quality of leadership. I mean, it wasn't even presidential. I mean, it was like, it was regal. Like no matter
laughable.
No matter who wins, it's like you just know America's going to win. There was, I mean, the vision for our future, and the confidence and the inspiration that 2030 is going to be okay. Everything's going to be great. Seriously, it's like.
It's offensive though. Like we're laughing, but I'm like, I'm in my background, I'm like a punk rocker, right? I grew up in, I grew up in this world where one, I was exactly 18 years old when 9/11 happened. It was literally like my first semester of being out of the house, right? I went to school and I'm a punk rocker, but half of my friends go to join the military. My other half of my friends go extreme opposite direction, right? And what's crazy is that look at both sides of the political spectrum claiming to be something so different from each other, but the people who are on the Democratic side would have easily been pretty much exactly the same as the Republicans I hated back then. Now the Republicans have gone so far that direction. And then the thing is, there's no gray area, there's no conversations. Like I can't tell a friend that I agree on one subject that somebody says without saying, you know, that I can agree with some other subject somebody says, because I'm a traitor. And it's so weird because, like, I don't know if you grew up, like, I joke that I grew up in a house of Israelis, and I can't, like, if I argue with someone, it's the people I agree with the most. Like, that's how you know I agree with you. I'm arguing with you over something, right? And it's like, you go to the dinner table, you argue about politics, you argue about, you know, all sorts of things, and then you love the person at the end of the night. Right? Like you throw your arm around them, you give them a kiss, and you move on. And the only reason why you're fighting and arguing is because you're passionate and you love each other. And it's like so different now. Like if you even suggest one thing that could, you know, trigger somebody or something, and I don't mean that in the kind of way people are arguing about, you know, snowflake thing nowadays, but like it's just weird that there is no gray area. You can't be like, oh yeah, I'm like, for example, all of the things that it's, you know, most of the social things people are saying, you know, should be done on one side of the aisle, I think are inherently human rights. But I also truly believe that there's not one government official that could actually execute on any of those plans. So like, it's weird. So do you vote for the person who says the right thing, even though you know there's no chance in hell it will ever happen? It's so.
I think the answer is that is exactly what you do. I think we have a major problem in this country, that we don't have compassion and patience for people we disagree with. We should be able to sit down at a table and have a conversation. And at the end of that conversation, we should be able to agree to disagree, but know through that process that we understand the other person's perspective. And through that understanding, we can then find compromise. We can find a path forward. The fact that we are not able to have conversations, we're not even able to have opinions. Like you were saying, if you agree with this one thing, all of a sudden you're a traitor. But no, I'm trying to talk about an issue. And I think that maybe, because neither side is all right or all wrong, right? They're both wrong and they're both right.
Well, especially in this polarizing, crazy media world that we're in, like you have to go extreme, like it's, and what people say and what they do are so extremely different too, like we live in a great state, or I live in a great state. I don't know where you are full time anymore, because you're all over the place, but like I live in California. I love California, but two of our greatest cities, LA and San Francisco, have like the worst homeless problems that they've ever had. And the politicians running both places have said nothing but the right thing in terms of, we're going to fight to end this. We're going to do everything we can to stop this, but it's only gotten worse, so like it's really, really hard.
Albert Einstein is credited with this line that, the definition of insanity is doing the same thing over and over and over again, expecting a different result. That's what it feels like. Left, right, left, right, left, right. But it feels like we're just going in circles. It actually feels more like we're in a downward spiral. And so it's time that we wake up to the reality that we need to vote our conscience. Don't buy into this lesser of two evil stuff. That's what they keep telling you every election. Oh, this one's really important. So, you got to do this. And next time we can do what we think is right. We can do what we believe is right. We can vote for candidates we believe are right. No. We need to do what we believe in our hearts is the right thing to do. It matters more when it comes to the system of governance than anything else. This is the system that governs over us, that was meant to be there in service to us. We don't allow our family members to operate without integrity, to lie, cheat, steal, these things we require that in our family, that we require that with our friends. We even require that with most of our colleagues, at least the people we do business with over the long run. So why in the world would we allow that type of behavior to exist in the system that governs over us? It's because
politics.
But that's the problem, is it's not just politics. It is the system of governance that governs over us. We cannot continue to allow this to happen. What they do is, it's the left and right wing of the same bird. And they keep tricking us into believing we only have two choices, which is a lie. It is an illusion. 43% of eligible voters are not voting. 38% of registered voters will be registered as independents by 2024. 70% of Democrats and Republicans are unhappy with their party. They are the minority. We are the silent majority that have been tricked into not voting our conscience and not doing what we know to be right. The path forward is in the middle. It's where's that common sense where both parties can have some right and some wrong? Where is that moderate section in the middle? Common sense, sensible thinking. We're there. We are the majority. And the moment that we realize that we have all of the power, we can change it all. The future is going to happen to you, or it's going to happen with you. So let's get involved and create a future that we all want to live in. And so I'm 39 years old. I turn 40 next month in November. So this is the beginning. I'm laying the foundation for the future. And this is not about me. This is about creating a political movement, an uprising, a revolution of sorts, to create a government of, for, and by the people, where we get candidates into office who are there to directly represent the constituents that elected them, free from the control of political parties. On November 4th, I am looking for 100 candidates, to run up and down the ticket in 2022. 100 candidates, preferably that are not career politicians, doctors, teachers, business people, entrepreneurs, artists, athletes, scientists, engineers, whatever. People that are prepared to serve. A government of, for, and by the people. We need some diversity. And so I'm building the infrastructure, not only for my presidential run, but for you. So I invite you, I encourage you to ask yourself, are you ready to stand up and to do something? Our future depends on it. The fate not only of this nation, but the fate of humanity will be determined by the decisions we make over the course of this next decade. This is the ultimate sacrifice. I am stepping into the ring of fire, prepared to lose everything I have, to give up everything I've earned, potentially even my life, because that is what is at stake right now. I am a father of 2 young girls. What kind of world are we going to leave behind for the generation that follows us? Will it be a world that they can survive in? Will there even be a world left for them? And if we do our job correctly, it could be a world they thrive in. And now is the time. It is the 11th hour. It's time for us to get involved, and it starts with registering to vote, voting your conscience. I don't care who you vote for, but vote, and vote for what you believe to be right. Do not allow fear to make the decisions for you. That is the tool of the parties to prevent you from doing what you are supposed to do.
So I'm 1000% believe everyone should vote, and I want everyone to vote, and I want everyone to be able to say that they exercise the right to vote, because you can't, it's hard to really justify complaining about something you refuse to participate in. So there's that, right? But I also feel like it's the entrepreneur in me, maybe it's what drove me to crypto and startups and all that stuff, right? Like there is the feeling of like, why participate in this broken thing? Why not burn it to the ground and start over? Why not skip this? Let's leapfrog this, go straight to digital jurisdictions. Let's go no borders, no nations, screw it all. Let's just start fresh. You know, and you know, knowing your background, you are crazy enough probably to go that route too. So I would love to hear your feelings of, you know, why get into the mix of this already broken system versus like, let's come up with something totally brand new.
So there's 2 ways to go. The path that you just described is going to be full of chaos, and it's going to involve the loss of a lot of lives. And I don't know how that's going to go. The alternative is that, yes, the system is broken, but it's not all bad. Let's take it over. Let's begin to fix it, and let's upgrade it. Let's upgrade the operating system of the United States of America. Let's create America 2.0, incorporating the ideas that you're talking about. That is an evolutionary event. This is the path that is ideal, which is why I'm doing this. I promise you, burning it all to the ground is not going to be a pretty picture. Taking over the system and thoughtfully fixing it and making the necessary changes to upgrade it, I think, is the far better route. But, you know, I'm biased, obviously, as someone running for office and involved in this. But as someone that's been on the forefront of these things and has thought deeply, you know, about this path, you know, I understand it from both perspectives, because I am that disruptor. I am the one that's been shaking up the status quo for a long time. But now that we've shaken things up, it's time to land it, you know? And so I'll just tell you a little bit about some of the experience, because there's less than 30 days left in the election. I can tell you the system is completely rigged. As you know, I think we all know this.
Yeah.
But it's very different to hear it from someone that can literally describe like the stuff. I mean, it's wild. But you know, it's a rigged game. But you can't rig a system well enough to prevent me from finding a way to beat it.
I mean, that's what, if we're going to learn anything from startups and entrepreneurship, it's you know, there's a way to game every system. There's a cheat code somewhere. There's a hacker somewhere that's going to be able to do something, right? So going back to your software analogy, there's no such thing as launching a piece of software with 0 bugs. That's just never happens, right? So you find that and shake it up and you know, change things up a little bit. And I think that's super important. I mean, so everything you talk about is very realistic and serious. And you came at this very professionally, right? Like this isn't like a BS Kanye posting on Twitter, I'm running for president kind of thing. You had campaign videos and policies and all of these very professional laid out plans and ideas, not, again, trying to separate you from the goofballs who say I'm running for president because they want it. But I'm 100% sure, and I saw some of it, you know, third party, that you weren't treated seriously, right? Like, can you give us some stories of you know, that's the first step in the you know, rigged system, right? Like the fact that it's laughable, or laughed at, not laughable, but it's laughed at when any third party candidate tries to be taken seriously.
Yeah, I mean, that's what the media does, is they don't want to give you any attention, and then their goal is to discredit you to a large extent, right? You know, especially as the world or the country becomes more and more polarized, you know, the rigging and the restrictions of giving you airtime, you know, disappears. Meaning that, you know, right now candidates to run for president will spend $1 to $2 billion on the election, but if you are not getting any media or airtime to be comparable to them, that means an independent candidate would have to spend $2 to $10 billion.
I mean, that's the first crazy, insane hurdle, right? Like we know from internet marketing, right, that people are drawn toward the familiar more than the you know, something that's brand new. And so knowing somebody's face, knowing the name of a person, just being able to pay for marketing over and over and over again, even if you disagree with someone, you're more likely to pick them over somebody you don't know. So that, in one, you know, is the first obvious hurdle, right?
Well, the debates. I mean, the debates are probably the most important thing for, you know, a candidate to have any chance at winning, right? The debates, the commission is controlled by the Democrats and Republicans. Literally, the two parties choose every person that goes on it, and they base it upon the polls. And so the polls are commissioned, you know, by them. Yeah. And they specifically, when the polls that like run these programs call you, for example, they say, who are you going to vote for? And if you said Brock Pierce, they'd say, well, that's not a choice. He's not part of the questions. It's you're either picking the Democrat or the Republican. And you're like, well, I'm voting for Brock Pierce. They say, oh, we're going to mark you down as undecided. So it's so rigged that when the polls are conducted, they don't even include the other candidates. So you need to get 15% of the poll to be included in the debates. But how can you get 15% of the polls if your name is not even included in the polls? Like, it's just layer on layer on layer of a system that has been entirely rigged. The last person to get into the debates was Ross Perot. The debates were run in 1992, which was the year, by the Women's League of Voters. As soon as Ross Perot got on that stage, they stripped away the rights of the women and gave it to a Democrat and a Republican to control so that it could never happen again. Basically, anytime something disruptive happens, they patch the hole up and they make sure that it's sealed. Here's another one, and I don't really want to criticize, I try not to be negative, but this is part of the story, is just to show you some of this stuff. But Los Angeles, I set up a campaign headquarters there, and then they reinstituted the lockdown, and they decided that in the city of Los Angeles, that campaigning is not considered an essential business. And so they outlawed democracy in the city of Los Angeles during an election year, which what that does is it ensures all the incumbents get reelected. It's a really powerful thing to stop anyone from winning that is not already in office. In New York, so to get on the ballot in New York, you need 15,000 signatures or petitions. Mm-hmm. And so in the heart of COVID, as New York was getting hit harder than anywhere in the world in April, you'd think that they'd consider electronic signatures because you can't collect signatures. Maybe they'd lower the bar, or maybe you're just so busy you do nothing. What did they do? They increased the number to 45,000 to wipe out any candidate from being able to get on the ballot in New York. And then third parties, if they meet the requirements in the past elections, have the right to nominate you. And to make sure that none of the third parties would nominate anyone on the ballot in New York, the governor changed the rules there as well and said that if you nominate a presidential candidate in New York and that candidate doesn't get at least 2% of the vote, the party is forever disbanded.
So they just basically went like, we're going to lose our party if we make a bet on some up and coming person that we're not sure about.
And they made it that that made everyone scared. I got endorsed. I am nominated by the Independence Party of New York. They call me Neo. They're like, you're the one we've been waiting for. You could actually, every decade, there's been one candidate that actually had the charisma, the skills, the this, the that. And Ross Perot was the one of the 90s. And the last two candidates were Bloomberg and Trump. They were running as independents, and then the parties convinced them to run under the party banner. And they're like, you're what we got for this decade. And so they had the faith to nominate me. And the good news is I'm polling 4 to 5% in New York right now. So the minimum threshold of 130,000 votes are looking very good.
I think it's planting the seeds of actual democracy, right? Like that's the thing that has always driven me nuts, because I've like I said, I was a punk rocker growing up, and when I was younger, I liked the idea of burning things down and all that stuff, but you don't understand the magnitude of what actual violence means and is when you're a teenager. And then you grow up, and growing up shouldn't mean indoctrinating yourself into the system. Growing up should mean growing up and understanding things more, and maybe finding more peaceful ways of changing things, or maybe more elegant ways of doing things, or maybe if you're talking to an Israeli, bring that analogy up, other ways of doing things, and I always joke that every time you talk to an Israeli, you go, no, I'll take care of this video, go like this, right? So I love that, because like you said before, politics aside, the more people vote and the more people plant those seeds of independence, the less people hopefully feel like they have to pick one. I don't even think they're polar extremes. I think they make us think that they're polar extremes, but one side or another. There's not just two sides. There are more opportunities.
I would make an argument that we only have one party.
Yeah, you very well can. And like I was joking before, I wasn't joking. I had a shirt when I was 19 years old. I had the Not My President shirt that had George Bush's face on it, right? I don't see much of a difference between any of the parties and who he was and what he represented, right? And at least being in the crypto space, I'll start looking at the banks and those groups. And the banks, I think, control more than any individual politician or any individual party, right? Because they pay for them to be there. Those crazy rules and laws that allow corporate interests to pay for elections essentially are creating this system. So we've got like a minute left, and I've probably talked too much. I'd like to hear what you have to say, but closing remarks and planting the seeds of change, right? That's how I would almost summarize what you've been saying, right? Give us a close. You could go a little long because this is the last session of the day.
Yeah, well, as someone that is involved in studying systems and system design, I think we really have to take a step back and ask, what are we incentivizing? What is our goal in the United States? And I think a big part of our problem, and I don't want to blame any individual, is that we don't have a goal. We don't have a unified goal, a shared vision for our collective future. So how did we measure our success in the past? How have we historically measured and held our government to account? It's been by growth. The problem with growth is it is assumed that we had infinite resources. You know, if you didn't like what was going on, you moved west, you moved west, you moved west, till all the land has been consumed. And now that we can't keep just moving, you know, and we're keep trying to grow, even though we've known for a while we don't have all those resources, it's creating lots of conflict. And so it's a big driver for conflict, because our measurement of success, our mindset of success is just growth. I want more. The other problem with growth is it doesn't differentiate or distinguish between positive and negative. Like, getting the American people sick creates growth. Cancer creates growth. Locking people in prison creates growth. Forest fires in California create growth. Hurricanes create growth. All this stuff creates growth. But is that the kind of growth that we want? So I think we need to rethink how we measure our success and what we incentivize. The founders of this nation had a really incredible intention, which was life, liberty, and the pursuit of happiness. What if we started to measure our success by life? Did you know that life expectancy in the United States is in decline? What if we started to measure our success by life expectancy? You'd see different policy. You'd see a big impact in the private sector. The air, the water, the earth would get cleaner. We would get healthier, because that's how we would measure and hold our government to account. Liberty. We're supposed to be the land of the free. But our privacy and our freedoms are under threat. We lock up more people in prison than anywhere in the world. It would be the end of victimless crimes. It would end the war on drugs. You know, all these sorts of things would happen if we started to measure our success by our freedom. And lastly, happiness. There are countries already around the world doing that. So I think we need to rethink the incentives, rethink how we measure our success, and how we hold our government to account. This is one of the many things I talk about. If you'd like to learn more, you can find out more at brock.vote. I'm on all the social media. I was in Puerto Rico this morning. I was in Taos this afternoon. I'm in Santa Fe, New Mexico right now. I'll be in Colorado tomorrow night if you're around. I'm traveling with Brittany Kaiser, who many of you know is my campaign manager, Carla Ballard, I think some of you might know, who's my vice presidential running mate, and of course, Akon, who is my chief strategist. That is the face of the campaign. I'll be in the next few days in Utah, Idaho, Wyoming. Oh, come join us for the Independent National Convention, the INC, in Wyoming.
When
October
is that,
23rd.
so we can share it with everyone?
Yeah, October 23rd and 24th. It will be bigger than the DNC and the RNC combined in its first year. This is, you know, we're thinking big, we're thinking game changing. And again, I'd like to remind you, if you feel like getting involved and you want to be a part of this movement, please join us. Oh, and it's worth noting that there is a possibility I could be president next year. The way it works is I don't have to win the election to become president. This shocks a lot of people. They're like, what? And I'm talking the top political experts, because they're always like, Brock, why are you doing this? I explain the why. They're like, I love it. This is actually kind of what the country needs. But why now? What can you possibly accomplish in this short period of time? I go, well, did you know I don't have to win to be president? They're like, what? How does that work? I go, well, to win, you need to win a majority of the Electoral College vote. The key word being majority, 270 Electoral College votes or more. If the two major party candidates were to tie, it would be 269 to 269. This is what happened in the year 1800, Thomas Jefferson versus Aaron Burr. Or if a third party candidate such as myself were to win one state, or even to bring faith to the faithless and win electors. And if it were a close enough race, it's possible that no one wins. So what happens if no one wins the election? The top three candidates are given to the House of Representatives, and not the Democratic House, but the House chooses the president. Each state gets one vote, along with the District of Columbia. Whoever gets 26 votes first wins. If it were a split vote, where the Republicans don't have enough to get the incumbent in again, and the Democrats don't have enough to get the Democrat in, we may find ourselves in a gridlock. In January, Nancy Pelosi would become the interim or acting president. You know, it could get very interesting, and it's conceivable that a compromise could be reached for that third place candidate that is representing unity and love at a time where this nation is divided. And so when I explain this to the top people, they're like, who are you? How did you figure this out? They're like, Brock, it's not likely, but you actually just showed a path that's possible. You literally just showed me a path that's possible. You could end up being president. It's not likely, but it's possible. This is crazy. How did you figure this out? I'm like, I'm that guy. I'm the guy, if anyone ever was going to pull off the greatest hack, it would be someone like me.
That's right. So I think that's a great note to end on. I mean, all that was going through my head at the very end was that one, was it Dumb and Dumber, that stupid movie? So you're saying there's still a chance?
Yeah.
But really, that's the whole thing, is you have to plant seeds. And let's tie that back to the whole rest of the conference. This is the last session of the day. I want to thank everybody for coming. You, of course, Brock, for being here. You opened up our first show. This is the end of the first day of this show, and that was done on purpose. And this is an exciting time. We had thousands of people who not just joined us in the system today, but we streamed this live in a bunch of different places. It was streamed on Twitter, on Facebook, on Theta, on a bunch of our media partners, because we said, if this is going to be free, let's have it everywhere. And we know that tens of thousands of people saw the stream today, unique individuals. We're planting seeds for the future here too. And we're really, really excited in what's going on. So thank you so much, Brock. Thank you everyone who's listening. We'll be back on bright and early tomorrow. Expect some recap emails from us and all the spam and all the fun stuff we're gonna send your way. And we'll share some of those details of what Brock was just talking about with the convention and everything else. Representing is super important, and participating is super important. Otherwise, we really don't have much, leg to stand on if complaining. So let's all change the world. Thank you for joining us, Brock. And New Mexico, I've got some stories about being a young punk in New Mexico, spreading democracy, actually. I'm glad I didn't know you were there. We would have gone a whole different tangent. We're gonna have to do that next time. All right, guys, thank you so much.
What is blockchain? Blockchain is the technology that powers cryptocurrencies. To put it simply, a blockchain is a distributed ledger that facilitates and tracks all transactions for a given cryptocurrency. eToro.
Thank you all so much for joining day one of LA Blockchain Summit. We hope you're enjoying your time here so far, and we look forward to seeing you back here again tomorrow. Expect another jam-packed day of incredible content, followed by 2 new tracks, the Digital Securities track and Research and Innovation track. In the meantime, be sure to continue networking Umbrella and leverage all those virtual handshakes to do something meaningful. Oh, and if you end up building something, be sure to let Draper Gorin and Home know. My name is Shira Rubinoff, and it was a pleasure guiding you throughout the day on day one. See you tomorrow morning, bright and early, at 8:30 a.m. Pacific Standard Time. Thank you.
go on.